didn't perform as well as last year. So, yeah. By the way, Mayo on the call, on the JPM call.
Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com.
Ask Steinman, can't be Treasury Secretary. You don't play golf. Will you stay around maybe a few more years?
CPI is out.
Right now?
Futures
And
popped.
Steinman's answer is yes. Base case. Base case. Yeah, I think I know the bid ask there is probably like 4 to 5 years. I mean, he's been in that job over 20
So we got the Fed officials starting to speak today. I think Barkin's up next. They just can't shut up. Unbelievable. They just got to keep yapping. That's what Nouriel Roubini said the other day. The Fed just needs to shut up. I mean, once the Fed chair, when Jay Powell speaks, you know what the deal is. Why do you have to talk constantly? 4 or 5 people a day saying the same shit over and over again. It just pisses me off. They just keep doing this. Not that they care, but I'm venting just so you can hear my opinion. so we got Feds today. Always got to rain on our parade. Okay. So we're gonna get Barkin shortly. Okay. It just reminds me of somebody close to me. It's just so funny. You know, somebody tells you something once, you think you'd be intelligent enough to remember, right? Especially whatever. And, you know, you get into an argument. The first 5 minutes go by, same comment. It's like, I got you the first time. Same thing with the Fed. I got it when Jay Powell mentioned it. All right. Jay Powell had his meeting. He told us all about it. You don't need to keep repeating. What is Vinny talking about? These Fed officials, they just can't keep their trap shut. They just got to keep talking. Just irritates me to no end. Okay, futures had a nice pop this morning. So trying to hold on to some gains. Currently, we're trading at 59.63. We're up, 42 handles? No. What are we up? Where's my ES chart? Where did it go? We're up 80 handles. That's a big difference. Oh, shit. I know I'm cursing a lot today. For those of you with sensitive ears.
When it comes to the California wildfires, the National Weather Service forecasting a quote particularly
Nice trade there, RT.
for swaths of Los Angeles and Ventura counties. Our Contessa Brewer once again in Pasadena this morning with the latest. Hi, Contessa.
Hi there, Carl. And yeah, the action here at the staging center at the Rose Bowl.
The New York Fang components are still
The action is really picking up now. They're getting ready
at highs for the most part.
To go back out into the field and to make sure that the hot spots are out, to be on alert because of those winds and the potential for other fires. They're still most concerned here with safety is residents start to be able to be allowed to go back in. They're looking at dangling wires, dangerous debris, and they really are focused on these residents wanting to return to assess the damage. So there are new staging areas as well for those people who have been affected for the disaster. There's disaster recovery centers and insurers setting up shop to walk customers through the claims at this point. State Farm just gave
okay, what? We got 8 minutes to go. 8 minutes to go.
700 home and auto claims. And Morningstar out with a note this morning warning that California absolutely needs to allow risk-based pricing in the near term. That means that they have to let those rates reflect what the real risk is. Otherwise, insurers will continue to flee this market. In fact, he writes, this means that premiums are likely to increase, affordability issues will continue, potentially affecting property value.
Rigetti still moving higher, Rigetti.
Without insurance.
Morning, Frank.
Of course, factor into some decisions about whether people are going to rebuild at all. Governor Newsom did issue an order forbidding unsolicited lowball offers for property in some parts of Los Angeles for the next 3 months. And just a little piece of good news I was talking about on Squawk Box, schools and where you send kids. We just learned that some Palisades school kids displaced by the fire can return to class today. They have been assigned to different schools in nearby Brentwood. These are all factors, guys, that, go into, can we return? What does it look like if we decide to go back and live in the neighborhood again, if our house is standing? And if we can't live in that neighborhood, do we have to relocate for how long? And is that a permanent relocation?
The underinsurance crisis is terribly acute right now. Contessa, I thought you'd find this interesting. JP Morgan looked yesterday at homeowners in Pacific.
Oh, boy.
So aggressively, the asset side of bank balance sheets is now finally having time.
Wells Fargo was looking pretty good earlier. What's Wells Fargo doing right now? Wells Fargo reporting. Okay, that looks pretty good. Wells Fargo, big gap up on Wells Fargo. JP Morgan was up and faded. It's still up on the day, but faded from its highs up at 257. Okay, Rigetti is still going, though. I got to watch Rigetti because I have a pretty decent sized position in Rigetti. My average was right around $10 on the way up. I added on the dip and, made a couple of bucks yesterday. So I'd like to see Rigetti get back up to at least 14 or so. That'd be kind of nice. Presently, Rigetti's trading at right below $11. Okay, so industrials looking good. Yeah, I like the industrials. Let's take a look at industrials. Okay, here's Fannie Mae. Fannie Mae. Industrials have been showing strength. Industrials. That looks good. Okay, industrial. So we have more stocks. Let me just jump back here for 1 second. We got more stocks being bought than sold as the advanced decline percent moves higher on the S&P, mid caps, small caps, and Nasdaq in descending order. S&P big caps in the top panel. So you would expect to see industrials, financials. You see those sectors that haven't been performing turn. I have a position in SPY V. Okay, I'm back to even. I bought over here a couple of weeks ago, right around 61, right around 61. So I'm looking for this to bounce. So more of these sectors. Financials will do good today, most likely. Okay, materials have been looking good lately. So if you have stocks in any of these sectors, we have a nice reversal underway, and most likely we'll see more upside, unless something changes, like the 10-year yield. Unless the 10-year decides to rip higher. The 10-year is reversing. 10-year, big reversal. Okay, 10-year yields, big reversal day. Okay, so materials, communications, that would be Meta, Google, etc. Meta's up huge this morning. Meta's going. Okay, Google looks good. XLC, communications sector. Energy, of course, has been doing very well. Most likely will continue above the 50 and 200 day. Okay, that's accelerating. We've got 2 minutes to go. 2 minutes to go. Okay, 2 minutes to go. Getting ready for the opening bell. All right, so first 15 minutes, you know what I'm doing. I'm taking profits off the table, reassessing the markets after 950. 945, 950, looking for stocks with high relative volume. Most everything will be having high relative volume today. XLB, XLF, XL. Okay, XLP, XLP, XLP. Material, consumer staples. Okay, we need to see that turn. Healthcare, many healthcare stocks turned yesterday. Buyers at the low of the day. We are trending up and to the right. So healthcare has some decent probabilities as well. I favor industrials and also infrastructure stocks. I was watching some podcasts this morning talking about infrastructure. Larry Fink was on talking about infrastructure stocks. GEO. Is that the GEO? That's not the penitentiary company, right? Okay, we're open. Let's make sure we take some profits off the table. Let me get rid of this. SPY. But I think that what's really going on, David, is the regime of what we can do for ourselves versus what happens if you can't kick obesity. What happens if you can't kick diabetes? You can't. And I think that it's a second line defense. Okay, I'm selling some SPY calls into strength. Okay, Rigetti looks good. Rigetti continuation. What's Trump Media doing? Trump Media. Tesla doing well. Tesla's up there. Apple turning back up. Okay, Apple Apple turning back up. Apple, nice dip buys yesterday and 10 to the lows. Microsoft starting to bounce as well. Apple looking good.
We've gotten some numbers about real wages for December, and they were soft. And I
Okay,
think
selling some Apple into the strength. I'll reassess if it keeps going. I'll do a day trade or two probably. All I'm doing right now is taking profits off the table where it makes sense to do so. Okay, if you're up 50%, 100% overnight, you definitely want to take something off on this pop. Thanks to a inline CPI, basically 0.1% below the estimate, so that helped out. Constellation Energy, all right, that one I sold some put credit spreads. Constellation is higher. Okay, we're looking for that move to be upward. I mean, the catalysts are just stacking up left and right. Energy for AI. Rigetti, looking good.
As well as a corporate spending bounce, whether that's about restocking or trying to get in front of tariffs, they think those two things make this season potentially powerful.
Constellation, I posted that in the spreads channel yesterday. Constellation, I believe, right? Did I do that? Yeah, I did. Okay, so March, I had the March 250, 240 put credit spread for $218 per contract credit. There goes Rigetti. Rigetti is ripping.
In the face of what turned out to be very, very good numbers, $11 trillion man. Great interview this morning with Andrew. I think that's another place to look because the stock is well down from where it was. David, you said something earlier about what they will say, what the CEOs will say.
Yes.
I'm friends with a lot of CEOs who are they're hardcore Democrats. They don't like to talk about it, but they're hardcore. And I don't hear them talk much about anything other than the fact that, my clients are feeling good. And I know them, and I know them from many different circles. And it's
cut again in the first half.
Well, if the emphasis is
okay, Trump Media. Nice move on Trump Media.
a new part of the dialogue that I haven't heard in a long time.
Okay, let's see.
Yeah, well, that certainly may be reflected to some extent in the level of business activity. We'll see. As people feel good, they do things. You know me, keen sense for the obvious.
Like that.
Yeah.
That's good. Well, it's got to be more than service titan. I mean,
I know.
Why can't spread come public?
By the way, speaking of, I know you're.
Okay, tick cumulative is turning, so that's telling you look for a follow through. What's Apache doing? Apache 20-50 day cross yesterday. Apache up again today.
Particularly in areas called Beacon. So,
all right, Trump Media, nice move on Trump Media. DJT, Donald J. Trump. Okay. What's Fannie Mae doing? Fannie Mae bought some shares yesterday on Susie's comment mention. Fannie Mae bought some yesterday, right in this area here where she mentioned it. So it's up today, $1. Looking for a follow through. Pershing Square doing a good job. If you look at Fannie Mae, FNMA, you can see where they were buying. Okay, it's pretty obvious where when they realized that Trump was going to be in office, they started buying hand over fist. That's about what? 300 million shares trading hands in the first couple of weeks. And then we had another ad here off the 50-day. Boom, there it goes. So these shareholders that have been sitting in shares since 2007 when it went into receivership most likely will be very happy. And I believe Pershing has the right idea. This one's going here. Sorry, I didn't show you the right chart. So that's right in here, right after the election, Super Tuesday. This started going and hasn't looked back. So this is probably going to be, I would think it'd be a double by end of next year, if not sooner. End of this year, I should say.
in the coming couple of months.
Okay, Apple pushing a bit higher. Okay, so just taking profits off into strength. Okay, Rigetti.
No, but Beacon Roofing is a really, really good company.
Rigetti looking good.
Dickinson, no matter what. Housing
Fannie
crisis,
Mae.
housing shortage, too many
Okay,
homes. They've always
Rigetti,
been a winner.
RGTI,
Brad
RGTI.
Jacobs, very, very smart guy. He built a great trucking company and then pretty much broke it off, created a lot of value. But what does it say about Lowe's Corp? What does it say about Home Depot? What does it say about the companies like Floor and Decor, Builders First? These companies may be undervalued. They're selling at very low multiples. Carl, there's a lot of. This is an example. Beacon Roofing is
Fannie Mae looks good. Okay, Constellation Energy.
The economy's going to accelerate. Wow.
Well, there it is. QXO. They also said they might be willing to go to
Williams Companies. I'm looking at that one. Williams Gas,
No, it's very exciting.
natural gas.
Have you ever seen a roofing bill? Matt, you get the roofing bill. Oh my God. Oh, you live in an apartment building. Never mind. You've never
Crazy.
seen a roofing bill.
Cedar tiles. Oof.
You've read about it, right? You've read about how regular normal people live, David.
I've heard about it. I have
Yeah.
heard about it. No, I put a roof on. I know. Not
On what?
myself. Obviously, I wasn't up there myself.
Okay,
but I get
Nvidia.
paid for it.
Okay, Nvidia was up. Now it's back down again. Nvidia. Nvidia is psychotic lately. Can't pick a trend.
Carl, that's right. The Biden administration moving this morning to further restrict exports of those advanced chips that are used in AI
What is
systems.
his
There are
problem?
three components to the new rules. One is that they're imposing a new licensing requirement for companies that are exporting certain types of these advanced chips. They're asking
You know,
companies for more
5 days before the
communication
inauguration,
strategy.
they keep doing this shit with. Hold on a second. I gotta get the. All right. All righty.
Being treated as if they are shabby.
Okay, there goes Microsoft now. Apple on the move. Apple. Okay, so let me take a look at Apple. Let me take a look at money magic levels because we're at 237.50. 237.50. That's the upper call wall. So Apple, if Apple gets above 237.50, folks, this could rock and roll. Okay. Okay, Apple gets above 237.50, this could rock. As dealers will have to buy shares to cover or to hedge. Okay, Apple looks good. Let me grab Apple. Apple Friday. Okay, what's Wednesday? All right, so that's 2 days, 3 days. Okay, Apple. Oh, shut up, Kramer. Jeez. It's too much in the morning. There's a 240. 240s are a 29 Delta. The 237.50s look good. Shut up, dude. Damn, he's annoying. Sorry. I didn't get a whole lot of sleep last night. My son was playing. He was on the basketball trip to another high school. Got home at 12:30. I don't know how they do that. Keep these kids out so late. He was cranky this morning too. Let me. No, I don't want to do that. Apple. I want to take the 28 Delta. I'm just going to follow the 28 Delta and see how it plays out. Okay, I'm not buying it right this second because it's a 28 Delta, but if Apple can manage to continue, I'll track it. It's starting to go. Let's see if we get through this area. Apple, looking good. Okay, watch 237.50. Okay, we're right at supply, so okay. This is supply right here, Apple. You can see it on the screen. Okay, we need to get above this level. Most likely going to run into some supply. So let's see what happens. Okay. Watching. Okay. Oh, my son's back. Okay, Apple's starting to go. Okay, Apple's starting to go. Those 28 Deltas are now 30. Okay, they're climbing. Apple's through that supply. Okay, there you go, Apple. Look at the daily. You got a 3-candle reversal. It sputtered out. We had that bullish day. What's that? Monday, Tuesday. We were kind of engulfing the body of Monday's candle. Then we following through today. So this could get some. This could get some runway. Let's see if it follows through. Okay, watching Apple. Microsoft, big reversal on Microsoft after announcing that they were laying off. Layoffs again. Okay, a lot of stocks higher. Okay, Apple looks like it wants to keep going. Ooh. Okay. Daily. Starting to go. Apple. Nice reversal. Apple. Keep an eye on those 28, 30 deltas, 30 deltas now. Okay. Okay.
So according to the Commerce Ministry, the new rules impose broader licensing requirements for chip factories and packaging companies seeking to export certain advanced chips.
Okay, Apple, Microsoft, same thing. Microsoft, looking good. Okay, Amazon, Tesla. Right.
So US stocks extend gains, the Nasdaq up 2.01%.
Apple. Watching 237.50. 237.50. Apple, let's do it, Apple. Okay. Okay, there goes Apple. Apple's starting to run. Dealers are starting to hedge most likely as we push above 237.50. As you know, the call wall, that's the upper call wall noted by Money Magic in his appropriate channel, Money Magic channel. Nice reversal. This is the third day now. We dropped below the 50-day on Friday. Buyers stepped up on Monday. Tuesday was a little iffy, but we got the nice follow through today. We got the 50-day overhead as a target.
At 10 a.m. Eastern Time, we expect comments from Fed's Kashkari, who gives welcoming remarks and participates in a fireside chat.
Nice. So far, so good. So far, so good. Okay, Apple going. Okay, those calls are now $1. Okay. Okay, Apple. 240 call is now $1.
According to Interfax, Kazakhstan to compensate
Looking
oil
for a
overproduction
continuation.
plus the
Futures
Australian
continue
election
higher. Futures.
2026.
Legacy? I wouldn't want it to be legacy.
Well, you've made it clear you think it will be.
Yeah, well, I mean, there's a sizable number of the CEOs who were very much against Trump and thought that they had a good rapport But when it comes to the day-to-day business, they've been really, whether it be KKR, whether it
Okay,
be
Rigetti.
these are companies that these are not the John Bursa side.
Rigetti. All right. So let's look a little profit taking on Rigetti.
Yet to
Not a bad
confirm.
idea.
Obviously, tariffs being at the top of the list. We talk about it every day, but we
TTM.
continue to until there's
Okay,
more
that could
clarity.
shift. Let me shift to the hourly chart and see what kind of momentum we've got. Okay, so we've still got cyan bars. Bollinger Band is still opening on the 60-minute.
So, Jim, there are still, it's not as
Okay.
though there is an uncertainty out there, despite what you say with stronger animal spirits, so to speak.
No, I mean, look, Walmart is barely up. TJX is barely up. We talk about how big that TJX really is.
Tesla.
Costco is a $900.
What's Tesla doing? Tesla. Okay, that looks good. Tesla pushing through the call walls. 410, 420 is the next call wall.
Retail would really be a leader here, given these numbers. Home building, that's working, but that's mortgage rates. Mortgage rates are going to go up.
The 30-year fixed, Jim, 709. That is going to be the highest since May of 24. We got some weird squirrely numbers on mortgage apps, up 33. I assume that's some seasonality at work, right?
I think so. We're going to have some, by the way, California's going to change all our numbers. They may make our numbers so unreliable that we actually just may focus literally on earnings, because no one's going to trust
Rigetti.
numbers that are
Got to
so
keep an eye on
out.
Rigetti.
The southern part of 1/5 of the
Okay,
country.
Rigetti looks like some profit taking.
Yeah. Wells with a good look at how the fires will affect demand for restaurants, furnishing, certainly the home builders in the hard
Apple.
lines. That said, Dow's up,
Apple
Dow's
pushing a bit more. Apple.
Much bonds today. We are going to get a fairly healthy diet of Fed speak today. Markin,
Okay, a little profit taking. You can hear the profit taking. Futures.
Stay with us.
Futures, profit taking. Okay, you can hear that profit taking clucking in the background on occasion. Let's see if this just profit taking, or do they follow through this on this? Come on, Apple. Okay, Rigetti, RGTI, Rigetti. Okay, so the momentum looks good. Nice reverse trip on Rigetti. What's Fannie Mae doing? Fannie Mae. Okay, that's following through. Fannie Mae bought this towards the end of the day yesterday. I wanted to track it. Susie mentioning it. It had been mentioned several times after the election. I just didn't do anything with it. Didn't think much of it at $2, $3. But apparently Pershing Square liked it. They were buying back here. Pretty obvious where they were buying. And then you got some follow-on trades here, it looks like. Beginning of the year, end of last year. That's a lot of volume. All right. So I don't think they're in this for a couple of bucks. I think they're in this for at least a double or a triple, maybe more. I have no idea. I'm just speculating. Okay. I mean, it's $7 stock. So whatever. Now you got to take your chances. Use good risk management. Make sure you have stops, not mental stops, because that becomes emotional. Okay, there goes Williams Companies. All right, so oil and gas, let's not forget about those. Let's see, Constellation Energy Electric. Okay, that's higher today. Constellation. I took a put credit spread for a ride yesterday. The 250, 240. Okay, 200 and I want to say $220 credit. It's in the spreads channel. Okay, futures pulling back a bit. All right, so we're probably going to see this markets pull back. Okay, Apple no follow through yet. Apple no follow through. Oklo. Let's see what these are looking like. Oklo, the Occidental Petroleum we bought was that on Monday. That's still consolidating. ConocoPhillips, that was up yesterday. It's above the 50-day, so I haven't sold any of this yet. ConocoPhillips. Okay, that looks good.
143, so that you're covered and
Conoco.
nice, participation
Apache,
upside
Apache.
back through to that 140.
Okay, that one has a 20, 50-day cross, Apache.
Nvidia basically the center
20,
of
50-day
its
cross. Okay,
oscillation,
so
since
think about this for a
October.
second. Okay, if you take long setups, and the closer you are to a 20, 50-day cross, the better odds you're going to have. Now, I tried out a bar chart subscription. I was going to see if it was worth anything to those of you members. Okay, so I was going to use it for analysis or whatever, scans. I found that it wasn't really, worth it. I didn't think it would add any value. But one of the things I did notice is they have automatic buy and sell orders. Okay, on bar chart. I forget exactly what they call them, but they're based on 20, 50-day cross, 50, 200-day cross, 20, 200-day cross, that sort of thing. And the ones that worked the best were downtrends that reverse, create a break, and then a 20, 50-day cross. I said, wow, this is pretty cool. I mean, I knew this all along, but I didn't realize the statistics of it. I knew that a 50, 200-day cross is good. So, we can look at those too. Let's see, 50, 200-day. Actually, you know what? As these start to move higher, the point is Apache's up. Okay, so we could run a scan. Let's go to 920 is another one, but it doesn't have as good a statistical track record as a 2050 day. So let's look at a 2050 day. Only because there's a lot more volatility in a shorter time frame. Okay, so you got gold, ASA gold, you got Capital Clean Energy. All right, and what I also look for is a high scooter score. This is Stock Charts technical rank. All right, Constellation Energy. There you go. There's a big plus right there. Constellation Energy. Do we have a 2050-day cross today? I'll be damned. Yes, we do. Look at that. We got a 2050-day cross. I wasn't really paying attention to it. We were talking about Devon Energy and a few other ones. We were looking for that 50-day cross to come. ConocoPhillips. Okay. So put that in your memory bank. Scan for 20, 50-day crosses. You'd be surprised. The shorter the time frame, the more statistically you're going to have volatility perhaps take you out. But if you want a swing time frame, this is really good. 20, 50-day is a really good swing time frame signal, especially when you got a downtrend like this for months on end, and then you get the whole group to turn at the same time. Check the 20, 50-day. Apache is one of those names and doing quite well. Apache. Okay, where are you, Apache? Yeah, Apache's up quite a bit, actually. I have 500 shares of Apache. I plan on adding another 500 shares. Okay, so Apache, 500 shares of Apache. That's up a point. So, no, it's up 50 cents. 50 cents, so I'm up 250. All right, so very quickly, this is starting to move in the right direction. I've been in this for a couple of weeks. I know, Corey, you like to hold on to this, right? Yeah, Devon looks good. All of the energy stocks look good for the most part. Let's take a look at some of these. EOG, especially the ones that are in the gas sector, natural gas. Look at nat gas. Okay, so this is supposed to be in a pretty cold winter, right? So let's look at the weekly. Look at the potential here. Now, even if you get like 382 Fibonacci retracement, that's quite a bit. So look at the stocks that have like exposure, like Williams, WMB. This is occasionally on the IBD 50. Look at the move on WMB. All right, Bollinger Bands opening up. There's plenty of these, so it's not just this one trade. NRG is nice. Okay, let's take a look at NRG for Doc. Yeah, breaking out. These are all doing the same thing. They're all doing the same thing. Okay, so that's exactly what I'm looking for, Doc, is that I see you guys posting, and when I see lots of different names, especially in the same group, I get pretty excited. CONL. Okay, so you got Bitcoin, big move on Meta. Look at Meta go. Okay, let's take a look at Meta. Okay, big bounce. Did it shake some people out yesterday? Probably got some liquidity, exactly what institutions want. To get some selling. If you ever watched that video of Kramer back in, I think it was in the 2007, 2008, somewhere around that time frame, he was talking to this reporter and he kind of let slip. I guess he was kind of proud of it, that he can manipulate the market to do what he wants. If he wants to get in at a lower price, he just starts selling 10,000 shares over a period of time and he gets where he wants. And then they buy it up, liquidity down below. So a lot of you're working against the institutions. You got to understand how they work. They're always looking for liquidity. Where's liquidity? At the recent highs, at the recent lows. You got stops above, stops below. So they'll take those stops out. How many times have you been taken out of a trade and you say, shit, they took my stop? Yeah, of course. That's what they want to do. All right, there goes Tesla. All right, Tesla's on the move. I don't want to keep yapping and miss some of these trades. Tesla's ripping here. Tesla's ripping. Okay, it's above the 410 call wall. Tesla going. Excuse me. Okay, Apple's starting to go again. All right, Apple, a little shakeout there. Looking for something from Apple. Gets above 237.50. We'll have to reassess. I'll have to have Money Magic reassess where all the options are showing up. Very, very great service. Doesn't cost you a penny for now. Money Magic does a great service to the members, shares. Make sure you always thank them. Great information to understand. The call walls are basically resistance. That's where the dealers, they're short calls basically. So with respect to Tesla, 420 is a big level. And if you look at the Money Magic channel, you'll see that 420, unless it's changed since yesterday. So Tesla, the upper call wall is still 420. So what does that mean? It means the dealer is short those calls. You're long those calls. So what happens when you get there? Well, the dealer has the incentive to keep prices below them. Excuse me. Had some cinnamon in my tea. It went down my throat. Sorry. So Tesla, most likely, I'm sorry. Tesla most likely runs into resistance right there. Sorry, I got to work this out of my throat. Wow. Okay, Apple trying to break higher.
United Health as well, and US Bank will round out the technical chat for us later.
Have some cinnamon in my tea.
Let's take a look at the market. Kevin Green back with me. As tech joins in, the market gets even stronger, KG.
Yeah, just like anything else. Don't take things for granted, especially when somebody's giving you something for free. Okay, Tesla running up that 420 call wall. Probably see that before it pulls back. I got cinnamon in my throat from my tea.
Regionals are starting to break out to the upside too. They're kind of breaking out of their bull flag pattern that we hit on market on close yesterday here. And then you have discretionary kind of leading the way up 2.5%. That's really coming from Tesla. Tesla's up almost.
Apple looks good. Okay. So Tesla looking good. Tesla.
I would look at the 59.50 area as your next area of resistance getting into the market here, where we might see a little bit of a pullback, but you are seeing a lot of call buying taking place. Some really out of the money calls actually being picked up. The 59.70s, third largest on the tape right now, 59.80, second largest on the tape. So there is definitely some optimism, but we still have a long way to go. We have Cash Kari that's going to be speaking pretty much as of right now here, and I'm actually interested to see what his commentary is going to be around the inflationary numbers that we just had. And you do have the dollar actually catching a little bit of a bid, and it does appear that 10-year yields for the most part right now might be bottoming out. So let's see if the strength is going to continue to the day overall.
Yeah. Tell me about Fed commentary. What do you think that'll add into the conversation today?
Tesla, I'm going to take a little profits into strength as it moves higher. I don't want to sell it
Well, Fed numbers
too
came in
soon, but it is
some
moving
questions
higher. So I'm going to take some more of this off
expectations.
February.
So I would say he probably will have some commentary around the direction of inflation still being fairly sticky. There might be
Tesla.
some seasonal trends taking place, especially when you're looking
Probably
at
going to sell these
the shelter
and
market. Shelter component continues to be
sell the shares and
sticky.
buy
So I'm
some
not sure if he's
call
gonna provide
verticals or
super
something.
bullish commentary right now. Probably
Tesla.
a little bit more of a cautionary note. When you're looking at the Fed fund futures and you're looking at the Fed watch tool, the market is actually kind of trying to price in a cut in June and potentially. if you're
Okay.
looking at
Give me
December,
2 minutes. I'll be right back.
Still has actually a slight that has changed the dynamic and probably has given us a little bit more enthusiasm for the wave here today. You're talking about risk on though, Oliver. All of the risk on sectors are kind of hitting. I mean, if you're looking at the quantum stocks, that's been a really big fun story over the last couple of weeks. IonQ is up around 23%. Some of those other names up over 20% here today. You see even solar stocks kind of catching a bid. So for now, it's actually a pretty decent rally. We just want to be able to hold this, and I think that's kind of the biggest fear. If we start seeing a little bit of a breakdown, do we also see accelerated selling from other individuals in the market? That's the biggest concern that I would have going into the close here today.
Okay. With regards to the Fed conversation, we just had the odds of the cuts up there, and nothing in sight till the very end of the year. So, kind of maybe a low pressure moment for some of these Fed speakers, where they don't have to live up to too much. Markets kind of normalized and prepared itself for a year of possible inaction, basically, by the Fed. KG VIX crush sufficient based on the rally. We're back below 17. Give me a quick thought on vol.
Yeah, we did see a VIX crush that did take place here, and that kind of coincides with that economic data that we highlighted earlier than obviously what we've seen in the past. I'm actually a little bit surprised that we did not see this backwardation really unravel. We're actually still in a backwardation right now if you're looking at spot VIX versus the front month future. We have a big options expiration this week. We're going to have the lead options also expiring. Should be the number one or number two largest expiration that we will see for 2025. So that might be the reasoning for it. But I actually am a little bit surprised that we did not see a little bit more of a flush to the downside here, even though if you kind of look at it on a nominal basis, we did a pretty decent job. So that's something to keep on the radar. You see that VIX backwardation kind of inching back to the upside here. I would get a little bit more concerned that either it's a massive call side skew, which you could make the case maybe that's going to be the case, or you start seeing a little bit of a backing off and some repositioning for some downside hedges. And that's usually what we see when we come to this backwardation here. So a crush did actually occur, but not across the curve as aggressively as I would have expected or would like.
All right. Maybe this day's not over yet. Maybe we're going to get a little chop. But the big tech trade is certainly helping shore up those concerns. But the NASDAQ still sitting at highs, making new ones as we talk, basically. Russell, though, kind of stuck after its early bid. Good stuff. KG, great look at vol, great look at the technicals. Helpful as always. Jeff Pierce with us to shift the conversation forward a little bit in time as we go to Taiwan. Jeff, earnings, something like tonight or tomorrow, as they sit right in the middle. So big number, though, right? I mean, this could really be the cherry on top. If banks looked good, inflation's cool. If Taiwan tells us the AI trade is still cranking, then that could be a little bullish trifecta.
Yeah, absolutely. Especially as we think about the market share they have, the connection they have with those big name companies like NVIDIA, Apple, Amazon, Qualcomm, you name it. As we go in this report, expectations are pretty strong, right? We see earnings expected about $2.16. That would be up about 50% year over year. Revenue, $26.38 billion, up about 39%. I think some focus areas, because we already have some data after they released their December numbers. Some of the focus that we're going to look at here is going to be gross margins. Those are expected to come in between 46.5 and 48.5%. But obviously, we know that there's been a lot of spending. They have these new plants coming out. They're ramping up production. We know they're working on that 2-nanometer chip. So I think that's going to be an area investors are going to need to look at. And then, of course, comes that all-important guidance, which a lot of estimates have them at sales growth between 20 to 25% for 2025. But I've also seen some analysts skew a little bit higher on that
Tesla looking good.
Already revenue around 8.44 billion, up about 58% year over year. That resulted in around a 34% annual revenue growth over 2023. Revenue about 26.35 for the December quarter. Strong demand for AI chips, of course, has kept the stock moving higher, even as we've seen some of these kind of trade relations.
Tesla's still going.
And then, you know, as we look at what this means for the entire sector, as you pointed out, very important report, because they've got that reach.
By the way, also notice the 20-50-day cross on 3M. Okay, 3M with a 20-50-day cross. Okay, it's been in a sideways range, starting to move higher. These are less interesting versus a stock that's been downtrending with a whole sector. Once you get this crossover, the 20-50-day cross, you got pretty good odds statistically. As long as you're not buying the absolute high of the day every day, you're buying dips, you should be fine. Tesla's still going.
We're going to be looking at inflationary pressure, of course, geopolitical tensions, all of those headwinds that we've been talking about for months. But I think they've got a lot of going here, and with the expansion we're seeing in Arizona and elsewhere, it looks like it could be a very, they're going to kind of continue this momentum into 2025. Like I said, I would focus on gross margins, focus on that spending side, because that's an area where if we start to see the market downturn a little bit, and they've got pressure on gross margins, it could, you know, really start to result in a pullback in the stock.
The growth has been pretty amazing and continues to impress. Biggest profit jump, you know, in like 3 years coming properly. So I can see why the chart has held in so well, especially with the growth into the U.S. and diversifying their supply chain and production lines geographically is, I think, also a nice way to kind of hedge against some of the geopolitical risks. So that, I think, has removed some of that kind of existential threat potentially to TSM to an extent.
Yeah, and especially when you see where they are this year versus where they were even last year, right? Expecting to end the year with packaging capacity of 45 to 50,000 units a month. We look at 2023, monthly capacity was around 15,000 units, right? They said they're going to double their advanced chip packaging capacity by the end of this year. They're already producing the 4-nanometer chip now in their Arizona plant. We know that that's where the 2-nanometer technology is expected to start in 2028, which is going to, you know, potentially have a huge boom to their business. So I think expectations are very high, and I think the momentum of the stock makes sense. But certainly, you know, we've got to kind of keep our eye out for some of those headwinds that we've been talking about.
Yeah, no doubt. Good report, good preview. Thank you very much, Jeff. Good luck at TSM and the earnings that do carry a lot of weight for the AI trade. Joe Teague is back with us here this morning, portfolio manager of the Rational Equity Armor Fund. We got a nice rally, Joe. Chips are up across the board. TSM going to deliver a fresh bullish catalyst tomorrow?
I certainly hope so. Now, both of the expectations are subdued in Taiwan Semi. Maybe people already kind of know what they're going to do, but definitely a good CPI report sets a good tone for them. It gives them an easier path to, on a beat, to see some upside pop.
How much of an upside pop you think? The thing looks like it is able to break out regularly, even while NVIDIA hasn't been. Stock just keeps making new highs.
Yeah, it's fantastic. It's a great sign for the AI infrastructure boom to continue. I want to see that narrative carry on. I want to see them looking past any impact on Chinese tariffs that's going to hit them. So I'm really excited for the report. I'm cautiously optimistic. I want to use options to play this rather than the stock into this event because we could see some downside surprise. But that said, I think we're going to see some upside movement. I'm positioning that way. I'm not looking for too much of an upside gap, though. I mean, we got a recent high at 220. I don't think we're going to be seeing that immediately following this report. But I do think some upside exposure is there, and I want to play accordingly.
All right. Tell me about it. Want to get calls, strikes to the upside, something in the money? Where is it relative to where we trade? What looks good to you?
Yeah, what looks good to me is getting a call spread on. I'm looking at the 202, 207 and a half. So 202 and a half, 207 and a half. That's a $5 call spread. I'm going to sell the 197 and a half, 192 and a half put spread. So I'm going to collect some premium to sell that put spread to pay for that call spread I'm buying. I'm going to pay 80 cents right now as we're sitting right here. This morning it was a little cheaper. I was looking at it, it was 35 cents. So definitely gone up in value as the day has gone on. But using that put spread to offset some of the costs owning the call spread. The benefit for me is, yes, if it goes up, I'm going to participate in the upside. Can turn into $4.20 if we trade above 197 and a half after expiration or into expiration here on Friday. Or the other benefit is if we do trade lower, I don't lose any more than 80 cents all the way down to 197 and a half. So that's a big bonus to me. I think we're going to be supported there on that level. So I'd love to see, I'm going to love to buy it at 197 and a half anyways if we go down. That said, I do think we're going higher, and I don't think we're necessarily going to race higher. If we do, that's great. I get a nice win for the week. Yeah, in just a couple of short days.
Yeah, all right. Nice. So you don't need it to rip, but as long as this thing doesn't break down, I mean, you've got a couple bucks for it to breathe too. So you've got some flexibility to the downside, but you're betting it doesn't go any further than that.
Yeah, exactly. And then again, there's a massive exposure to the downside. I'm covered to the downside too. So we rip below 192, max loss of $5.80 here. So I'm covered to the downside if we do have a big loss. And by the way, it's less of a loss than owning the stock outright if it does have that downward gap. That said, I'm positioning to the upside. Just a small upside move for a few days is what I'm looking for.
All right. I like that good approach for a stock that has been well supported, uniquely strong, and has a lot of expectations now built into the earnings. So, but also it doesn't seem like there's going to be a whole lot of potential for negative surprise. We've already seen how much spending there is, and even though Nvidia's growth, peaked a couple percent.
Sorry, I had you on mute. Tesla continues to move higher.
So just amazing how sticky the numbers have been.
Well, TSM has been catching up to Nvidia.
Exactly.
Pricing forward, those gains have been priced in for some time. If those gains were going to materialize, you were always going to see it in TSM. That's one of the reasons why I've loved it for so long. You're seeing this whole AI infrastructure narrative playing out where, hey, Nvidia are ordering these Nvidia chips. They've already been that's already been priced in Nvidia. There's a lot of other stocks which are catching up. And we're still seeing that across the board. Maybe Taiwan Semi has caught up.
Tesla is still going. Looks good.
We're going to see this build out continue of these data centers that are just never ending. Then we're going to see a lot of other names catch up to Nvidia.
All right. Seems like that's the story. Good stuff. Very rational. Thank you, Joe.
Thanks for having me.
Appreciate the trade. Joe Teagate, portfolio manager of the Rational Equity Farmer Fund. Coming up, let's talk some Fed. We got Ben Emmons joining us. Always a good take on the macro side. So back to the inflation numbers this morning, what we learned, what we take away. Bonds have continued to rally. 10-year yield now at 4.64. Conviction in Treasury bulls for the first time in a long time.
Rigetti. Okay, these are still working very strongly. Rigetti pushing. Okay, we're pushing through supply. Rigetti pushing through supply. Okay, NVIDIA starting to move higher. NVIDIA starting to move. Very rock and roller. Okay, I have NVDX shares. That's it for now. Okay, looking good.
Number one broker here for the number one hit maker. Thanks for swinging by, Carl. No problem. So, all those for? This lets me adjust the bass, add more guitar, maybe some drums. Wow, so many choices. Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim. You know Carl is the only front man you need. Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab. No politics, no noise, about and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Oh, NVIDIA looking pretty good. 135.
Is powered by Ameritrade, bringing you futures and forex around-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter
135, 140. So we got to get through 135 to get to 140. Above 135, you got a little bit of supply at 136.50. 135, 140 are the put walls, are the call walls on NVIDIA.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
bonds catching a real big bid with the Treasury futures up 1%. Long end bonds rallying a lot more than the short end, as we do have a little curve flattening happening.
Okay, everything is up and to the right, so looking good. Looking good. Looking good. Okay, Meta still pushing higher. Meta looks good.
Showing some life again. I'm seeing a little bit of flattening in the 10s to the 2s, though. Are we not willing to let go that short end pop that we got the last couple of weeks? So do we still have some pressure lingering on the Fed?
I think that's the case, Oliver, because this number is good, right? It showed like some components that helped the core measure, particularly to go further down mid on the month. And so the trend stays intact for the Fed to get slowly to its target. I think that's the key here.
Okay, NVIDIA, Rigetti.
Which means that they cannot do much in the meantime.
Rigetti, RGTI, Rigetti. At the highs. Trying to get through the supply, Rigetti. Got supply right here.
Seeing like, okay, we don't have yet this accelerated inflation, which has got inflation expectations that went up because people anticipate tariffs. We have yet to see how that plays out. So in the meantime, the actual inflation data shows contains some level of moderation. I think that's why markets are risk on today.
Ben, you bring up some good points there that are outside of inflation, policy impact, tariff potential. Some are.
Okay, Rigetti gets above 1150. This could run a bit. Looks like a risk on day. New York FANG components are all higher. Let's look at that. New York FANG. New York Fang components.
Policy impact on that term premium from inflation impact? Because even if we're not going to like heat up hot inflation, are there still some forces that could keep yields up?
I agree with you, and I think it's good to think of it this way, that what was that term premium move really all about? That, you know, it seems
New York Fang, New York Fang.
inflation as much that people thought, like you could tell from the expectations.
Excuse me.
It's lagging a bit, the move in nominal yields, and people thought it's maybe about growth. So now we're expecting acceleration. Maybe to an extent it's the case, but then there's this residual, that's this fiscal risk. And you know, we're getting the hearing from Scott Bessent.
Why do these keep jumping off here?
To hear from him.
New York Fang.
How to tackle this deficit, but how are you really going to manage this? Because I continue to be of this view that
New York Fang, big bullish move off of the 50-day. All right, so the trend is intact. New York Fang, still bullish on the intermediate and long term. Short term, we need to get back above the 21-day. Middle of the Bollinger Bands, we need to get back above that and start to test the highs again to get back to short term bullish.
All right. Some of that is the normalization too, right? Just that in the decade previous to COVID, we couldn't really engender inflation. Fed was basically on a one-way track post-financial crisis. So, does this have to imply some major structural collapse, or are we just kind of getting more of a two-way trade in the Treasury market?
Bit more the point on the latter, more the two-way trade. But I agree with you that it is normal.
New York Fang looks good. Rigetti, yeah, Rigetti looks good. Rigetti continues to push. 15-minute. This is a 5-minute. 5-minute chart looking good. Rigetti, a gap up, but buy order blocks underneath looking good.
Welcome back. I'm Silvana Henao with your CNBC News Update. Several of President-elect Donald Trump's cabinet picks will face questions today from senators during confirmation hearings. That includes Florida Attorney General Pam Bondi, that's Trump's pick to lead the Justice Department, and Senator Marco Rubio, his choice for Secretary of State. The nominees are facing the committees overseeing their agencies. A full Senate vote won't happen until Trump is in office. The Supreme Court will hear arguments today against a Texas law that requires age verification to access pornographic websites. Texas argues the law is necessary to protect children, while critics say it's a violation of free speech. Texas is one of more than a dozen states with age verification laws in place. And the Food and Drug Administration is proposing a plan to cap the levels of nicotine in tobacco products. The agency says the change would make smoking less addictive. The FDA's proposal comes in the last days of President Biden's term, and it is unclear if the incoming Trump administration would allow it to move forward, Sarah.
Makes you wonder what took so long.
Yeah.
Thank you, Silvana.
You got it.
Silvana Henao.
Well, stocks are rallying hard on this morning's inflation numbers. We've got every sector higher and a number of sectors up more than 2% right now. Consumer discretionary, communication services, financials, utilities, and information technology. We're going to break down the numbers, what it means for rates after a quick break. Stay with us here on Squawk on the Street.
Have you? Okay, I got to take the son to school here shortly. All right, a little bit more profit taking. Probably not a bad idea to take some more profits off the table. Re-enter at lower prices. Rigetti looking good. Meta looking good. All these are at the highs. Okay, looks like a little profit taking. Rigetti. Bollinger Band starting to come together. I would guess this is probably seen pretty decent run today. I'm going to take a little bit of Rigetti off. Okay, took some more Rigetti off. Okay, watch Rigetti. There's no supply here. I don't see anything other than on the daily. That's the hourly. Sorry, the hourly on the right shows some supply. If we get through 1150, we could run a bit more. Apple's still looking good. Apple. Let me take a look at Apple. Apple. All right, it's right at the 50-day moving average. Stochastics MACD's turning. Looks like a follow-through day. It's above 237.50, so Apple could run. Apple could run. Looking good. Apple's at the high of the day. Perhaps wait until it dips a little bit now. If you're interested in Apple, wait for it to dip a little bit. Okay, the 34 Delta is a 240 now. It's $1.02. It was 88 cents when I first looked at it. So it hasn't moved much. 237.50s are doing a little bit better. 237.50 Apple. Okay, I'm not going to buy anything right this minute because I'm going to take my son to school, but these do look good. Apple looks good. Okay, S&P, a little fade here, S&P. So we want to make sure that this doesn't fade a lot. S&P. So let's keep an eye on S&P. It's right at that 59.50 zone. As you remember, if you remember, we need to stay above 59.50 now. Need to get above 59.50. That would be risk on above that level. Okay, I don't need this anymore. Okay, that's telling me I got to drop him off.
Good inflation reports and things have turned around. Now, here's the problem, in my opinion.
401ks and other assets to be making it easy for people to access private assets. 401ks, you brought it up again. I know the last time we talked about how this was a long road. But then you think about some of the existing players, it's hard to imagine a world where even BlackRock's not going to be fighting for that to happen, that they have more access to private assets. Do you think that this happens faster?
I think it's a question of what it is. I think if we're talking about taking traditional private market funds as they're constructed today and dumping them into 401ks, I don't see that. I think the whole tradability of 401ks and the ability for people to kind of rebalance real time means that you're going to have some real changes around how we value assets and the frequency that we do that. Charlie, as you well know, this asset class has existed for decades on a quarter mark with a lag. None of that's going to work in a 401k environment. So are there solutions to it? There are. So are some of them going to need to involve some regulation and rule changes? I think they will. And so I don't know that I see this as a tomorrow issue. I think there are steps that you can make that are going to be interim. So, for example, having a portion of target date funds have an exclusion around sort of real-time valuation, that would be a step forward, and that would sort of be starting a chance for you to kind of bridge your way into that 401k market.
I want to let you do a little marketing and also learn a little bit about your business, Eric. Why did you choose Republic as a partner on this? What do they do to make your product better?
I think this is really just about ease of access. I think for us, we see a number of players, Republic being a great example of that is building technology in a platform that's allowing individual investors to simply access the private markets through their system. And so for us, our big theme has been ease of access is absolutely critical. And secondary to that, making sure that those friction costs and actual costs are coming down. So, Republic to
So
do
this is a
that.
grid of
You've
all the
also
big
seen us have
cap
other
tech names,
initiatives with firms
Apple,
like
Amazon,
Securitize
Tesla,
and others outside
when
of
they're all
the
green,
US, where
that's
we've
when
been
you know you have a good
tokenizing a
day.
variety of our
Potentially,
products
you buy
and
the
trying to
dips.
put them in a multitude of platforms so that investors can find them. This is about kind of meeting the investor where they are.
Okay, folks, I'll be back. I'm going to just drop off my son at school.
Every other way that they transact, you need to meet them where they are. They're not going to kind of conform to what you want. Investors want it their way. So again, whether that's ordering food, dining, clothing, whatever, this is going to be absolutely no different than that. So I think it's going to be a question about access in a variety of platforms, ease of use, ease of use, ease of use.
Eric, we thank you so much for your time today. That is Eric Hirsch of Hamilton Lane. Certainly technology and transaction costs, just like every industry, the asset management industry is certainly where people are keeping a close eye on all that.
Yeah, no, absolutely. Really important stuff for investors. Coming up, biotech M&A is on the road to recovery. We're going to discuss the outlook after some big deals this week with Stephen Diamond. He's the founder and CEO of SPD Advisors. He comes to us from the JP Morgan Healthcare Conference in San Francisco. This is Bloomberg.
Folks need investment solutions to achieve the most important milestones of their lives, and we have to be innovative to meet that need. At Franklin Templeton, we've needed some unique types of financing structures to be able to evolve our solutions, and Wells Fargo has been really agile in being able to build those for us. We're leveraging technology that enables us to customize portfolios to the individual's goals. We're invested in those areas of disruption for the next generation.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. CME futures offer around-the-clock access, deep liquidity, and capital-efficient margins, helping you seize opportunities whenever they happen. The best-informed investors choose Interactive Brokers. Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. Access CME futures around the clock at Interactive Brokers.
It's the Lazy Boy clearance event. We're clearing everything out store-wide. Save up to 50% on closeouts, overstocks, and floor samples. Get our best offers on your favorite Lazy Boy furniture. Lazy Boy. Long live the lazy.
I know I made the right choice becoming a Comfort Keepers caregiver. When I hear the joy in Sarah's voice as she shares stories about her late husband, while I watch the sunset from their favorite spot.
Becoming a Comfort Keepers in-home caregiver allows you to truly make a difference in the lives of seniors and their families. Are you ready to experience more joy in your job? We can help. Visit comfortkeepers.jobs today.
We live in the sun, and we know you do too. That's why we've been on a multi-year effort to perfect a lineup of sun protection clothing that works for every activity. With a UPF rating of up to 50+, Orbis has you covered. Awesome sun protection has never felt so good with Orbis.
Beat the summer heat with savings on a new GMC at Bell & Bell. Scorching hot savings of up to $11,500 on this 2024 1500 double cab 4-wheel drive 3.0 turbo diesel elevation Sierra. Find a deal for you at bellandbell.com or in person at Bell & Bell in North Myrtle Beach, close to you. Experience the Bell & Bell difference today. GMC, we are professional grade.
Terry, when it comes to Asian markets,
Biotech deals off to a strong start in the new year. On Monday, Johnson & Johnson agreed to acquire Intra-Cellular Therapies for about $14.6 billion. That's the largest deal to be announced in more than a year. Joining us now for more on the outlook in biotech is Stephen Diamond. He's the founder and CEO of SPD Advisors. Stephen, you've been attending the JP Morgan Healthcare Conference. You're out in San Francisco right now. Tell me first about just the sort of animal spirits post J&J deal and ahead of the Trump 2.0 administration. Are we going to see more and more big deals like this?
I think there's a good possibility of that, Matt. Glad to be on here. I think there are three themes coming out of JP Morgan. The first is that there's a big patent cliff. There's about $400 billion of patent expirations that are going to come. They're going to come in over the next 8 years, and that those revenues that are going to fall off are going to need to be replaced. I think a second big theme is that big pharma will continue to pay for high quality assets, and we're at a stage now where you've had a really rough 3 years in biotech. VCs may be more inclined now to take early money off the table and get a quick win rather than wait for an IPO and bigger gains. And the third one is that I think there's going to be a continued focus on taking costs out of the system and finding cheaper therapies to treat some of the diseases. There's just going to be a big rotation of insureds from the private healthcare market over into government care. And with the deficit and the debt, I just see a lot of pressure on taking costs out of the system.
Steve, let's focus in on the first one of those. We tend to throw around a lot of big numbers and they become meaningless. So you say $400 billion patent cliff, and I don't really understand it until you add the context that the last time we had a big patent cliff was 2011, and it was $250 billion. What are the drugs going off patent, the big ones that we know about, and what do you mean by we need M&A to replace those revenues?
Sure. So let's talk, Tech 3, for example, Merck Keytruda, you've got Eliquis, which is a Pfizer and BMS combo, and then Opdivo. Those are 28 billion, 12 billion, and 12 billion for Opdivo in annual revenues. That's over $50 billion. Those are coming off patent in the next few years. So you don't just replace those revenues with internal R&D. It really, to replace revenues like that at scale, you need M&A. And, those are just three of, many drugs that are coming off patent that are blockbuster drugs, and blockbuster being more than $1 billion in sales.
M&A is one thing, but then on the other side of M&A are the companies that are selling. And biotech, we talk to a lot of investors. It's kind of like the Wild West here to see what will be successful at the end of the day. How do you think through the next generation of rising companies that are going to be the ones that are the acquisition targets of tomorrow or the next big stocks?
So, a couple things. So if you look at the three deals that were announced that Matt was referencing, you had the $14.6 billion J&J deal for Intra-Cellular. You had Lilly's up to $2.5 billion deal for Scorpion, and then you had GSK's deal for IDRX, about $1 billion plus another $150 million in milestones. If you take those last two, both of those were deals that really strengthened and added value. They were high quality assets that added strength to existing franchise of Lilly of breast cancer. STX-478, Scorpion's lead therapy, really fits in nicely and tucks in with Lilly's breast cancer portfolio and allows them to pursue combination opportunities. IDRX, that deal has strong phase 1b data that goes straight to pivotal. And so, both of those are competitive processes run by Centerview. And what you are seeing is that big pharma will pay up and move quickly for high quality assets. On the J&J deal, they had And so there you see big pharma moving quickly when an asset is de-risked.
Matt must say also.
Oh, sorry.
No, it's funny that you mentioned Centerview. We were watching the investment banks this morning. Centerview is really the kingmaker here when you think of biotechnology deals, and they're already showing some love in that industry.
Yeah, definitely an interesting angle. I wonder, Stephen, when you look at the incoming administration, and Shonali and I have been talking about, whether they're going to go the other way of Biden, but obviously they have populist drivers as well. The price of these drugs comparative to what other countries are paying, to me, is always just mind-boggling. If I want to get, Wegovy or one of these GLP-1 drugs, and I live in the UK or I live in Denmark, I'm going to pay like $100, $150 a month. If I want to get them here, I'm going to pay $1,000 a month. And this isn't just Novo Nordisk, right? The U.S. drug makers, Eli, Lilly, and Pfizer, are also charging Americans exponentially more than they charge other developed countries. Do you expect the Trump administration to take that on, or are they just going to allow these big drug makers to have, the U.S. customers as kind of a lucrative ATM?
So, a couple things there. One, you're right. There is a popular sentiment. J.D. Vance has been very outspoken on his support for Lena Khan as the outgoing FTC head. On the other side, on drugs, to address your point on drug prices, look, I think there's going to be a lot of pressure on PBMs, and there's a lot of inflation of cost that can be taken out of the system if you can reform that aspect of it. And payers, drug companies, patients, they all want to see prescribers. They all want to see some action there. And I do think that you will see, and Trump has been outspoken on this as well about the PBMs. I would anticipate some action against the PBMs from the incoming administration, to address the point.
Yeah.
But I do want to make one point.
Mm-hmm.
This is, this innovation has a cost, and you do see the cost of these drugs, but you don't see the cost of all the many drugs that failed, that didn't get to market. And at some point, if we want to continue leading the world in innovation, that has to be funded one way or another.
Totally agree, but I just wonder why we have to foot the bill every time. How come in Germany I'm paying 10% for a drug that's made in America or made by an American company that I'm paying as a U.S. citizen? Why do I have to foot the bill every time? And I think, especially the companies that are traded here, that we grow, we have to ask them to answer that question. Maybe it's the PBMs, maybe it's the middlemen.
Right.
You
Stephen,
wrapping up?
yeah, I am wrapping up.
She's wrapping up.
Stephen, we do have to leave it there. That's Stephen Diamond of SPD Advisors. A lot of food for thought. Come back to us soon. The cost of drugs will absolutely be a huge topic in America. Maybe less in Germany, it sounds like, but very much in America. We're going to talk about other places a lot of money is being made, the big banks. We're going to talk more about that beat because you're watching those stocks still on a tear. More on the latest on earnings next. This is Bloomberg.
Folks need investment solutions to achieve the most important milestones of their lives, and we have to be innovative to meet that need. At Franklin Templeton, we've needed some unique types of financing structures to be able to evolve our solutions, and Wells Fargo has been really agile in being able to build those for us. We're leveraging technology that enables us to customize portfolios to the individual's goals. We're invested in those areas of disruption for the next generation.
It's the Lazy Boy clearance event. We're clearing everything out store-wide. Save up to 50% on closeouts, overstocks, and floor samples. Get our best offers on your favorite Lazy Boy furniture. Lazy Boy. Long live the lazy.
Buffet Retirement Community in Darlington has been helping seniors thrive since 1960. The new rehab facility is a wonderful addition to Buffet's roster of amenities, such as the Aquatic Center and Memory Care Unit. To find out more, call Buffet today to schedule your tour.
Everyone knows good things come in threes, like Dave & Buster's Eat, Drink, and Play combo for just $19.99, including one mouth-watering entree, a refreshing beverage, a $10 power card, and a whole lot of fun, which means you enjoy a delicious meal for under $10. But look, that's 5 good things. Good things come in threes at Dave & Buster's with the Eat, Drink, and Play combo for just $19.99.
Buy in store today.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. CME futures offer around-the-clock access, deep liquidity, and capital-efficient margins, helping you seize opportunities whenever they happen. The best-informed investors choose Interactive Brokers.
Big bank earnings topping estimates this morning with Citigroup, Goldman Sachs, JP Morgan, and Wells Fargo helping propel equities higher. Joining us now, Bloomberg finance reporter Todd Gillespie. You're looking at some of those gains being given up at JP Morgan. They were the most expensive here. Citigroup getting a huge boost. This is interesting to me. $20 billion buyback plan. Appeasing investors even while lowering their return targets.
Right, yeah. Citigroup, they give it and they take it away. Jane Fraser has a big 2026 target that she's stamped on her forehead, and she's just, rolled that back after 2.5 years, more than 2.5 years, putting that front and center of her plan. She's rolled that back 1%, one might say, not too big, but it was a really cool part of her credibility that's at stake here. At the same time, she's also sweetened the deal for investors, right? By saying that she's now going to buy back $20 billion worth of stock, and obviously, investors love that.
I mean, I look over the last 5 years, right, and a stock like JP Morgan has doubled. Citi is still down, right, under zero. So she's got to do something.
Sure. Well, yeah, versus 5 years ago, the stock is still not doing great. But right now, today, I think they're the top performer of the big banks today.
True. The last hour and a half, they've done really well.
Sure.
But if you're a longer-term investor than that.
Yeah. Well, I mean, one thing that you might say is, right, that analysts weren't expecting them to do very well anyway. Analysts have not been expecting them to hit these 2026 targets. They've called them, over-optimistic already. So maybe this is Citi, coming back down to earth a little bit. Also reiterating that, look, they understand what the path forward is now, taking stock and saying, look, hey, we understand maybe we were a little bit too excited, but we can still do this.
I think something that interested me a lot in these earnings, I love to get under the hood because I do believe, Matt, that these banks will tell you a lot about the health of the markets. JP Morgan missed on equities trading. Their value at
Wasn't
risk.
it still up 22%?
But what's interesting to me is they took on more risk in the equities desk while underperforming expectations. And at Goldman, part of the reason they're rising so fast is because of financing. It sets the bar really high tomorrow, doesn't it, for Bank of America and Morgan Stanley?
For sure, yeah. I mean, these trading businesses in particular, we all said already that these were going to do very well. Analysts thought they were going to do very well. We had guidance that they were going to do very well.
And they did.
And they did do very well.
If you're up 22% in a quarter.
Right.
Yeah.
They did very, very, very well. And I mean, similar for Citi's equity and FIG businesses too. So yeah, you're right, Shanali. This bar is going to be set very, very high for the rest of the street. Maybe notably, we want to see investment banking revenue start coming back as well, right? This still seems to be a little bit gradual on that side. Everyone's leaning on this volatility around the election cycle for Q4, seeing trading revenues come through that way. Looking forward to continued volatility for the rest of this year around geopolitics, around Donald Trump, around all this kind of, confusion and uncertainty around geopolitics. But is that still going to be a slight drag maybe on IB?
There's a huge story underpinning the surface here. Matt was pointing this morning to Lazard shares soaring on the back of a lot of this optimism here you're seeing in the big banks. Centerview, the Wall Street Journal had reported that they're considering options. This would be the year to go public, isn't it?
Well, I'm not the advisor here, Shanali, but maybe you can tell me. Maybe we can phone up Blair Rathbone and have him on TV and he can tell you that. But, without that, yeah, who knows?
So the other thing about this too is even though you have stellar results right now, does it seem like they can keep going? Where are the rest of the profits going to be coming from through the rest of the year? I think for Citigroup and JP Morgan in particular, people are so excited about Wall Street. Are they looking at Main Street enough?
Yeah, well, I mean, that's true. I think a lot of the revenue guidance that is pretty strong today. Citigroup's revenue guidance for this year is above what analysts were expecting them to say, even though costs are going to be sticky, pretty much flat, slightly down maybe. We are looking at revenue guidance that's coming through this year pretty strongly. Yeah, on the consumer credit side, I think the sounds are still pretty optimistic. They are looking at modest growth in this space too, but I don't think it's going to be outperforming the more institutional side of these businesses.
Yeah, glad we could get you away from your computer for a little bit, Todd.
Thank you, Matt. It's good to be.
Did we do enough?
We did.
You want-
Okay, I'm done.
you
My
want-
drop.
you want
We're
another
over. The
Okay.
thing about it is we're not even done yet, and this is the unofficial kickoff to earnings season. I know 2 weeks from now we're really watching those big numbers come down from the tech companies now.
All right. Yeah, we will be watching. Yeah, $22 trillion in market cap instead of just 3. Todd Gillespie covers the banks. He's been at his desk since 5 a.m. without moving, so it's great that we could get him on TV for a little bit. Let's get a quick check on markets. That earnings optimism, as well as really a cooling inflation number, really boosting equity indexes. The S&P 500 up 1 2/3%, 5940 basically, so just 60 points away from hitting 6,000 again. And you can see that the 10-year yield has come down pretty substantially, 13 basis points. At one point, we were off 15, which Shanali tells me is the biggest drop since August. So that's a real move there, but still at 466. Coming up tomorrow on Open Interest, ChargePoint CEO Rick Wilmer joins us, and Halozyme Therapeutics CEO Helen Torley.
Folks need investment solutions to achieve the most important milestones of their lives, and we have to be innovative to meet that need. At Franklin Templeton, we've needed some unique types of financing structures to be able to evolve our solutions, and Wells Fargo has been really agile in being able to build those for us. We're leveraging technology that enables us to customize portfolios to the individual's goals. We're invested in those areas of disruption for the next generation.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. CME futures offer around-the-clock access, deep liquidity, and capital-efficient margins, helping you seize opportunities whenever they happen. The best-informed investors choose Interactive Brokers. Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. Access CME futures around the clock at Interactive Brokers.
Buffet Retirement Community in Darlington has been helping seniors thrive since 1960. The new rehab facility is a wonderful addition to Buffet's roster of amenities, such as the Aquatic Center and Memory Care Unit. To find out more, call Buffet today to schedule your tour.
Teeth sensitivity is so common. It immediately feels like, somebody's poking directly on their nerve. I recommend Sensodyne. Sensodyne toothpaste goes inside the tooth and calms the nerve down. And my patients say, doc, it really works.
So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up very like this speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the cost of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romain Bostic in Detroit, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Radio.
Welcome to Balance of Power. This is Bloomberg Television. From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, I'm Caroline Hyde.
And I'm Mike Shepard in Washington, in for Ed Ludlow. This is Bloomberg Technology.
Coming up, the SEC goes after Elon Musk, suing the tech billionaire over alleged disclosure violations with Twitter. Plus, Elon Musk's other company, SpaceX, continues to make strides with 2 lunar rover probes headed for the moon. And we'll hear from DC as we await a decision from the Supreme Court on TikTok's fate this week. But first, we check in on these markets, which really liked the CPI print. Core inflation coming in at a cooling rate of 0.2%. We rally hard, best day in, well, a couple of months since early November. We're seeing Bitcoin, also risk asset, managing to drive higher, almost at that $100,000 level. Move on and see what's actually moving from a points contribution to the NASDAQ 100. Number one is Tesla. Look, even as Elon Musk, the CEO, gets sued by the SEC, it's shrugged off because that inflationary read really does reinvigorate some of these growth stocks. D-Wave Quantum, once again, what a volatile ride. A number of quantum names go higher. D-Wave up 22%. They get a deal with Carahot as they look to be selling yet further into real customer bases for quantum. TSMC. I shine a light on TSM. These are the depository receipts traded here in the United States. Even as they traded lower in Asia, they're higher here in the United States. This as we get yet more focus coming from the administration of Biden, trying to limit the access of TSMC, Samsung, other chip makers into China, into Huawei, for example. But actually, are some of these details around what the administration has announced actually better than the market had anticipated? Peter Elstrom can articulate it. Bloomberg Intelligence coming out with a note saying actually some of the limitations perhaps aren't that bad for phones, for PC chips in particular.
Yeah, that's right. So what we are seeing is the Biden administration is really rushing out a couple of last rounds of regulations before they leave office and hand off to the Trump administration. In the latest round, what we're hearing is that the Commerce Department is asking TSMC, Taiwan Semiconductor, which makes chips for Apple and NVIDIA, and also Samsung, other foundries, to put new restrictions on their business with Chinese customers in particular. The reason is they know that there was a Chinese company that was an intermediary for chips that were made by TSMC and then ended up in the hands of Huawei Technologies, the Chinese company that's been blacklisted by the US and is not supposed to be able to get these kinds of chips. And instead they got that. So now the Commerce Department is asking for new regulations where these producers, TSMC and Samsung, will need a license from the US before they do business with certain companies in China for the most advanced semiconductors.
Peter, do we expect these measures to get the same kind of unwelcome reception and objections that the ones unveiled on Monday regarding AI technology received?
That was really an exceptional situation. You're referring, there were a new round of AI restrictions that hit NVIDIA in particular. NVIDIA issued a very sharply critical comment at that time, saying this is not the time for the Biden administration to be putting in new rules, especially just days before they step out the door and hand off to another administration that may have different priorities. The Biden administration, to be fair, did give a very long comment period. Those rules are not going to go into effect until well into the Trump administration. But you raise a good question. These chip companies are not happy about seeing new rules kind of rolled out almost daily now that are going to affect their businesses going forward, especially from an administration that's not going to be around to enforce them.
Bloomberg's Peter Elstrom, thank you. In other chip news, Intel, the once dominant chip maker, now struggling to revive its business and finances, plans to turn its venture capital arm into a separate fund with a new name. Bloomberg's Ian King is here for more. Ian, thank you for joining us. How much of a blow is this latest development for this storied company? This Intel Capital venture arm has invested and put money into the likes of ASML and VMware.
Yeah, I mean, it's not really a blow for the company. It's more an admission that we really need to be focusing what resources we have on the core mission, which is better products, better production, because those are the things that are going to get us back in the game. The venture capital arm is kind of a prototype. It's a kind of the venture capital arm for corporations and been a model for years and something that they've used to promote other parts of the industry, other technologies. And so you could argue that it's kind of peripheral to the job at hand right now.
The job at hand is, as you say, focusing in. What then are the other moves, Ian? You've reported a lot about the future of Altera, for example, which has a significant holding in.
Yeah, I mean, it has these investments that it's made over the years, these companies that it's brought in, like Altera, like Mobileye. This started under the previous CEO, Pat Gelsinger. They're saying, look, these things aren't realizing the value that they should be doing, so we need to find a way to monetize them. So currently, Altera, which I think it paid about $15 billion for back in the day, is looking for investors, people who will bring in money to own part of that as it tries to take that particular unit to an IPO along in the future.
And what is our timeline on a successor? And then also when we might hear how this new venture arm being separated will be finally rebranded. They have a lot of moving parts right now.
Yeah, I mean, there's an awful lot to track with what's happening with this company. They have not given a timeline for when they will bring in a CEO, but they need to do that, right? They need to do this quickly if they're going to change direction and make it work, because it's not like things are getting better. In terms of what's happening with Intel Capital, they've said it's going to be really a separate entity by the second half of this year. They wouldn't answer our questions about what it means for the finances and where the money is going to come from. All they've said is that this will free this venture capital unit up to raise capital from external sources, and that obviously implies that they're not going to give it as much money as they had in the past, if at all.
Ian King, always the latest on Intel. We thank you. Coming up, did Elon Musk just cheat Twitter shareholders out of more than $150 million? The SEC claims so. We discussed the alleged disclosure violations that happened way back when he spent more than $40 billion on Twitter. This is Bloomberg Technology.
Folks need investment solutions to achieve the most important milestones of their lives, and we have to be innovative to meet that need. At Franklin Templeton, we've needed some unique types of financing structures to be able to evolve our solutions, and Wells Fargo has been really agile in being able to build those for us. We're leveraging technology that enables us to customize portfolios to the individual's goals. We're invested in those areas of disruption for the next generation.
It's the Lazy Boy clearance event. We're clearing everything out store-wide. Save up to 50% on closeouts, overstocks, floor samples, and your new favorite nap spots. All the comfiest Lazy Boy furniture is all on sale during the Lazy Boy clearance event. Save up to 50% with deals direct from our factory to your lazy space. Get our best offers on your favorite Lazy Boy furniture. Hurry, deals like these won't last. Lazy Boy, long live the lazy.
Buffet Retirement Community in Darlington has been helping seniors thrive since 1960. The new rehab facility is a wonderful addition to Buffet's roster of amenities, such as the Aquatic Center and Memory Care Unit. To find out more, call Buffet today to schedule your tour.
I'm Greg Rolls, and when I went to Shade and Shutter Expo a couple years ago, I needed help with 3 different things for my outdoor space. The answer? Roll down porch shades. Roll downs keep the pollen off the patio furniture in the springtime. When it's hot in the summer months, we're as cool as a cucumber thanks to those same roll downs. And when the temperature outside drops, those same porch shades keep the heat in, which means year-round comfort. Basically, I've gained an extra room in my house, all thanks to the experts at Shade and Shutter Expo.
At Song Station, we bring you to the top vineyards, the best winemakers, truly unique wines. Our experts have tested and curated an exquisite selection. Join us and drink like a true connoisseur.
Like no one else. ETF IQ, Mondays on Bloomberg.
Elon Musk is being sued by the U.S. Securities and Exchange Commission. The SEC is claiming that the tech billionaire cheated Twitter shareholders of more than $150 million by waiting too long to disclose his growing stake in Twitter as he prepared a takeover bid. For more, we're joined by Bloomberg's Nicola White here in Washington. Thank you for all your reporting on this. This case has been building for a while, and yet it did not end the usual way that a lot of these do, which is with a settlement announcement too.
Yes, and I think that's pretty on brand for Elon Musk, right?
Yes.
Yeah. So Normally, these kinds of cases are usually settled because they are, even though this has generated tons of headlines, it is a very, very straightforward case. Did you file this form or not? And did you do it on time? And Elon Musk did not, according to the SEC. And not only did he not file it on time, he did the wrong form. So the SEC said in the process, he made $150 million. And, that really didn't go over well for the rest of Twitter shareholders.
$150 million, not so well for Twitter shareholders, Nicola. You've done the maths. Alex Spiro, of course, the lawyer for Musk, is saying this is a sham. Ultimately, he was just a day late. He didn't mean to be doing any of this. And usually you get a sort of $100,000 fine. Not a lot more than that. So can you just take the other side of the question here? How much do we know that there was intent?
Well, there's lots of questions we don't know, right? But according to the SEC, he knowingly was stockpiling all this stock while he was also considering a takeover, a very, very, as it turns out to be, very public takeover bid of Twitter. And while he was doing that, that triggers just straightforward SEC disclosure requirements, and he didn't do it. And that's where the SEC it comes down to a black and white case of did you do it or did you not?
Nicola, in fighting this, is Elon Musk hoping for a better deal under Trump? Trump has picked Paul Atkins, who has railed against enforcement and what he sees as high penalties in securities cases. Is he likely to get a better hearing with the new administration and new SEC chair?
One would think that would be the case. But again, there's a lot that we don't know because when it comes down to it, this is a pretty straightforward case. The SEC could have taken a more controversial angle. They could have said, you committed fraud, you allegedly committed fraud, and they didn't go that far. So it's a strict liability case, as it's known in securities law. Did you do it or did you not? So some securities lawyers that I've talked to have said this is, again, pretty straightforward and may not be such a controversial thing for Paul Atkins to pick up. Now, Paul Atkins is on record over his years and years in the public eye of advocating for lower penalties. So who knows?
Nicola White, we'll stay across it. We thank you. Meanwhile, let's talk about another Elon Musk company, SpaceX, continuing to make strides in rocket launches. The company successfully launched a pair of commercial satellites carrying 2 lunar rover probes headed for the moon. Here with more on the commercial space race, Chad Anderson, he's Space Capital Managing Partner, joining us now. And look, we have perhaps got a slight pushback in the next SpaceX launch that we're anticipating. But let's just talk about these lunar rovers in particular. What does this mean for the space industry?
Sure. 2025 is going to be a massive year for the space economy. And you don't need any more proof than what's happened in the first couple of weeks, right? So yesterday, SpaceX launched 130 payloads, different satellites to orbit on a transporter mission. Our portfolio company has made up half of those satellites, so that was a lot of fun to watch. This morning, they launched 2 lunar rovers on the same rocket, one of which is a Japanese lander, and another is Firefly, based in Texas. And they're robotic precursor missions for NASA in basically with sensors to do exploratory work in preparation for humans to go and land there. And there's another lunar mission that's launching next month. So while these landers are on their way to the moon, we're going to launch another one as well. And like you mentioned, it was supposed to happen today, but it looks like weather's pushed it till tomorrow. SpaceX's next-gen launch vehicle, massive, fully reusable launch vehicle. It's going to bring the price of accessing orbit way down, is going to transform the space economy and really accelerate all this growth that we're seeing so far.
So Starship, we wait, we watch. We also anticipate 1 a.m. today, New York time, where the Blue Origin, which competes against Falcon 9, maybe a bit bigger in terms of payloads, is actually going to get up with its test flight.
Yeah.
What does that mean, this sort of introduction of yet more competitors in the space?
Well, this is really important because at the moment, SpaceX dominates, right?
Good for you.
Yeah, it's great for a lot of people who are invested in the company. They are launching the majority of rockets. 2024 was a record year. SpaceX launched over half of the global launches last year. They launched over 90% of all the mass that went to orbit went through SpaceX, right? They are the best option on the market. And in some cases, the only option on the market. So to have other players and other competition is going to be huge. We've been looking at the interesting thing between SpaceX and Blue Origin is just, you got Bezos and Musk, right, 2 cent billionaires. But and the companies were founded at the same time in 2002. Up until a couple of years ago, they had invested the same amount of money into both companies. And you look at what SpaceX has done over that period, right? Just really dominated the market, enabled all of this entrepreneurship, innovation, and private capital. Meanwhile, Jeff Bezos has been launching these sort of luxury trips to the edge of space with these small rockets. New Glenn is their vehicle that is going to launch satellites and enable them to do all of those things like lunar missions and everything else that Blue Origin wants to do. So it's really important that they get this vehicle up, and it's really important for the rest of us because competition is good. It ushers in innovation and brings prices down for everyone.
Chad, what do you see the incoming Trump administration doing to help foster the space industry from your standpoint? And what are some of the things you would like to see the new president do when he takes office?
Well, I mean, we certainly expect to see a greater emphasis, a greater promotion of the space economy, a greater integration of commercial capabilities into government programs. I think we've already seen in this transitionary period the geopolitical turmoil. I think a lot of that's going to spur additional growth in defense spending, a lot of which is going to go to space companies. There's going to be an increased reliance on the providers that have the capability. SpaceX again is chief amongst them. They're most likely to benefit here, not just because of his first buddy status, but also because they have the best solution on the market. And again, in some cases, the only solution on the market. So the government is going to rely even more heavily on Starshield and their government businesses, but others are going to benefit as well. With more competition coming online, more novel, new capabilities, we do expect to see streamlining of regulation, and pro-growth stances to really help some of these new and novel space capabilities come online this year.
Chad, let's talk about some of those regulations and some of the regulatory pressures that the industry has faced. What are some of the specific areas of relief that the industry would like to see?
Well, regulation plays a key role in a lot of space activities. Interestingly, though, the U.S. government has actually been very responsive to this. For example, I mean, there was an Australian company that launched a satellite that could look up and evaluate and see other satellites and what was going on there. You couldn't do that in the U.S. and many other countries, but there was a regulatory loophole in Australia that allowed them to do that. As soon as they launched that satellite, the U.S. government responded and enabled U.S. companies to be competitive. And we're now seeing a lot of that data coming down. So we've already seen responsiveness from a regulatory front. I think an interesting angle here is that we expect to see a sort of about face on climate policy. And so I think climate solutions are going to be a key area for private capital, as they were during his last term, for companies to come in and provide innovative solutions funded by private capital.
Chad Anderson of Space Capital, we thank you. Coming up, Renee DiResta from the Georgetown McCourt School of Public Policy joins us on the future of content moderation next. This is Bloomberg.
Folks need investment solutions to achieve the most important milestones of their lives, and we have to be innovative to meet that need. At Franklin Templeton, we've needed some unique types of financing structures to be able to evolve our solutions, and Wells Fargo has been really agile in being able to build those for us. We're leveraging technology that enables us to customize portfolios to the individual's goals. We're invested in those areas of disruption for the next generation.
Everyone knows good things come in threes, like our eat, drink, and play combo for just $19.99. Maybe the saying should be good things come in 1999s. Maybe not. The Dave & Buster's eat, drink, and play combo for just $19.99.
At Bell & Bell GMC, driving the new vehicle you want has never been easier or more affordable. Right now, lease a new Terrain for just $269 a month and a KDF for $449 or a Sierra for $379. Experience the Bell & Bell difference today.
It's the Lazy Boy clearance event. We're clearing everything out store-wide. Save up to 50% on closeouts, overstocks, floor samples, and your new favorite nap spots. All the comfiest La-Z-Boy furniture is all on sale during the La-Z-Boy clearance event. Save up to 50% with deals direct from our factory to your lazy space. Get our best offers on your favorite La-Z-Boy furniture. Hurry, deals like these won't last. La-Z-Boy, long live the lazy.
Don't overthink it. A large one-topping pizza is only $9.99 at Papa John's.
3 different crusts, any topping.
Get the go-to that never gets old. Get a large one-topping pizza for $9.99. Better ingredients, better pizza. Papa John's.
News 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Now, as we all await a decision from the Supreme Court on TikTok, let's just look to the future of social media under the incoming Trump administration and perhaps an alternative to content moderation as we know it, middleware. It's essentially software built into tech platforms which gives users, rather than platforms, the power to moderate their own social media experiences. One of the people who've been looking into it, authoring on it, Renee DiResta, social media researcher at Georgetown's McCourt School of Public Policy and co-authoring the report on this very topic. And what's so interesting is where the examples are being used and technically what this third party would offer. So is it already being used in decentralized platforms like Blue Sky? And what exactly is it helping us do as a user?
Thanks for having me on. I'm excited we're talking about this publicly. It's been so much an obscure academic area of research for a long time. So middleware tries to give users the ability to better control their experience. The two areas that we talk about this really mattering in are content curation, meaning deciding what you're going to see in your feed, and then content moderation, so deciding what you are not going to see in your feed or what you're going to see less of or what might have a label over it. Middleware right now is most visible on Blue Sky because Blue Sky is providing an opportunity for users to go onto the platform and create their own feeds where you can subscribe to something like a topic where you say, you know what, I really want to follow a feed about my favorite sports team. I really want to follow a feed about like gardening, books, you name it. Somebody's created that feed and they've curated the people in it. And you can kind of add a little emoji to a post that indicates that you want it to show up in the feed. It's just a really interesting way to get more granular and have more control. And on the flip side, you can do the same thing with labeling. If there's certain people that you don't want to see content from, if there's certain classes of content that you just don't want to see, you can subscribe to a labeler and that labeler will label content and take it out of your feed or hide it from you. So it's a really interesting opportunity to go there and to have this much more modular kind of create your own experience.
Well, Renee, this sounds like something that would have a fair amount of appeal for users who've been frustrated by their experiences, especially in the last year or so on some of the major platforms. But there does seem to be a catch, and that is you need interoperability and you need the buy-in of those platforms. And the paper even makes note of that. How do you get past that hurdle?
Well, one of the reasons why we did the paper now is arguing that the adoption on platforms like Blue Sky or even platforms like Mastodon, which preceded Blue Sky, this protocol-based social media, provide an opportunity to experience it without trying to prevail upon the giants to do it themselves. There have been papers written about middleware in the past. Frank Fukuyama at Stanford wrote one in 2019, arguing that this would actually be a really effective tool to reduce centralized platform power, right? To devolve more power down to the user. I think you are seeing signs that platforms want to do that. You're seeing Elon Musk talk about giving users more control over the feed. You're seeing Mark Zuckerberg make some pretty remarkable pendulum swings in particular directions. That's alienating a large part of the user base, saying like, hey, actually here you can control it yourself. I think it's something you're going to see from them. They're going to start to try to opt in small ways and give users small opportunities. But otherwise, you're absolutely right. It is very much at the pleasure of the platforms that such a thing can exist when dealing with one of the large centralized giants.
And we've seen that some of those centralized giants that moderation has been a labor-intensive endeavor. How would middleware not suffer from the same sort of challenge? And who would do the heavy lifting?
This is where I think the trade-offs actually are, obviously. We're starting to see people in the community who are doing this as almost a labor of love for their community. It's very much like, hey, I, as a member of this community, maybe a marginalized community, don't want to see content from these people who I think are likely to harass me. And so, so you're seeing labelers exist to meet a very particular niche need. What we write about in the paper, though, is that ultimately you do have to create some sort of economic means by which it's not just a volunteer labor of love in order for it to scale in any material way. So we tried to present as balanced a view as possible. Here is a vision for what's possible in the world. Here are the challenges and the ways that we need to get past it. But I think, again, as you're noting, you're seeing a moment where people are fleeing, people fled X, I should say, on the left because they didn't like Elon's changes to moderation and the vibes that it created. People had previously fled to Parler and Truth Social when they were on the right and didn't like certain dynamics. So I think that you're starting to see users begin to realize that they don't have to commit to one site. And this is where I think there's a real interesting opportunity moment.
And interesting. From the Georgetown McCourt School of Public Policy, bringing middleware into the broader conversation. We appreciate you for it. Thank you. Coming up, we're going to be speaking with Democrat representative of Illinois, Krishnamurthy. Is going to be joining us. Representative Krishnamurthy joining us on TikTok, the future of it in the United States. This is Bloomberg Technology.
Folks need investment solutions to achieve the most important milestones of their lives, and we have to be innovative to meet that need. At Franklin Templeton, we've needed some unique types of financing structures to be able to evolve our solutions, and Wells Fargo has been really agile in being able to build those for us. We're leveraging technology that enables us to customize portfolios to the individual's goals. We're invested in those areas of disruption for the next generation.
Imagine a healthcare system that doesn't give you a headache. Welcome to AI Needs World. So how does the Dell AI Factory with NVIDIA help healthcare organizations jumpstart their AI journey?
Remove that complexity so healthcare organizations can quickly implement the technology to get moving on solving the important problems in healthcare. Integrating AI is easier and faster than it's ever been, which makes this a perfect time to accelerate your business.
It starts as an idea. It turns into a plan. What are we waiting for? From constructing a better life to planning your future home, to expanding your success. With Bobcat Motors, you got a ditch digging, foundation laying, business plan, game for anything powerhouse. This is more than a machine. This is your
All right,
game
we're
changer.
back.
To build the world you want to live in. Bobcat, one tough M.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal making.
Though a 2011 review from the FDA did not find a causal relationship, Sarah.
It feels like they're front running RFK Jr. on this one. This was
absolutely.
definitely something that he was talking about. Thank you very much, Lavelle.
All right, it'd be nice if we could get a follow through and a higher low, a B pivot. So I'm looking for a B pivot right now. Okay. That's your A pivot right there. Right up against supply, 59.50. Everyone knows that that's a level. Looking for B. Looking for B now. Okay, on the S&P. B on the S&P. All right, so Microsoft's still hanging in there. Microsoft pushing higher, even though they did announce some layoffs yesterday. Some took that as a negative. Turns out to be, I don't know, negative's a positive. Microsoft has some work to do, but today's reversal on Microsoft looking very strong. Back to the 50-day. So if we can manage to get above the 50-day, we might have a trade back up to 440, 434, 440, 456. That upper Bollinger Band as well. Futures still pushing lower. So Microsoft looks like it could work. I wouldn't buy anything right now. I'd look for BNC pivots going into 11:30. We're looking for pivots now. Okay. Let's see if there's anything I want to take off here. Okay, Apache. Let's take a look at Apache. Okay, so we're coming back pretty fast here on the S&P. Okay. What's going on with Supermicro? I haven't looked at that in a while. Supermicro just popped into my head. Supermicro. Okay, still got this little slightly descending 50-day moving average. Price is hugging it. Looking for an answer. Whatever comes our way. Here are the quantum stocks. Okay. Quantum. Let's go to the 5-minute. While we're waiting for the S&P to make a decision where it's going to stop. Okay. ARQQ holding up okay. IONQ at the highs. Tesla at the highs. Tesla looking good. Do I want to do anything with Tesla? I did take some Tesla off into strength this morning. I have TSLL. Let's keep going through this though. Quantum, QTUM back into the 80s. QTUM, the ETF. Okay. Google. All right, that looks okay. IBM. Filling the gap, IBM. Amazon. Okay, that pulled back a bit. Amazon, AMD. So right now, I would just be waiting for BNC pivots. Right now. Okay, so a lot of stocks popped up, so you don't want to be chasing the highs of the day. If they're going to stay bullish, I was just talking to my son about this. Okay, if we're going to get a follow through, it's a bullish day. If it's a bullish day. Okay, if it's a bullish day, you're looking for these BNC pivots. Okay, so what do I look for? I'm looking for buy order blocks. Okay, you got a buy order block there. Is it going to pull back and take that out? Broadcom, Netflix. Okay, Netflix is holding the highs. So Netflix has got a buy order block, but it's right below supply. So I'm not going to do anything there. Maybe this pulls back a little bit and we get a better trade. Microsoft, very strong today. There's your A pivot on Microsoft. So watching Microsoft. Okay, so Microsoft, that's your A pivot. For now, looks like an A pivot. Okay, I think you would agree. That's the high of the day. No surprise. So do we get a BNC? I don't know. Do we get below this? Maybe not. Maybe we put in another buy order block. We'll see. Looking for B. Okay, so you know what I'm looking for. I'm not interested in chasing. I'm only interested in buying on a bullish day like this. I'm only interested in buying B and C at this point. Okay, so here's Apple on the hourly chart. Let's look at the daily. Okay, the daily is bullish. Where did we get rejected? At the 50-day, right where everybody's told that you should take profits. If you've taken any kind of courses or you read any books, if you're below the 50-day and you go back up and retest it, you're looking to take profits. Everybody knows that. If you're above the 50-day, look for a retest and a bounce, like with, what was it? Tesla didn't get there, but it was close. Tesla came back to the 50-day, okay, the blue line, and consolidated. So this is still looking very good. What about Constellation Energy? Constellation Energy, we got a 20, 50-day cross. What's Constellation doing? Following through. What did I trade? I took puts, credit spreads, okay? So I made $218 per contract. I have 5 of those. I'll add probably 5 additional put credits. I'll probably roll them up as this starts to break higher. What's the catalyst? AI demand. They're trying to buy Calpine. I don't know what the deal is. I haven't looked at that. But I know that they're trying to acquire Calpine to increase their supply capabilities. Okay. So do we see a BNC pivot here? Possibly. You got a bullish day, so why not? Why do you get an ABCD pattern? You know why. People that trade on the West Coast to get up at early, say 6 o'clock, they trade the open, 6:30 their time, 9:30 our time. They trade for a few hours, 7:30, 8:30, maybe they drive to work a half an hour away. So they would trade for 2 hours. What do? Before they leave, they take profits. So you get some selling. What happens? Around lunchtime, people on the East Coast, like myself, we're looking for BNC pivots. We're looking for a bullish day that pulls back and gives us the opportunity to take the trade in the evening session. All right, so we're looking for B. Do we get down here? I don't know. It doesn't look like it. Constellation Energy looks very strong. I have no shares. I only have put credits. Okay, only have put credits. Okay, 250. I got to keep this down here so everybody knows what I'm doing. 250. Let's expand this a little bit. There you go. That's better. Okay, bullish assumption. Bullish assumption. What's Google doing? Google, I have a iron condor on Google. Was Google the one you mentioned, Frank, that IBD mentioned as an iron condor? I think it was Google, right? Wasn't it Google? Let's take a look at Google, different chart. Google, bullish day on Google, but it's in the Bollinger Bands, and it's been contracting, consolidating, if you will. So Google, I sold an iron condor. Did I mark this up? I think I did. Yes, they are. You're really skilled at it, too. Tesla, often. Meta. You trade Meta, right? Yeah, you're really skilled at the ABCD pattern. Quite a few of you do. Leastar does it a little differently. With 50% Fibonacci's. Yep. I mean, when something works more often, like 90% of the time, if you see a B pivot or a C pivot, BC pivot, if you see this, very often stocks will follow that pattern, especially if it's a big cap name or stocks that have a lot of volume, that have a lot of coverage, if you will. Sometimes they're a little harder to trade as far as big moves, but you need more pump on Tesla? Okay. All right, so ABCD patterns, we're always looking for that. After 11 o'clock, you should always be looking for BNC pivots. You should not be chasing anything. Apple's bullish, right? Apple's bullish. So what do? We wait for a BNC pivot. It looks like it's starting to form now. Okay. LA likes to trade Tesla. BNC pivots. You got a bullish day. You're above the 9 EMA. You're about to push through the middle of the Bollinger Bands. This is looking pretty good. Bollinger Bands are telling you where to anticipate price will stay for the most part. 470 on the upside, about 355 on the downside. It looks like we have a bullish follow through to look forward to this week after being bought on Friday and then into Monday. So we're looking for momentum to say, okay, this looks good. Stochastics looks good. Stochastics is telling you literally by design, look for closes in the upper half of the daily range. When this line is rising, when it's falling, you're looking for closes in the lower half of the daily range on average. Okay, so you know how to trade it, what direction. So in this case, stochastics is starting to rise from oversold. MACD's turning, telling you the momentum is shifting to bulls. So therefore, with a bullish day, you want to look for a BNC pivot. Now, I don't know if we're going to get much of a pivot here. Looks like we're going to keep moving higher. I have Tesla TSLL, and I'm holding the 30-35 call vertical. So I want this to move higher too, Tony. Okay, I want this to move higher as well. I hear somebody breathing. Is that my cat? Where are you? Oh, I don't see it. So Tesla looks good. B and C pivot. Okay, all it make, if let's say you've had a bad, I don't know, a bad December. I'm just hypothetically, or a bad first few days of January. Okay, whenever you have a bad day, what you want to do is step back and say, okay, just remind yourself of this one premise. It only takes one good trade to get you out of this funk, right? You might sense that, okay, I need to back off. I'm doing something wrong. Maybe I'm buying the highs over here on Tesla, hoping that it's going to keep going. Instead of, if you got it at the open, that's one thing. But if you're getting it up here, like around 10 o'clock, 10:30, and it's already starting to show signs of slowing down. Now, I don't know where Tesla's going to go, but maybe not chasing is a good idea. It only takes one good trade. So tell yourself, okay, it's already 10:30, 11 o'clock. It's almost 12 o'clock. Then he said, look for B and C pivots. Okay, just remind yourself of that. B and C pivots. Doesn't take a rocket scientist to see this pattern happening over and over again. So for one good trade, let's say I just want to do a scalp, or maybe I want to take a new swing. All right, so I'm going to do both. So with Tesla, but they both apply. With Tesla, I'd be looking for a B and C. So it looks like a very shallow B right there, okay? And C, a higher low. Let me see if I can do this here. Tesla. Okay, so you can see right now, let me go to the 1 minute chart. And we got buy order blocks, which is even better. Okay, so if we get through this level 417, 418, Tony, SMU, does that stand for Southern Methodist, by the way? SMU, is that Southern Methodist? Yeah, I can imagine. I imagine you've got it down to a science, that's for sure. Yeah, cool. So here's Tesla. Okay, so it's very clear what's going on with Tesla right now. Tesla's a bullish day. Check. We've seen the high of the day. Check. That's A right there. Okay. Does it mean it's over with? I doubt it. We do have the 420 call wall, so that's a impediment short term. Okay. You got 1, 2 bullish buy blocks. Okay, they're green. You got a sell order block overhead that came in right around 1040 as this started to ease back. So we got to get above that level. If we get above 417.50, we'll more than likely see this sell order block go away because they'll chew through that supply. Stops will get taken out. we almost have an equal high right here. But to stick with what I'm trying to display is here's A, here's B. Okay, there's a 1 minute chart. And C. Okay, it looks like C over here, higher lows. Okay. So if we get a push through 417.50, you're going to see this move higher. So one good trade. So Vinny said, okay, I want to go long. I want to look for a stop underneath B, or in this case, I probably put a stop under C because this is like C here and C here. It's a higher low. Okay. C1, C2. Let's see if we can get through here. Now, the problem we have is we have supply right overhead, most likely 420. So that's just Tesla. Okay, so let's look at another one, Apache. All right, so I have 500 shares of Apache. That's pulling back right now. Does that during the day a lot of times. Okay, but it's bullish. Nice follow through. Okay, I'm going to take a little bit more off here for the time being. Okay. Okay, so a little bit more of Apache. I'm looking for a BC pivot. Okay, so I'm looking for a BC pivot. This is the high of the day. Same thing. You got a bullish day. Check. You got buy order blocks. Check. You've just now put in another high. It looks like this is the high of the day. Right here is A. So now we just sit and wait. Okay, so I took a little bit off right there. Probably going to bounce. But if it drips a little bit lower and I get a B pivot here, that's what I'm looking for. Okay, we started off the day right there on that buy order block. Okay, you see it? Right there's that buy order block. That's the start of the day. So I'm looking for B. Bollinger Bands are fairly tight, so that's going to be okay. But look at TTM. TTM is squeezing, as you can see with Bollinger Bands. Now, if this goes back to cyan and we get a B pivot, then we'll look for a move to the upside. Let's look at another one. Let's look at Trump Media, because I have a position in Trump Media. Okay, so already you can see this is buy order block yesterday in the last hour. You got a buy order this morning at 11 o'clock, just a little while ago. You got an A pivot. Okay, here's your A pivot. Here's your B pivot. And buy order block. Bollinger Bands opening up. There's your first cyan bars right there. So this is a go right now. Trump Media. Let me see if I want to go buy some more here. Let me see what my position is. Trump Media. All right, already got 300 shares. Do I want to add to this? I could, or I could sell into strength. Trump Media. I don't know. You look at Trump Media on the daily. Let's look at the daily time frame, okay? Because this is really, I think this will say a lot for what could happen, not what will happen. But look over here, okay? Different pattern. Trump Media, different pattern. We were pulling back, and then we started to rise. We broke above the 50-day. Okay, so what I'm looking for right now is two things. I'm looking for a very similar volume profile to start to pick up like it is now. I'd like to see more volume today. And we're above the 50-day. We're above the volume by price band, so that's telling me where most of the volume is traded is right underneath basically the 50-day. So I can say with pretty good probability that most likely we're going to just gradually grind higher. Now, what would be good to see would be volume pick up and price start to take off and take out this pivot. Once it takes out that pivot, that's going to be my first thing that I want to pay attention to. So let me put an alert here right there. This is due to calculations being based on the linear scale as opposed to logarithmic one. All right, so let me switch to logarithmic. Okay, I don't know Thinkorswim that well. How do I switch to logarithmic. I gotta believe it's up here somewhere. Chart, candles, okay. Range. If you guys are listening, how do I switch to logarithmic? Logarithmic. So over here somewhere? I don't know. I'll do that later. But Dow Jones. Trump media looks like it's going to continue. Now, it's starting to hesitate as it's moving into this high right here. So what do you think is happening? What I think is happening is people that bought the high of the day have been freaking out for the last hour, 2 hours, and are looking to break even, okay? So some of these people will sell, and then we'll see price pull back a little bit, maybe, and then resume the trend up. Okay, so that'll be your C pivot. So that's what I'm looking for right now. Will it happen? I'm looking for the evidence. Okay, so, but in the back of my mind, I know that ABCD pattern is probably going to work, and that we're looking for. Okay, so you didn't see that. All right, so here's A, here's B. People got stuck. They're probably going to sell some into this because they realized they made a mistake by buying the high of the day because everything was popping. Okay, so that's the other thing. Okay, so that's a good point. Thank you. Thank you for pointing that out, LA. The other thing is, okay, here's Microsoft. Microsoft is up. So there's a couple of things you need to pay attention to. Number one, you're starting off the day. Now, LA will do the whole list, and he'll go through every single stock with an ATR above and below, right? You look at above and below. The closing price from yesterday. So we see that probably don't even need to look at it, but $10.60, $10.80. So we look at the ATR. What does the ATR tell you? $8.40. So a lot of people bought Microsoft today on the dip, but it's beyond its ATR. Now the ATR is starting to climb, but is it at 10? No, obviously this is a lagging indicator. But if you were to buy it right now at the 50-day, I think that's a mistake. Will probably be proven to be a mistake. This is an expansion day, most likely, but we still have the 50-day as resistance, right? So Microsoft more than likely is going to move above the 50-day. Now, because it's already traded beyond its ATR, I won't touch it until maybe tomorrow, or if we get a BC. If we get a BC, we get a little deeper. We're probably going to get a BC right here. We'll watch Microsoft for a few minutes. We'll probably get a BC pivot, and we could day trade it, or we can take some options and trade it off of a BC reversal. Okay, let's look at Meta. Meta's already at its ATR. Okay, it's holding the highs. That looks pretty good. Okay, so Meta, $21. Wow, $21. Meta's 21. Okay, here's $18 ATR. So you're already $5. No, you're already $3 over. Can it go? Sure, because Bollinger Bands are tight. This could expand. We could see an expansion day. A lot of things could happen, but the probability is we're going to see a little pullback, and that'll give us an opportunity. We're going to buy a B and C pivot. It's already starting to pull back. I mean, the reason why most of the time it does is because people are taking off and going to work, or think about Hawaii. What's the time difference in Hawaii? It's 5 hours, right? Something like that. So, yeah, if they get up really, really early and then go to work, let's just stick with the West Coast for now because that's pretty easy to understand. You get up at 6, you trade from 6:30 to say 9. No, 6:30 to 8, and then you take you go to work, and then you get this little fade. Right now, we're just watching Meta. Okay, you've been in SPY puts. Good. Okay, so SPY, that's another one. Okay, so SPY hit the high It's not dropping precipitously, but we want to see watching for a C pivot here on Trump Media. We want to see price get above 59.50. All right, so we hit A. We got rejected right where we thought we would get rejected, unless we got above it. So we gapped up, we ran higher, we hit the 59.50. You know, there's a calls and puts there. We need to get above it to be risk on. So you can see in the right side panel that we went right up to the 50-day and got rejected. First retest of the 50-day since we dropped below it a week ago. So there's probably a lot of people that are still looking for more downside. Okay, you got a B pivot on Apache, by the way. Apache, you got a B pivot. Okay, so what I want to do is I want to sell some shares and I want to buy options. Okay, I'm going to take the profits. I'm going to buy options in the money and look for this to continue. I don't want to say hope because that sounds like don't know what I'm doing. Oxy, I'd like to see that continue. That dipped this morning, but it's been an inside day, 2 days. So we're looking for Oxy to continue along with ConocoPhillips. ConocoPhillips looks okay. It's above the 50-day. I have positions in both and Apache. Some platforms still call this Apache, by the way. I think Stock Charts calls it Apache, no? Or is it APA? APA. No, they call it APA Corporation. But some platforms still call Apache, APA. They got woke and changed their name. I have friends from the Midwest, actually over by South Dakota, that are Native Americans. They want to be called Indians. They like Redskins. We were having this conversation over beer last time I was up in Jersey. It's been a while. You know, we're talking about football teams changing their names, Redskins. I mean, think about the Indians that used to attack the white guy, right? Out in the West. I mean, we're joking around about Custer's Last Stand and everything. Anyway, kind of get off the subject, but looking for ABCD patterns, looking for a follow through. How did I get onto that subject? Oh, Apache. Okay. So, you know, it's kind of like that Bill Burr skit where he's talking about, you know, the basketball owner. What was it? The Cavaliers? Not the Cavaliers. It was out in LA, right? His wife was dating a black guy. And he said some stuff and it got onto social media. What do you think the guy's going to say? He grew up in the 30s, 40s, right? These days, people in their 30s and 40s are much more sensitive to, I don't know, the words they use. People of our age, we just say whatever the hell's on our mind. You see that from Trump a lot of times. Anyway, looking for futures to turn. I'm watching Trump Media, kind of getting off the subject. That happens. Let's see, Trump Media, TJT. Okay, so looks like we're starting to form a C pivot right now, okay? So I might double up on my position for a day trade with the ad, okay? So Trump Media, currently all I have are options, I believe. Yeah, the 31st, January 31st, I had the 43 call, and let me see what the delta is on that right now. Trump Media. By the way, don't be offended by shit that I say. I say some stupid things sometimes, you know. I'm here for the best intentions. I want to make you money, and occasionally I say things that might offend you. Don't get offended. I can't tell you not to get offended, but you know what I mean. I don't mean it maliciously, as Bill Burr would say. I love him as a comedian. It's just comedy, you know. All right, so Apple's going to give us a BNC pivot most likely. Big bullish day today. Tesla's holding the high of the day. Tesla probably has the best probabilities right now. Tesla probably has the best probabilities, the way it's holding at the highs. Okay. So A, B, C1, C2. If this takes out the high of the day, Tesla's probably going to run. Let's take a look at money magic levels. You should always, like, for example, I'm looking for the breakout, but I know I'm at supply. Okay, I know already. 420 is the call wall. So dealers, as you know, I've repeated myself many times, dealers have the incentive to keep prices below 420. Why? Because they are short those calls. You're long the 420, they're short the 420. So when it gets above 420, you get a short squeeze. The dealers have to hedge. The way they usually hedge is they buy shares. That creates an uplift. They move higher. The higher it moves, the more calls people buy, the more the dealer has to hedge, and so on until it dissipates. So can we see a breakout above A? Probably. Probably. Bollinger Bands are tight, though, that's for sure. These do fail, by the way. These do fail. So I would have a stop underneath B. Okay, your stop goes right underneath B. Okay. So if you can't handle a $5 move in a $400 stock, you're probably trading the wrong stock. Okay. I'll repeat that. If you can't handle a 5-point move in a stock when it's $400, you should probably be trading something in the 50s, 25, between 25 and 50. That way your stop is $1 and you don't have as much pain to deal with. With these, you often will see a move. You can see the high was right there for 1870, and that low right there was 412. That's a $6 move intraday. Okay, watching Tesla, watching Trump media. Let me put that over here so I can watch it. Trump DJT. Let me put CNBC on. I hope on my rambling there was some help with the ABCD patterns. I know I tend to ramble sometimes. I'm a rambling man.
And maybe we needed to be reminded of that. Absolutely, and I think what it does is
Tesla, watch Tesla. It looks like it wants to go. Do I want to buy it here? No, because you got the 420 call wall right overhead. If anything, I'd probably be looking for a fade from 420. We're so close to it right now. We're trading 417. We could see 3 points.
From a hedge fund manager whose name I will leave out of this conversation. But what was said to me was, how are you going to feel when you just said on CNBC, you think we're near the high for yields, and CPI comes out and the 10-year is approaching 5.25? And I just respectfully disagreed because I don't think there was enough fundamental evidence to
Let's look at the 10-year. 10-year, nice drop here.
positioning. And I think the market got exactly what it needed. When I say the market, the equity market.
Okay, let's look at junk bonds. Junk bonds is something I check as well. Junk bonds. If you just get into this habit, look at junk bonds. Wow. Junk bonds.
Short treasury position right now. I think you want to take a look at some areas in the equity market for opportunity. And I will tell you, I think the NASDAQ, which is now the leading index performance-wise today, I think that's one place you could look.
Weiss, this took the heat off the yields for certain, and maybe it took the
Junk bonds. Risk on. Junk bonds.
The Fed may only cut now once this year, and it may stand pat for many, many months. Morgan Stanley today says the print is consistent, the CPI print, consistent with our call for a rate cut in March.
All right, Trump media trying to go.
Expects anything this month.
Tesla.
And they may not expect anything in the reading after that.
Trump media. Okay, the high of the day was right around 42.25, 42.25.
Until you get clear relief from hawkish policy. What do you think? I mean, today and yesterday, PPI, CPI, the drop in rates, and the reaction in the stock market is not an accident given what happened.
No, it's not. It's not. Plus, there was so much selling going on that it was not unexpected or a good number for it to move like this. But you have two different views here. You have Liz very modestly not claiming victory, and you have Joe very immodestly claiming victory and slapping down an unnamed hedge fund manager. But that's today's news. If you take a look at the jobs,
In character for both, by the way.
very much in character, very much so. And we'll talk about Joe T later. Coming
We
from
will.
him, but
Yeah,
sure, right? But
Well, that's why we laugh.
but when I look at the jobs number,
Yeah, they need to do a recall in LA. Rick Caruso, he built the Pacific Palisades. I'm very aware of that.
So look, I'm not a seller. I'm not bearish. I'm not bullish. I'm wait and see. Now,
Yeah, no, I agree with you 100%. I agree with you 100% there, Corey.
until the last day of the month. So right now it's going to be all about earnings with the inflation news out of the way. And I think earnings.
All right, so watch Apple. Apple's starting to show a B pivot. Okay, looking for a B pivot here on Apple. Okay, we need to see a buy order block. Probably won't see it for a couple of minutes. Here's A. Okay, B. So you didn't buy the high. You're going to get a nice entry. Let's see. Let me take some Apple here. Apple. And I'll put a stop underneath here. Apple. All right, the TTM starting to turn. Bollinger Bands are starting to contract. Okay, so I can afford to wait a couple of minutes. While Bollinger Bands contract, the IV won't expand that quickly. I can get a decent entry. Apple really isn't moving that much today, so maybe I don't want to take Apple. There goes Tesla. Tesla going. Tesla going.
So I think you're right, but I also think that we're talking about small things when there's actually something very big at play.
Tesla's going.
We think back to the past year, the Fed cut
Booyah.
times. They cut 1% out of Fed funds rate.
Okay, Tesla going. Okay, cool. I sold my shares of Tesla into strength, and now it's starting to break out. I do want to buy some more Tesla shares, TSLL.
So actually the rates that have economic impact, that actually are meaningful for earnings, for the health of the consumer, didn't go down when the Fed cut rates. So to me, I don't really care that much right now. If the Fed cuts rates 1 time or 2 times next year, what I really care about is real interest rates that have an impact move. And you know why I think those are staying higher? I think those are higher because we can trace the rates back to October of 2023 when we saw the 10-year hit 5%. Why did the 10-year hit 5% then? Because people were freaking out. U.S. creditors were freaking out about our lack of fiscal discipline.
Okay, Tesla. Okay, Apple. Can Apple get some? Okay, there goes the futures. ES turning.
So like lovely that we're seeing CPI and PPI get a little better and maybe the Fed cuts rates again. But that doesn't actually influence valuations. It doesn't actually influence the health of the consumer or the corporation. So we need something much bigger to start to trend in a positive direction. We need something much bigger to get fixed. Inflation like that's little, that's short term. Fiscal discipline.
Okay, Apple. What do I want to do here, Apple? Let me just take a look at the implied vol. Probably going to do fine. Trump media, watching that. Apple. Turning. Okay, on the daily, Apple on the daily is a buy signal. Ready, aim, fire. And TTM most likely will start to turn now. That ready, aim, fire. One of John Carter's scripts. Great programmers over at Simpler Trading. Apple looks like it's going to go. Okay, enough talking about Apple. Let me take some Apple. 30 Delta, that's really low. 30 Delta for Friday. Let me go out one more week. Let me go to the 24th. That way I have some time. The 50 Delta is $3. 40 Delta is $2. Okay, let me do that. Let me buy the 40 Delta.
Experience in terms of where these stocks are trading, where pretty much been thrown out the window.
240, 40 Delta.
I'm not
$2.
I mean, there are those who say you could easily justify the valuation of the market.
I'll give it 50
if
cents.
earnings expectations come in, if not get even better.
Tesla looks good.
But historically, yeah,
Tesla, I want to buy more Tesla shares. I sold many of them this morning. Most of my position, I'm going to buy some back. Probably should have done it a few minutes ago while I was yapping away. Tesla, B and C pivots. There goes a buy order block right there.
What we haven't accounted for, I don't think, are the tax cuts that are probably coming, the regulatory changes that are definitely
In the
coming,
first 100 days.
and the animal
Day
spirits around deal making
But I'll
that
argue with you on tax
is
cuts.
coming as well.
Because tax cuts are just extensions of current tax rates,
Yeah,
right?
okay.
So there's actually no economic impact.
Hang
if
on
they're
your
just
thought for
extended.
just a second. I have some breaking news I want to get to Eamon Javers for. Eamon, what do we know here?
Scott, Israel and Hamas have agreed to a ceasefire deal that will bring to an end more than a year of fighting in the war-torn area. According to NBC News, this deal reached just within the past couple of hours, finalized just within the past couple of minutes. NBC News saying that an Israeli official briefed on the talks says a deal has been reached. From a source briefed on the talks, Gaza ceasefire and hostage release deal has been reached following Qatari prime minister's meeting with Hamas negotiators and separately Israeli negotiators in the office. NBC's Keir Simmons reporting that a Hamas official named Basim Naim tells Keir that the agreement has been reached. So that is a watershed moment, and we'll wait for details in exactly how these hostages will be released and how this ceasefire will be put into place. Scott, the expectation here is that the hostages will be released in a series of tranches. And so one of the big questions here domestically will be about the fate of any American hostages included in this deal, when they might be released as part of this. You saw President-elect Trump last week, Scott, say that all hell would break out if there wasn't a deal to release American hostages before he is inaugurated on Monday. That seems to now to have come to pass. Again, we're waiting on some more details in terms of the technical aspects and timing aspects of when and where. And
Yeah, that should be worth a few points. That's probably, I mean, that was agreed to a couple hours ago. So I would think that it's already being forward looking. I think the market's probably already anticipating that this is the case. Looking for Tesla to keep going here. Tesla.
Occupied Gaza, enormous destruction and loss of life in that area. All of that
Apache.
now coming to an end, and it would seem that Israel would have a bit more of a free hand to operate in that area going forward. Victory politically now for Bibi Netanyahu. We'll see. We expect to see Joe Biden, President of the United States, until next week, talking about this at some point today here in Washington. And then, of course, we expect to see President-elect Donald Trump speaking about it as well at some point. President-elect has put out a statement on Truth Social. His statement saying, Scott, we have a deal for the hostages in the Middle East. They will be released shortly. Thank you. No details from President-elect Trump, when and where and all the specifics, but clearly a lot of celebration going on around the world, Scott, that this ceasefire deal has now been reached.
All right, Tesla, let's get going.
Thank you very much for that important update. We appreciate that. Eamon Javers down in Washington, stocks adding a little bit to the significant gains that we've already had throughout this day. I certainly can see it through the major averages. We came on the program. I told you we were about 1 1/3% higher across the board. NASDAQ was the outperformer, which it remains.
All right, I added some call verticals to Tesla rather than buying shares. I'll just take the profits.
Develops throughout the remainder of the day. I cut you off because it was important news to get to. But you need earnings growth to live up to the hype. You're looking for low to mid double digits for the remainder of this year. Banks today, which haven't always come out of the gates like rocket ships, certainly look pretty darn good today.
They do.
Don't you think?
Sorry, I'm a little emotionally overwhelmed by this hostage release, and I sure hope those increments are in 15 minutes, not days. They've been through so much. Yes, bank earnings. Sorry. Do you want to go to someone else for a minute? I'm emotional here.
Yeah.
Bought some more of these Tesla 56 Delta. I bought the 56 Delta, sold the 41. 30-35 call vertical. I could always roll those calls that I sold at 35. I can roll those up as we start to move higher, give myself more profit, make it a calendar.
These are bank stocks and not mid-cap
I know you don't often see these kinds of things to begin with on an individual day, but the history.
Okay, let's go back to the S&P 500 because we want to see that rally take us back above 59.50. All right, so we got our B pivot. Okay, so you can see that we've made our B pivot. What time of day? This time of day is when we look for it. Okay, this is nothing new. People have been trading this pattern for a long time. They understand it.
It's interesting because you talk about earnings growth, and that's exactly what you need in 2025 to extend a valuation that's a rich valuation on the S&P 500. You have to have that earnings growth. I'm not necessarily sure that the conversation about what's the right interest rate for the economy, what interest
Yeah, it
rates
looks
to
good.
apply for the economy, I don't know if that plays into a lot of these companies that we're going to be analyzing their earnings growth, and particularly when you think about tech companies, right? Tech companies, they don't care about, or they don't have the need to access the cost, the capital market for the cost of capital. They don't care if it's higher. So in the case of these financial institutions, net interest income, remarkably strong, volatile trading environment that's going to benefit names like Goldman Sachs and the exchanges. The financial sector is in 2025 an extension of what it was in 2024, which was a surprising sector to have ownership.
And keep
I
in
don't
mind,
think that
Joe,
changes.
keep in mind that we've been talking about regulation in terms of M&A, in terms of environmental. The banks are one of the most regulated, if not the most regulated.
They would tell you that.
Exactly.
So the cows come home.
Yeah.
They're going to be able to theoretically lend a lot more freely than they have been able to in the past. They're going to be able to return capital to shareholders in a way that they probably haven't been able to do. The shackles may be coming off in that regard too.
Exactly my point. So that makes them more attractive. That should increase the multiple that you pay for these companies.
So, okay, back on my feet.
Okay.
So right when we left off too, and you were saying like the regulatory environment, and this touches on this. What I worry about as we go into next year is that there is so much hope for this wonderful like regulatory environment where regulations decrease, oversight decreases, but there are thin majorities in the House. There's thin majorities across Congress. What if things don't get done? And one of the things that I wrote about in my notes
Is it gridlock good?
Okay, S&P looks good. All right, B pivot. Looks like we're going to continue. I'd like to see it C pivot and then look for a follow through.
And in that 21.5 times multiple is the thought that there's not going to be gridlock anymore.
KBH higher. By the way, I've been in Pulte Homes since Friday last week, whatever it was. Thursday last week. I think it was Thursday actually. Pulte Homes, might have been Wednesday. Pulte Homes, nice follow through on Pulte. Okay, this Pulte Homes. Pulte Homes. I bought this last week, up handsomely. That position's working well. Hindsight, I wish I had bought more, but I didn't buy a lot because I don't like buying these lows like this until I see the break higher. And if you wait for the break higher, then you're paying higher implied volatility and more for the premium. So I bought a smaller position than I normally would. I would normally look at about 10, 15, 20 calls. So I only have 5. And while that's doing well, obviously I wish I had 20. Now it's working. RSI is rising. MACD's crossed. Stochastics, what is it telling you? Look for closes in the upper half of the daily range. So even with Pulte, this is a ABCD pattern, right? Here's A over here. Looks like B was right there around 9:45. C is a little bit higher. Now, if we can get Pulte to just follow through, that'd be great. Now, KB Homes reported earnings, what was it, Monday? And we gapped up on Tuesday. Still consolidating. What about Toll Brothers? What about HD, Home Depot? What about Whirlpool, which Paticus mentioned? Was it Paticus or it was it Lori? I forget. Whirlpool's still going. I know it was one of the ladies mentioned it in the room.
We'll show both of these names, and you can see for yourself.
I can check real quick. Whirlpool.
Those names better than 6%. Our resident shareholders.
Yeah, it was Lori.
Those stocks. Rob Sechin on Wells, Jim Whirlpool on Citi. Rob, to you first. Give us your read through on this report, and most importantly, in terms of
Whirlpool follow through
now we're in that stock.
yesterday. yesterday.
Love Wells. We own a lot of the names. I'm with Jimmy. We also own JP Morgan. And it's this combination of economic momentum, a steeper yield curve, healthy balance sheets, the positive and possible easing of regulatory burden, M&A, and all of the animal spirits that might get, released by the new administration. So the fundamentals are solid in the sector, and Wells trades at a discount to the sector 17 times. It also is reasonable from a price to book perspective, trading at a 20% discount to the sector. Realize that we're now back.
Okay, Kodak, I'm seeing puts being sold. Joe K talking about puts being sold, and that's bullish. Ooh, there it goes. Looks good. ABCD pattern, you're up at the high, so I wouldn't chase it up here. Kodak.
Businesses are killing it. Investment banking, loan growth, deposits steady, not seeing deterioration, and they're emphasizing operational efficiency. And I think when you marry that all together, this is a place that you can deploy capital still, and I think have that margin of safety as the rest of the sector maybe gets a little expensive.
Mm-hmm. Thank you for that. Appreciate you. Jim Leventhal on Citi. Interviewed Mike Mayo yesterday.
Oh, cool. Take some pictures. I haven't seen it in a while.
Is his number one pick, and it's probably been yours too. More so than many, to be honest with you, because of the belief that you have in Jane Fraser and the turnaround that she has been orchestrating at that firm. By the way, she is going to be on tomorrow with Leslie Picker exclusively at 1:30 p.m. Eastern time on the exchange.
Yeah, please take a pic. I haven't been there in ages. Good memories, though.
Simply put, it's hard to find a blemish in this report. Revenue is better than expected, expenses lower than expected, so obviously that's an earnings per share beat. The story for Citigroup right now is about profitability. Their profitability is increasing more than expected. We see that in the guidance they put out for 2026, return on tangible common equity of 10 to 11%. That compares to current estimates of 9.4%. So this is exactly what we want to see. Mike Mayo, you just mentioned me, he was on the call, and his question was, hey, I just want to confirm, we've got 3 years of increasing revenues and decreasing expenses. I think we know what his headline tomorrow is going to be. It's probably going to be hat trick with more to come. But, the business is still in transformation. They've got the earnings with which to do it, and at the same time, buy back shares. They announced an authorization of a $20 billion buyback, which kind of indicates that they're getting into good graces with the regulators. They wouldn't tempt the regulators to smack them down on that if they didn't think they were going to be in good graces there. Bottom line is this. It's now at 85% of tangible book value, up from 50% a year ago. I see no reason that it doesn't go to 100% of tangible book value, which is
Okay, we're looking for C pivot. This could be a lower high for now. All right, Tesla. Tesla's at the highs, starting to fade a little bit. So we need more buy order blocks on Tesla.
Talk about financials. We haven't talked that much about energy lately. Joe's mentioned a few times because oil's moved up.
Okay, we look at the daily TTM on Tesla. Okay, that's telling you Bollinger Bands are starting to come together.
Well, this actually echoes back to the point that Liz made, where she said, look, there have been surges, there have been corrections, even within the energy sector last year. There were stocks that did nothing, there were stocks that surged. All of these were up 40 to 50% last year. So I went from a 3% position in the portfolio to 4 and change.
Thank you, Paticus. I love Haleiwa, Waimalau, and all those areas there. I mean, the North Shore is just so beautiful. South Shore is just too commercialized. I'm sure they probably commercialized the North Shore too. But that's why I like Maui and Kauai and those areas where there's less. Big Island's pretty good too. You go to the Big Island? You guys going to the Big Island? You have a tour there or what? I was in the Navy. I had a bunch of department techs. I was a sonar tech in the Navy, and was stationed in Hawaii for 3 years. And we had an apartment in Haleiwa, and used to go there on the weekends. Had a good time. I mean, the only thing I didn't like about Hawaii is like you can go around the whole island like in an hour or so, a little bit over an hour. Um, I exaggerate, but the point is you can't go anywhere, so you get island fever. You want to go back to the mainland. You know, watch Tesla here. Yeah, so Rodney, very funny name for a Hawaiian. He was native Hawaiian. Um, really nice guy though. I just remember, we go smoke pot on the fantail of the ship. That's the rear of the ship. Um, just float around out there, smoke pot, and just enjoy ourselves. They didn't give us a hard time because, of the circumstances with Vietnam and stuff. I caught the tail end, so I'm not as old as some of the older folks that did Vietnam back in the olden days in the beginning. But good people, Hawaii, they're nice people. As long as you're on the right side, if you're a haole, if they don't like you, you just want to stay away. The locals. The good thing was I met Jerry Lopez, who I don't know if you know him, but big Hawaiian. He moved, I think he's in Washington or Oregon because the cost of housing got to be so much. But Jerry Lopez opened a shop. He shaped surfboards, and I got one of his surfboards probably about 6 months after I started to learn how to surf. And I went out in the lineup, and all the Hawaiians were like saying crazy things about the board. It's like, they saw the lightning bolts on the rails. That was his logo, and they just like befriended me like you wouldn't believe because I bought a Jerry Lopez board. From that point on, I never had a problem with the Hawaiians. They always they would protect me from any Hawaiians that would come here and give me a hard time. Good times, good times. Haleiwa. All right, so I rambled enough there. Sorry. I'm watching Tesla pushing a bit higher now. Tesla's about to go. The longest time, when we went from, I think it was like 30 days. Not like Submariners. Submariners can be underwater for 6 months, It was like 35 days. 35 days. Philippines to Hawaii.
A 26 times multiple is not suited for a stock that's earnings are growing in the mid-single digits.
I love how specific you are too for our viewers. You bought more UPS.
It's almost like a sponsored spot.
Take notes. That's called being specific about when you buy and sell stuff twice.
I slept through half.
You record that, okay? We'll lean on you for more of that in the new year. That should be your New Year's resolution. Jenny, I digress. I come back to you.
So UPS is
you bought more UPS.
Right. So that I went in at early last year at about $130 this year, thinking this might could go lower. If it does
Dukes.
go lower, I'll add to it.
I've heard of
So it
Dukes.
actually dropped down to about 123.
That's on the pier, right? Is that on the pier?
At 123, you have the stock trading at 14 times earnings.
That's for Duke Hanamoku.
And if you look out next year and the year after, you have mid-teens earnings growth ahead.
I loved Hawaii. I wish I was able to just take a jet, private jet, and just go there whenever I want, fly around.
Right, but think about what they went through. They had that whole labor issue, right? There was.
I know that, but you're citing the dividend yield. Isn't dividend yield just a reflection of that, of the downtrend?
At this point, and you can buy stocks with like dividend yields for all different reasons, and sometimes you get them because the stocks come down for for specific reasons. In this case, it was the labor negotiations. It was
There's
threats of
execution.
competition.
It's not meeting their guidance.
And then
3.5 years. Yes.
Okay, but that's why you buy it low. And like I mean, when I bought IBM, everyone was picking on me for this.
Where'd you buy UPS?
UPS initially 130, added to it at 123. It's like 128ish right now.
And how long have you owned it?
I think I'm at about 6 months.
Oh, okay. So it's new.
Right. But
Ish.
sometimes stocks coming down create an opportunity. Sometimes they're a signal of terrible things ahead. Sometimes there's a price for everything. You basically have three main competitors here: UPS, FedEx, Amazon. Once you kind of work out the competitive landscape there and say they're out from under labor, there's still earnings growth ahead. I believe it's going to grow in the mid-teens. Right. And by the way, it's got superb management. I think we're going here.
Okay.
Let's go to Weiss. Now the pressure's on. Okay, because Jenny was
Tesla just kind of grinding along. What's Apple doing? Apple's got a B and C pivot. Apple's probably going to do something here. Okay, Apple. Did I filled orders? I didn't do anything with Apple. Yeah, I did. Okay, cool. All right, so I opened some of the 240s.
I'll get back to the exact time in a second.
Apple.
Unless Jenny knows.
No,
Here's why I bought more. I sold some a couple of weeks ago.
Okay, filled.
Stock had moved up very nicely. Maybe it was even a month ago. And at this point, it's corrected. Now, stock coming down.
Filled at $2.
Or whatever it was. It's not a major correction. As a matter of fact, it's not even a definitional correction.
Yeah, the volume's picking up on Tesla. It's starting to go.
As you look at Netflix,
Histogram is turning cyan. We should go here.
other streaming services going out of business, being folded together like Hulu and Disney, and you take a look at their content. When you go in your streaming content, so many are non-US speaking programs. So far,
Yeah, I have no problem with that.
they're reaching much
No problem with that.
outside US, which has always been their plan. And there's a lot of, frankly, fertile ground out there.
$1,000 seem reasonable to this call?
I think $1,000 is at least reasonable and probably goes higher because scarcity, number one, excellent management team, and there's sports. We just don't know what sports can do yet. So that's
show me Walmart, guys, please, if you would, because Truist, Joe. And speaking of price targets that are going up, $98. Walmart reiterated to buy. It's not a huge move from here, obviously, but nonetheless, they're positive on Walmart, your stock.
Okay, Tesla pushing a bit higher.
Number one, market share gains have been dramatic.
Google's starting to turn too. Look at all these ABCD patterns. Okay, there's another one. Here's another one. Here's A. Okay, we got the only problem here is we got supply right overhead. Tesla. Okay, we had supply right overhead, but now it's gone. Are we above 420? Tesla, where are we? Tesla. Yeah, Tesla's above 420. Okay, above 420, this could rip. Tesla above 420 could rip.
Jenny, you still like Devon Energy because Bernstein does. They upgraded it to outperform today. They had it at a market perform. They say that a U.S. gas super cycle is coming.
Right, I think that's true. And so I had actually owned Devon in the portfolio, sold it back in 2023, kind of at a tiny loss once you factored in dividends. It was mostly flat, and then added it back in this past quarter. And the reason I've added it back in was because of that super cycle. They also made an acquisition. It's super accretive. And this goes back to our conversation about a more friendly regulatory environment. I think if anywhere, banks and energy benefit from that. And if you look at
Tesla. Did I say it this morning? 420?
that guy is
Okay.
so energy friendly. And we should be selling it.
Baby drill.
Yeah, but we
We're
should
going to
be
hear that.
selling.
We've already heard that a lot. We're going to hear it a lot more.
Okay, but you know what? There may not be that much drill, baby drill.
Oh, it was Apple I did this morning. Okay, Apple.
The reality is if we can start to export to our friends and our allies, that's just great for American fossil fuels.
What about EQT, which is part of this call too?
Well, LNG exports is an obvious tailwind, but I think it goes beyond that. Look, I think we are at this moment in our economy where you have to realize power demand growth and the need for power generation is going to rely more and more on natural gas. And you look at EQT perfectly positioned in the Appalachia. What is one area of the country that has the strongest data center demand? Virginia. There's a perfect geographic connection right there. It's serving that Virginia data center demand. So I just think when you look at natural gas, this is going to be the solution in terms of where the power generation is going to come to meet this power demand from artificial intelligence.
And do you think that the ability to export LNG will offset the additional, basically capacity that's coming on here by opening up everything for drilling? Because that's really the issue, and that's what people worry about. is there going to be too much natural gas in this country with drilling on the federal lands, drilling offshore, with everything else?
I don't know. I don't think so, Steve. I really don't. And again, it's interesting because we're talking about LNG exports. That's not my thesis on natural gas. It's not, because I've heard that in the past. I heard that in the first Trump administration, and it didn't work. My thesis on why you want to own natural gas is because over the last 4 years, we've prioritized decarbonization, whether you agree with it or not. So that switching effect, when natural gas goes to 4.25, you don't switch to coal anymore if you're a utility. You
One
can't.
quick question.
Real
Yes
quick,
or no?
make it quick.
Tell me all the super cycles that were predicted that actually came to fruition.
Oh, by the way, speaking of super cycles, I have an updated Marty Zweig advanced decline percent. Actually, it's just advancing percent. What he used to use only occurred like 14 times in the past 40 years. It's very good. I'll show you that in a little bit. Let's see, Tesla. What's Tesla? Oh, there's Tesla. Tesla. Okay, good. All right. Above 420, call wall dealers. All right, looks good. 1, 2. Hope everyone's having a good day. I'm your host, Cousin Benny, coming to you from theclosingprint.com. This Wednesday, the 15th. We don't have any minutes or anything today, do we? We had that last week. Okay. All right, Tesla. Tesla.
We're back with breaking news. A historic deal in the Middle East happening just moments ago. We go back to Eamon Javers now, who has more for us. Eamon.
Scott, we're still waiting on details in terms of exactly how these hostages will be released, who will be released, in what order, all that's going to happen. What we expect now is that there will be an exchange of releases between the Israeli and the Hamas sides. Hamas will release hostages. Israel will release prisoners. When all that happens, still TBD as I'm talking to you now. We do have a statement here from President-elect Trump, who posted this on social media just a short time ago. He says this epic ceasefire agreement could only have happened as a result of our historic victory in November, as it signaled to the entire world that my administration would seek peace and negotiate deals to ensure the safety of all Americans and our allies. Marco Rubio, the Florida senator who is Trump's pick for Secretary of State, is testifying on Capitol Hill at this moment. And as this deal was announced, he spoke to senators, giving credit to the Biden administration and to the Trump negotiating team. Rubio saying, in fact, I dare to say that all involved deserve credit for the ceasefire that the chairman has just announced. But Steve Witkoff, that is President Trump's envoy here, who's been on the ground negotiating this, Steve Witkoff has been a critical.
Okay, Tesla no follow through yet, so they have an incentive to keep this below 420, just for the record. Okay, so they're short these calls right here, 420.
Conflict will now come to an end, at least for now, under the terms of this ceasefire deal. The horrific human devastation, just going back to review some of the history here. Remember,
Okay, Apple looks good too. Apple looks like it wants to keep going.
by terrorists inspired by Hamas. More than 1,000 Israelis killed, dozens taken hostage in that attack, and then Israel's military response into Gaza. More than 40,000 Palestinians
All right,
killed.
do we really need to relive history here? Okay.
A temporary hold to the war in Gaza. This is according to people familiar with the situation. Now, the agreement would pause
Everybody talking about this now.
months of fighting. We'll have more on this throughout the day. Do stay with us.
No, I don't want to stay with you. Okay, let's go to Yahoo. They have a channel too, Yahoo. Yahoo Finance live show. Let's see what's on Yahoo. Yahoo. Okay, so it looks like Apple wants to keep going.
There are rules on how people are being tracked. And
All right, Tesla. We get through 420. This could get really interesting really quick.
That changed everything. It dried up. And I had nothing really to show as far as savings from that company. And I was making so much money from that company. And luckily I did have like my money, my personal money saved, but it was just like, this is a complete disservice to my company because that was really growing and thriving. And now that has dried up, and I have to like reconfigure and think about how I'm going to get more customers in because that changed.
There goes NVIDIA. Shit, I missed NVIDIA. No, I have NVIDIA. Sorry. Sorry about that. For cursing, put me in the corner. Wash my mouth out with soap. Anybody have that happen to them as a kid? Wash their mouth out with soap? Parents used to threaten it. I don't know anybody that did it, but all right, UVIX. Okay.
Open my eye up of just like, oh, this is no longer a side gig. I don't have a 9 to 5 anymore. This is it. This and like my agency, my marketing agency, those are my sources of income. So it changed of mindset.
So in today's world, many of us who are entrepreneurs are very, very heavily leaned into social media. So we've dealt with challenges with Apple as well, Facebook. Now those who have a huge presence on TikTok are going to have a struggle coming up in the next couple of weeks.
Mm-hmm.
In hindsight, what would you have saved? How much more would you have saved to launch Brooklyn League than you did?
Yeah, I mean, I think what I was doing was I was putting around, I think I was like 10-20% back into advertising. I would have continued to do that probably and a little bit more, but I also would have put more to the side. I really wasn't saving. I mean, I was kind of just like, putting back into that and maybe $1,000 or $2,000 a month, and then everything else was just going to like fueling lifestyle or just like traveling and again traveling and shopping and doing everything else like that. Again, I'm at home, from at home. I'm shopping on other e-commerce sites, so I would probably put more money towards that percentage. Not sure right now what that would be, but definitely much more than that. So I would probably say at least like 40% or so towards it.
Yeah. Just 1 second, fan. We'll be right back after this break.
The people of Los Angeles need your help. Scan the following QR codes to donate to organizations providing services to people in need. The American Red Cross. Your donation enables the Red Cross to prepare for, respond to, and help people recover from this disaster. Scan the QR code on your screen or visit orca.tv/donate to give to the American Red Cross. Los Angeles Fire Department Foundation. Your donation supports the LAFD by providing essential equipment and trainings to supplement city resources. Scan the QR code on your screen or visit orca.tv/donate to give to Los Angeles Fire Department Foundation. The Salvation Army. Your donation provides food, personal necessities, and shelter to survivors and first responders. Scan the QR code on your screen or visit orca.tv/donate to give to the Salvation Army.
Okay, watching Tesla. Tesla trying to squeeze.
Communities before, during, and after disasters as part of a nationwide network. We are working closely with the Los Angeles Regional Food Bank to assess damage and provide help where it's needed most. Scan the QR code on your screen or visit orca.tv.
Okay, Apple's turning. Okay, all the New York fan components are giving you your BC pivots. So if you took anything out of the top 10 New York fan components, they're all doing the same thing to more or less degree. NVIDIA, I do have NVDX, so I'm not too upset about that, but that's rocking higher. Supply overhead at 14 and change for NVDX. NVIDIA, let's see what kind of supply we got. Same sort of supply at 135 up to 137.
From concept to creation, the Pen Tool Pro is your versatile companion, simplifying your workflow, putting the focus on what truly matters, your creativity. Scan the code to order the Pen Tool Pro.
Okay, Tesla. I bought more of the 3035 verticals that expire out in February on the 21st. So those are doing well. Looking for a follow through. Okay. Okay, so tomorrow we've got Morgan Stanley, Goldman Sachs, and other banks. Okay, there goes Apache turning back up. Apache turning.
About the challenges being an entrepreneur. So Fayon, one of our friends actually has a saying up on she's an entrepreneur and she has a saying up on one of her boards, and it says, "Thou shalt invest thy earnings in growth." And I think that that's something that a lot of entrepreneurs forget is we think about, okay, we're making $5,000, $10,000, $15,000 a month. Yes, cha-ching, I can start funding the lifestyle that I've always dreamt that this business would. But we forget, where does that growth come from? And is it momentary growth, or is it self-sustaining growth? And how do we get it to the point where it's self-sustaining, and then we can start to pull money out? Exactly. I mean, I would definitely, in hindsight, doesn't even just add to that. It's probably work with a financial advisor to kind of even just plan that part out, right? Because now that I'm no longer getting a steady income and I'm relying fully on my sales or my clients from my agency, it's like, how do I manage my life? How do I keep my current lifestyle? Because I like to keep it. If I'm making it, I like to keep it. But how do I manage that, right? And I am of the mind now. If you are working a 9 to 5, I would not even touch the money. I would give it at least a year before even touching it. I would just let the money accumulate, reinvest back into it, but just also accumulate a savings or reserve from that as well. And so that's what I would do if I was working. Like if I didn't have a 9 to 5, I would definitely be a little bit more conservative on how much money I'm pulling from the company, because that also, if it was working while you're growing it, it can work more if you put more into it as well. Yeah, obviously things like the iOS change can change these, but that is also one thing you have to learn as an entrepreneur, to pivot as quickly as possible. And like my agency, Prototype Marketing, I actually was going to do more experiential marketing. And so I was going to leave, my 9 to 5, and I was like, oh, I'm going to do Brooklyn League, and I'm going to do Prototype Marketing and experiential marketing. And I could not do experiential marketing while in a pandemic, right? And so I had to pivot. And so I pivoted and started working with e-commerce brands. And that actually helped that brand take off. So I think as an entrepreneur, you have to be able to be adaptable as well as learn how to pivot. And even in times of where, oh my gosh, my all the
Apache APA.
all of that stopped.
Big downtrend for most of the year. Finally got the 20, 50-day cross. Pretty decent statistics for this to work. Now, we've been in this for a couple of weeks now. I believe, Corey, you might have bought it 3-4 weeks ago, Apache?
I think it'll be much easier if you have a job already, for sure. I mean, like you can take those risks without having to worry about being a financial mishap on your end for your personal life.
25, all right, 25.
Having that, or if you're not having a 9 to 5, if you have another gig or something that's like also brings in some type of income, because it allows you to sometimes take those risks to see if that's something that you can do. You can do all the time. That I would also encourage people to find someone else who's in your field, who's doing that work, who probably start off the same way that you're kind of starting off, and get their insight, get their thoughts. Let them tell you about the pain points, so you can very much see like, ooh, I'm not built for this. Yeah. Like,
And it's okay if you're not, right? Not everybody must be an entrepreneur, right?
Yeah. I thought at one point, I moved to New York. I had 2 internships. I was Def Jam Music Group, where I was working in college promotions and also had a theater internship. And I was like, ooh, I want to be an actor. And I've done a couple of like shows. I did television. I did some other work. And I was like, I think I want to be an actor. And I got here and quickly realized I'm just not built for that. I didn't even want to go through the starving artist phase. So I was like, not for me. But I'm happy I at least tried and got to the point of like realizing that. So yeah.
So let's dive into some of the challenges. What's your top warning for early stage entrepreneurs?
Top warning.
Watch out for pandemics. No,
I would say don't allow yourself to stay in to stick to one solution. And I want to explain that. For example, I was sticking to the solution of
12:52. All right, enough of this guy.
They were not.
Okay, I just wanted to fill that in there. Okay. Mike Santoli's on. Okay.
Company by company movement. That's good for suppressing volatility at the index level. We'll see if that takes hold.
I'll see you on closing bell, Mike. Thank you. That's Mike Santoli. We'll do the setup next.
Okay. ConocoPhillips, Devon, CEG, WMB. ExxonMobil. Okay, cool. All right, so Apache doing really well. Very happy with that performance. Several weeks later. Okay, Apache looking for that consolidation. New York FANG components are a little profit taking at the highs. Okay, so I'm not surprised. Tesla's still hanging out below 420. NVIDIA. Okay, so we get a little bit of profit taking as expected. ABCD patterns going up towards D, going back up to the high of the day. We're expecting to see some supply overhead, so we need to follow through and push through these areas. Meta.
All right, let's do the setup on some earnings coming our way this week. Taiwan Semi, Weiss.
Okay, I need to take a 5-minute break. I'll be right back.
they're not only executing well, they're executing well enough to continue to raise prices, continue to offer something that these big companies just
Meta moving higher.
quite as well. So it's really
Let's see if Meta can follow through. It looks like a pretty flat ABCD pattern. Looks like Meta wants to go.
much like the Apple family of things gone. But stock's gone 7x thereabouts from the lows of 2022, late of 2022. So this is a stock that almost looks like Meta's chart, where they're under pressure in 22, they're under pressure, post kind of the 2021 highs.
Meta needs to get above.
That was enough. The selling was enough. It hasn't looked
Needs to get above these pivots here.
I know, gosh, and I think that many wish they could emulate this because
618, 25.
some upside following it. That really their last earnings report, and we have, even in this new range, been pretty consistent and consistently able to hold around 460 to around now 506 was where we topped, but now trading at around $488 a share. So really, really technical strength we've seen from Spotify, and frankly the news to back it. But next thing today is also a bit of a different picture than when we're looking at Spotify. That is Snap, which is all over the place. And you want to find volatility and look no further. We're down about 27% over the last 12 months. Another, frankly, gappy and very ugly looking chart, but with a nice move to the upside today as we're up 5.7%. I will say there's some analyst news. I don't necessarily attribute the strength today.
Goes app. Here goes Meta.
BMO did actually reduce its price target to 16 from 18 with the market reform rating, saying that competition remains tense. I just find the timing of this note so wrong because all in the headlines is what is going on with TikTok. And I have to imagine, I know right now there's this major boycott of those that are on TikTok. They're saying they're going to these other various Chinese apps. I mean, that's probably such a small amount of the 170 million users. I'm sure Snap is, if this ban goes through the way right now we're anticipating, expected to be a beneficiary.
The question is what's priced in, what's not. I actually talked about Meta and Snap for Daily Trader, for those who haven't caught that, on demand on YouTube, the Schwab Network YouTube channel every day. Normally it's Kevin Hanks, but with him out of town this week, I'm filling in. But so bonus example trade for those who want to check that out. But what I will say about Snap is this is a situation where you look at, okay, if TikTok is gone, let's just go down that path for a second. There is going to be ad dollars that are being spent by companies on TikTok that are now freed up to go elsewhere. But there's nothing to say that, they have to go equally to Meta, equally to Snap, equally to X app or any of these different things. They're going to go where they feel the money is best spent. And it might end up being sizable portion of it goes to Meta because that is the platform amongst these that seems to have the most eyes on it. It's the one that's closest to TikTok. You go to YouTube. There's nothing to say that Snap has to be a winner in this. And to me, I almost look at this space to oversimplify it as winner take all, and explains why Meta was
Apache making new highs.
last year, and you have Snap down 20% last year.
Okay, and the one correlation, and I totally agree with you, one correlation that's amazing is these Gen Zers, which I don't think I'm part of that demographic, but according to some forecasts we saw back earlier this fall, we do know 51% of Snapchat users come from Gen Z, or expected to reach that this year. TikTok also similarly dominated by Gen Z, so about 45%. So there is that significant overlap, but then I would also say, again, how much is priced in? Because, I mean, I don't necessarily imagine huge.
Okay, Meta looks like it wants to go here. Meta, let's go. LETSGO.
Business and doing things for businesses from a marketing standpoint, it would already be successful to a greater extent than it is now. There's a reason that this chart has huge gaps around earnings, and it's because they've disappointed a lot and because there's doubters. And you don't have that same situation often in names like Meta that are a little bit more stable and also clearly returning more from a marketing digital advertisement dollar standpoint for companies who choose to do business with them.
I agree. I think that your bullish case can't be another app, like a competitive app's demise. It has to be your own story, which frankly for Snap, it just really hasn't seemed that way as far as the financials are concerned over the past several years now. But last item today is Planet Fitness with an analyst new update that was very positive. Jefferies did reiterate them as their top pick now for 2025, calling them the Walmart of gyms and saying this is a consistent grower benefiting from secular tailwinds that will accelerate same-store sales and unit growth. They also did say the rise of healthy living as well as
The company's first price change in 25 years and a new CEO could drive multiple expansions. They do see about 15% upside from here and do keep a buy rating with that $150 price target. I also saw this really fascinating report from earlier this month that highlighted a growing number of gym users are now more focused on building muscle than cardio. So cardio is the number one goal, building muscle was the number one goal back in 2024. So Planet Fitness is restructuring their gyms accordingly. All credit to Gen Z, who make up about 25% of their user base. So I guess lifting is in.
Bulking's back.
Bulking is back. Gosh, I don't think I've lifted a weight in maybe 5 years.
Well, the thing that stick out to me here is, despite all the skinny shots and things of the last few years and kind of the uncertainty
Oxy.
insurance coverages and cost and everything.
Oxy, you're going to get a 20-50 day cross on Oxy probably Friday.
Many are still getting there and doing things, trying to take their own health and wellness into their own control and do things. You know, they offer saunas and stuff at these different places too. So this is a scale play, and it's clearly doing well right now. But you know what you do when you go to the gym? You often listen to music or podcasts or books, and Spotify often the app that many choose to do so.
Definitely the app I choose when I don't frequent Planet Fitness, but anytime I'm going to the gym, which I'm not lifting weights. But yeah, and I also think on that note, a great segue into what we're talking about next, because both these names also pretty much right around their all-time highs. So similar from a technical standpoint. We'll be looking
Okay, let's look at the 10-year yield. A lot of people were very bearish. I think some of the cooler heads prevailed. They were talking about a potential peak. As we started the week. We finally got it, what it looks like at the moment. So if we can get back down below 4.7% and stay there, maybe we'll consolidate a little bit longer. The first year of a new presidential cycle tends to be bullish, and we've seen that in the past with Trump. So it's interesting that, he's taken over after 4 years off, and that we have something so recent that we can look at as a reference point. So if we look at the S&P 500, I want to check breadth, because breadth was looking very good yesterday. Oh, that's what I wanted to show you. I wanted to show you an updated advanced decline percent. I was reading through some literature that the late Marty Zweig put together, and he has a very interesting. Let's see where the update. Zweig breadth. Okay. So the rule goes like this. We're looking for the breadth thrust indicator to go below 40%, those horizontal lines, below 40%, and then move above 61.5% within 10 trading days. When that happens, you get a bullish signal, as you can see, that big spike right here. That big spike, we went from, in the bottom panel, you can see New York Stock Exchange advanced decline, stocks that are advancing versus the total New York Stock Exchange. Okay, and you have a 10 EMA, 10 days, 10 EMA. And you can see here in May, we had a pullback. It's always better if you have the pullback and then see the signal, which occurred when we went from below the green line to the red line, below 40% to 61.5% within 10 trading days. And we got this signal, which is this indicator right here. Exclamation, Bravo, India, Nevada, Yankee, Bravo, Tango, Delta. So it's exclamation point, BINY, BTD. Okay, and that'll give you, whenever that signal occurs, you'll get that spike. Okay, and if you look at longer term, and let me put this on the chart. You'll see these pretty easily. Let's see. So So if you're interested in this, I can send this to you. Okay. Behind price. Okay, behind price. Okay, let's go here. Nope, go here. Okay, multi-year. Okay, so let me put that here. Price. B, and then behind price. And you'll see these spikes, okay? These are the buy signals. Okay, look at 2009. Look at 2009. These verticals are the same thing as this on the daily. This one on the daily. All right. So because this is a shorter time frame, it's easier to see. Whereas if you go to the multi-year time frame, these signals show up as these big spikes. Okay. And then shortly thereafter is when you start to see these bullish moves. Now, Marty Zweig was a big trader back in the 80s. I think he died in 2000, I want to say 2018, something like that. I had a chance to go to some of his seminars in the city, and he talked about this. So these big verticals, the darker ones, are even more profound. You can see what followed. What followed 2-year rally, 2016 to 2019. All right, so it's a pretty good indicator. All right, and the most recent signal was over here in May. Very cool. All right, so where are we right now, by the way? Let's go see where we are right now. So right now we're in a descending pattern. So it's possible that this signal could go, no, we weren't below 0.4%. We were close. Over here we were below, but more than 10 days have passed. It's a longer term signal instead of the one that I show you guys a lot, which is this one, which gives you, basically week-long buy signals, week-long sell signals, week or two neutral signals when it's around 0. Okay, so now we're turning back up. Looks very good.
Some convincing progress to the upside here. Then the highs are the obvious point to keep an eye on next. And then our +1 standard deviation channel presently comes in around 535 or so. If we were to move lower, if we were to break below this low point that we established after our gap up here, 445.
Okay. All right. So Meta pushing higher here, Meta. Okay, watching Tesla for the follow through. Watch Tesla for the follow through. I did add to my 30-35 vertical on TSLL. So we're looking for a break above 420. Gets that break above 420. Those calls will start kicking in. Okay. TSLL, thank you very much. Okay, watching Trump Media for a bounce. There goes Google. Okay, Google looks good. All right, Google.
Where it feels like establishing an earnings trade now might be a little bit of an added risk. So with that, we found an example trade that stays ahead of earnings, goes up to the end of the month. These earnings are slated for the early parts of February. It's a bullish strategy, going with the technicals, going with the analyst note in this name, and it's looking at buying a call vertical for a test of 500, maybe a run at those highs by the end of the month. And what we looked at in particular, 495, 500 call vertical expiring at the end of the month, January 31st. Looking to spend $2, that means you'd risk 200 with a 497 break even. You have a chance to make 300.
Okay, there goes Meta making new highs. Meta looks good. Meta. Okay, watching Tesla. Meta. Let's see if we can do it. ABCD pattern should be pretty obvious to you. Here's A, shallow B, a higher low C. Now we're starting to head towards D. We're making D right now. Progress.
Shifting gears entirely, looking at now what they're calling the Walmart of
increase. And that low point all the way back over here gives us the starting point for our blue trend line that has gone across those lows pretty consistently for a while here. And then we hit this earnings event back here in November that pushed us up once again beyond the boundaries.
I don't know why this keeps disappearing. I'm not sure what I'm doing to make this happen, but when this lower panel disappears, I just squeeze. Is that another one? Okay. All right, so ABCD pattern, looking for the follow through. Amazon, Nvidia, looking good. Netflix, okay. Trump Media just dropped off a little bit there. Trump Media.
Okay, so now when we watch momentum, any indication here, or are we all speed ahead?
Well, when we look at momentum now, we can see that we did once again see a little bit of divergence here. So we had price accelerating to the upside during this phase. RSI
Google,
was flat to
Meta,
even slightly
solid buying today. It looks good. Some solid buying.
Looking for continued trend to the upside there. Flat to slowing momentum can be a sign of perhaps the stock taking a breather here. Very sideways for several weeks there until we got our breakout. Now RSI held out above that 50 midline, broke through the red trend line, and now approaching that overbought area once again. We're just a hair below it, 69.97, just 0.3 of a point away from. Oh, there we go. It just crossed in real time as we were watching there. So wait for the close. Don't jump the gun. Don't make trading decisions until all is said and done at the end of the day and the actual move is complete.
No kidding. A good lesson here in real time. Why it's important to obviously wait for the dust to settle, especially on a day when we're seeing, I mean, actually, it's pretty consistent strength, but Planet Fitness holding on to about a 2.5% gain. When we're watching now, price, again, the importance of standard deviations if you're looking for that upside, because we're pretty much at quite literally uncharted territory at these levels.
Sure, yeah, and standard deviation channels can help with that. We can take our 1-year chart, we take our linear regression line, our line of best fit that we mentioned earlier. One standard deviation above that linear regression line would put us right here, our +1 standard deviation channel at 109.47. Pretty darn close to where we are now. Could be a point to keep an eye on to the upside. Notice as well, if we were to look more toward the downside, 103, that level that we broke above, that old ceiling, it's very common for a stock after a breakout to retreat a little bit, retest the old resistance, which then becomes support. I'm not saying that's going to happen or anything. I'm just saying that's a common situation to be on the lookout for. If we were to move lower beyond that point, 21-day EMA, short-term trend line, and volume node all come together at around 100 to 101. Beyond that, 92, that low point after we had that gap up, would be a very important point to watch to the downside as well.
Okay, so two really strong stocks today, especially when you zoom out, obviously making nice moves to the upside, but more consistent upside in both of these stocks. So now when we look at trading this name, Alex, obviously another one that has been a phenomenal performer, not quite the same degree of a growth player, just given the nature in which it operates, but still one, hey, if I guess the Gen Zs are lifting weights, this might be the place they're going to.
Yeah, apparently, and more of a value play. So I get the Walmart comparison from Wedbush.
Okay, we got a nice follow through. Tesla is pressing through the 420 zone.
Less strike availability, less expiration. So I elected to go to the February monthly cycle and looked at the 105-100 put vertical, and we looked at selling that credit spread for a neutral to bullish strategy, going with the trend, but acknowledging that this has been a pretty substantial run and just looking for it to maintain some of these levels. When we look at that 105-100, if you're able to get $1.50, that'd be 30 cents on every dollar of risk, which is that sort of loose guideline we talk about. Sets up a max profit potential of 150, a break even of 103.50, and a max loss there of 350. Just asking this stock to hold on to its gains, Jenny, not asking for any continued upside. Of course, continued upside could benefit this trade. But if it can stay above 105 through that expiration date, these have a chance to expire worthless, which is the best case scenario, and it's how max profits achieved.
Yeah, and I think a great way to break that down into two different ways to look at names that are seeing all this optimism. But we'll leave it there for Chartmaster. Now, coming up next, time to talk another point of strength today on the session, and that's really being felt throughout the overall markets as Citi is continuing to rally after its earnings. You pulled back slightly, but still, hey, a 6.8
Meta's still pushing.
not too bad for a major bank.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What time is it? 1:32.
Shaping early market action. Check. Options Corner. Futures Focus. Technical analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to talk the financials. And so far out of the gate, the big banks are doing quite well, as now Citigroup is the third best performer in the S&P 500, just behind Bank of New York Mellon as well as Intuitive Surgical. So collective strength in the financials today, but joining us now to tell us more about what the street really liked within this report is Caroline Woods, senior markets correspondent for the network. So Caroline, I know there's been already a plethora of these bank earnings. It's hard to keep them all straight, but what we do know is, at least as far as like these major players, they're one of the leaders, if not the leader, earlier on the session.
Hey there, Jenny. Yes, strength across the board when it comes to the financials, but Citi, the clear winner after earnings. We're seeing gains of about 7% for Citi after this beat on both the top and bottom line. As you said, one of the best performers of the S&P 500 today. In terms of some of the numbers for Citi, net income came in at $2.86 billion. That was a huge improvement from a net loss of $1.84 billion a year ago when Citi was hurt by a number of charges. Adjusted EPS of $1.34 easily topped the $1.25 that analysts were looking for. Revenue, meanwhile, rose 12% year over year to $19.58 billion. The expectation is for more like $19.55 billion. They saw growth really in each of Citi's businesses, but breaking it down by division, services saw revenue of $5.2 billion. That was up 15%. Wealth was up 20% to $2 billion. Markets revenue came in at $4.6 billion. That increased 36% year over year, driven by increases in both fixed income and equity markets revenue. And then banking revenues of $1.2 billion increased by about 27%. That was largely driven by growth in investment banking. Investment banking fees were up about 35%.
Okay, we'll continue to move higher. Looking good. ABCD patterns. Just let your profits run at this point. Let's see.
Make additional investments in our businesses and transformation, saying while this level is a waypoint, it's not a destination. We intend to improve returns well above that level and deliver Citi's full potential for our shareholders. So that 10 to 11% range compares to its previous medium-term range of between 11 and 12%. It doesn't seem like investors are paying much attention to that based on the stock reaction that we're seeing. Citi, of course, was a big standout performer in 2024 and kicking off 2025 on a pretty positive note. If you take a look, up about 12% so far in 2025. The one-year chart up about 52% over the past year. So it's been a good year for Citi, and these Q4 earnings certainly helping it today.
Yeah, not alone in this space today, Caroline. A lot of these banks doing well, and it largely was on the heels of better than expected trading revenues, it seemed. But this $20 billion buyback doesn't hurt either. Analysts seem like they were mostly in the right spot when it came to Citi. You see, like what, something like 75% of them were in the buy camp.
Yeah, I have 83% according to LSEG's Workspace. So largely bullish heading into this report. So yes, Alex, on the right side, not a single sell rating on the street. If you take a look, the median price target for Citi, $85, implies less than 10% upside from current levels, given the impressive run-up that we've seen. But overall, pretty bullish on this name. Haven't seen any changes since. Of course, that could kind of happen as the week progresses. We'll have to wait and see. And just, I always like to kind of put it into perspective and compare it to some of the other competitors. JP Morgan, who we also heard from, has also had a pretty good past year, up about 50% over the past 1 year, up about 2% after earnings. And that compares, there's 60% of analysts in the buy camp for JP Morgan, 36% hold, and then 4% sell. So analysts slightly more bullish on Citi. And then if you compare it to Bank of America, we haven't heard from yet, pretty similar, 80% in the buy camp for Bank of America, with about 10% upside when you take a look at Bank of
All right, pushing a bit higher. Apache, Meta, Tesla at the highs. Tesla looking good. Tesla.
Green arrows across the board when it comes to financials today. Yes, and I would say that those that were following this market maybe could have suspected it, but not to this extent. Frankly, the financials don't typically trade with this earnings volatility that some of the tech names do. So I'm even impressed with some of these moves. And like you said, Bank of America, Morgan Stanley, US Bancorp, PNC, some of the major players that are releasing still, I believe tomorrow before the open. So appreciate it. As always, great insight, Caroline Woods, senior markets correspondent for the network. And now we look at Citi, and I think that this is an interesting day to trade it because we're still in the midst of the rest of the financial earnings, which we will get in coming days. But I think that what we know for sure is that the street is applauding.
Okay.
I mean, all the financial metrics and a lot of the guide they gave for the rest of this year.
Yeah, I think this can be one of the tougher times to try to trade a name. It's made a big move. It has news release, and then it makes another big move on top of that. And if you weren't already involved, it can feel like you're kind of late to the party. That said, there's a reason this success is happening at places like Citigroup and JP Morgan and others is the position they have in kind of the market dynamics. So one way to participate to the upside still, if you believe this stock can go higher, but not expose yourself to a major drawdown in the event that it has run a little bit further and it could turn around, is to use something like a risk-defined debit spread, a call vertical in this case, to get exposure but not be exposed beyond the max loss of this particular spread. So looking at buying a call vertical, February monthlies, no earnings to worry about for Citi. We just got them this morning. Looking at the 77.5, 80 call vertical. So one strike's in the money, one strike's out of the money. If you can get a $1.25 debit for the price here, that would set up a situation where you're risking $125 per spread with a chance to make $125 for each one of these spreads. The fun thing too is if you add that $1.25 to 77.5, you're going to get 78.75. That's your break even. Well, if you key in Citigroup in real time, it's 78.70 right now. So it's really close to that. You're getting a break even that's really close to the current share price, equal risk to reward, which is, in my mind, kind of your loose guidelines for these debit spreads if you're trying to create a risk reward that's equal. Because we talk about it all the time. Stock can go up and go down. If you feel there's equal probability, but you lean one way, you have equal risk to reward, and you have a break even near the current share price. You don't need a lot of help for the market for this one to work.
Yeah, and I think a relatively more grounded way to look at Citi, I agree. I think it's difficult to trade post-earnings while we also are pre the rest of these earnings. But, hey, a really nice move to the upside today. And we are pretty much right around now session highs here, up about 7%. So who would have thought that we would see a 7% move to the upside in Citi? But definitely a sign of relief for these financials. We'll leave it there for our FOMO discussion, though. Now, coming up next, time to talk another point of strength in this market today, and that is these quantum stocks.
Regarding some of the commentary out of Microsoft, this space needed the love, though, after a pullback last week. So we'll talk all about the volatility in quantum stocks latest coming up next.
Okay, making higher highs, higher lows. Okay. Trump media with a little bounce.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered
Okay,
by
there goes Amazon. Amazon pushing a bit higher.
round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss the latest with the quantum stocks, especially after we saw a massive pullback last week and a substantial rally today on the back of commentary from Microsoft that declared this year to be the year that we become quantum ready. So joining me now is Kevin Green, senior markets correspondent, to talk more about this. Kevin, I will say that when I was first sort of parsing through CEO Jensen Huang's commentary last week that sent all of these stocks in sort of disarray, I was somewhat agreeing with him. Those that are definitely
Okay. Rigetti's starting to turn back up too. Rigetti. Rigetti moving higher. Apache. Okay, that looks good. Everything looks good for now.
Very large scale, and right now that is very hard to do, not only just because the technology itself or even just the internals of quantum computing is still in its infancy stages, but you still have some major hurdles, especially when it comes to cooling, and that has been a problem. But once again, I mean, there's still some optimism. AI, a couple of years ago, when we were looking at generative AI, that was something that a lot of these tech CEOs thought that would take a very long time in order for it to be applicable to everyday life. And now, ChatGPT is something that everybody kind of uses, or Gronk. And so, I mean, at the end of the day, we did see a pretty significant sell-off in the quantum stocks. But Microsoft is saying be prepared for support when it comes to the quantum computing space here. And they do believe that a significant amount of development is going to take place in 2025, and they want to be on the forefront of that. So you are seeing a nice little rebound in stocks like IonQ, or if you're looking at E-Wave or anything of that nature. We are seeing a nice bounce. I think that also kind of coincides with the CPI print and just the overall enthusiasm.
Okay, Amazon's still pushing. Apple looks like it wants to turn as well. Apple, let's see if we can't get a follow through. Nvidia. Nvidia at the highs, above the 135 call wall. 140 is the next call wall. We got supply overhead that we need to clear first. Nvidia looks good. I have NVDX.
For a cost basis, and he's all excited for good reason. Stock was like 15, 20. And first off, is asking questions. We can't help you. We can't give advice. Talk to a financial advisor for something like that. But the thing that really stuck out to me is that these stocks are just tremendously high beta at the moment. And so when I see a move like this today, it's going to be naturally tied to something like Microsoft today, and perhaps some of the reason is. But when you see these movements, KG, some of this might just be the fact that the market's up today too. So when you see these names that are sort of speculative and futuristic, like much of these quantum computing names are, how does one stomach this volatility if they're involved? And at what point do you feel like you missed the boat if you're not?
Yeah, I think understanding the mechanics of markets is really key here, Alex. Like, as you know, a lot of these stocks are on a relative basis fairly low float. So it doesn't really take much to really move the prices higher. Some of them have been targeted for short selling as well. So we might be seeing a little bit of a squeeze taking place. And a lot of these stocks have also now have weekly options being traded on them. So you're getting the options flows. That's also kind of waking up market makers. I think if you're kind of looking at quantum computing as a whole, any type of new industry that is expanding, it's probably best to try to diversify as much as you possibly can. Maybe you don't pick that one winner, but maybe you have just overall exposure. And if you are a believer that rising tides are going to lift all boats, then you can actually have some exposure that way.
First
So
production growth
I think that's kind of how to
utilization and strength there. And we're seeing, again, the theme of capital discipline and returning cash to shareholders. LNG, Cheniere Energy, also another name that we like. Natural gas, by contrast to crude oil, we think will be relatively strong here over the near term. Obviously, the winter weather we've had over the last several weeks has been very strong for natural gas, but longer term, the natural gas story is very good. And when you consider the growing export role that the United States is playing, Cheniere Energy is well positioned to play a part in that role.
And how do you see some of these Trump policies here reshaping? Does it reshape, to some extent, we have to think so, the global energy market? And in what position does that put U.S. in then versus?
Yeah, growing our position as an exporter of crude oil and refined products and natural gas obviously makes us a stronger trade partner. And I think, energy diplomacy is a key element of the Trump strategy going forward, to the extent that we can build trade relationships with partners, build their dependency upon our energy resources, that can only help grow our industry going forward. So again, I think the Trump administration will work to unlock the resource that we have here at home and strengthen those diplomatic ties that we have through those energy trade relationships.
All right, Ben Cook, thanks so much for your time. Great insight.
Thanks so much.
Coming up, yields retreating from recent highs on the back of the inflation print that we got out this morning. Why one fixed income expert is eyeing ETFs, talking about the best ways to play the fixed income market through exchange traded funds. We got that for you next.
If you use a pen, the Pen Tool Pro is a must-have multi-function creative gadget perfect for every workspace. It has a ruler, level, screw in, ballpoint pen, and a stylus for touchscreen devices. 5 functional tools, all in one convenient place.
Okay, Amazon continues to thrust a bit higher. Amazon looking good. Amazon. Nice follow through so far. Buy order blocks.
The people of Los Angeles need your help. Scan the following QR codes to donate to organizations providing services to people in need. The American Red Cross. Your donation enables the Red Cross to prepare for, respond to, and help people recover from this disaster. Scan the QR code on your screen or visit orca.tv/donate to give to the American Red Cross. Los Angeles Fire Department Foundation. Your donation supports the LAFD by providing essential equipment and trainings to supplement city resources. Scan the QR code on your screen or visit orca.tv/donate to give to Los Angeles Fire Department Foundation. The Salvation Army. Your donation provides food, personal necessities, and shelter to survivors and first responders. Scan the QR code on your screen or visit orca.tv/donate to give to the Salvation Army. Feeding America supports communities before, during, and after disasters as part of a nationwide network. We are working closely with the Los Angeles Regional Food Bank to assess damage and provide help where it's needed most. Scan the QR code on your screen or visit orca.tv/donate to give to Feeding America. Scripps News and the Scripps Howard Fund provide relief for the Southern California wildfires where it's needed most. Every dollar you give goes directly to those impacted by these devastating fires. Scan the QR code on your screen or visit orca.tv/donate to give to Scripps News and the Scripps Howard Fund. The wildfires are rapidly evolving. Visit orca.tv/donate for more resources that could use your contribution. Thank you.
Yield pulling back from 14-month highs on the heels of this morning's softer than expected inflation growth. We weren't too far from that 5% level, but as of right now, the 10-year yield right around 4.64. So here with more on today's reaction and also how to best play the bond market through ETFs. We want to bring in Steve McPhee. He's Vanguard's senior portfolio manager. Joining us now as part of today's ETF report sponsored by Invesco QQQ. Steve, it's great to have you on here. I'm curious just what you make of today's dramatic reaction to the inflation print we got this morning, what this means here, what this signals for bond market investors who are trying to play this through ETFs.
Good morning. Thanks for having me on. So let's start first of all with Vanguard's core philosophy, and that is we're bullish on bonds. We see bonds having a special moment. It's the type of moment where you want to march to the rooftop and shout out to investors, buy bonds. And to paint the story, to tell the story, we've got to go back to the fourth quarter.
Apple looks like it wants to go here. Watch Apple.
That's when yields peaked last in October, and we hit that 5, 10, and 30 years. We hit that 5% very briefly in 10-year U.S. Treasuries. That happened because inflation was running at a double-digit pace. We had uncertainty in the global economy. Central banks were trying to get their arms around the situation and put stability back in the system. Fast forward 15 months later, like you were saying, we've got the same level of yields all of a sudden, but inflation is a two-handle. The Federal Reserve has landed the plane per se. Things have stabilized. The picture is much rosier in the U.S. We have U.S. exceptionalism, and it is alive. But again, yields are high. That means bonds are an opportunity. Like you mentioned, we briefly hit a 5% here in the 30-year in the last few days. We had a slight tick down in CPI today of 0.1%, and all of a sudden we have a 14 basis point rally intense. So I think the market realizes we're cheap, and it reacted, and it dipped by. It was buying the dip pretty ferociously.
And when you take into account the extent of a move like we are seeing here this morning, is that something that's going to be almost like the new normal here for bonds as we do get to this place here of a little bit more certainty?
I think investors need to look through the noise, look past the noise. Let an expert like myself, a professional, worry about the day-to-day oscillations of the market. Really, our message is there's a special opportunity here for investors to lean further into fixed income. And I'm going to Vanguard geek out a little bit here and channel my inner Jack Bogle. Jack would say stick with your program, and program is synonymous with your investment allocation. Based on strong U.S. equity returns in 23 and 24, which were double.
Rigetti
You're probably leaning too heavily in equities.
pushing higher. Rigetti's on the move.
Far in that direction. It's thirsty for bonds. So as a recommendation,
Okay, Rigetti, RGTI.
professional like myself deal with the day-to-day volatility.
Well, Steve, I think the question investors are asking is what's the best way to do that, right? There's so many different ways to invest in the bond market right now, whether you're going on the long side or the short side. Where are you seeing that opportunity?
Sure. I mean, first and foremost, we really don't care if it's mutual fund, ETF, passive or active. Just get it in there. But we are seeing a preference for ETFs. That doesn't mean there's any tension between mutual funds and ETFs at Vanguard. Our mutual fund business is bustling, but there's a preference building for ETFs. 10 years ago, that was 10% of AUM at Vanguard.
Rigetti's on the move.
And I think there's really three reasons why the preference in ETF is building. The first is pretty easy. It's pretty historical. And that's the fact that you have intraday liquidity, minute-by-minute liquidity, push-of-a-button liquidity. The second, which is evolving, is around taxation. The ETF in kind or DE mechanism will wash away any capital gains, any unrealized capital gains that are in the portfolio. So you can minimize gains and you can reduce capital gains in the ETF wrapper. And the third is more new, and that's around advisors really focusing on tax loss harvesting. And that really exists in an open architecture, ease of access environment where these advisors can do as many trades as they want on an ETF with no gates or restrictions like a traditional mutual fund might have.
See, what do flows look like so far this year for you?
Flows are robust. I mean, we're fortunate here at Vanguard. They're usually robust, but they're extra heavy in fixed income, active and passive. I can speak to munis in particular. The muni market in 2024 had the 5th best inflow period in the mutual funds and ETFs going back to the early 90s. On our desk, the muni active desk, we're a market leader with $200 billion in assets. We traditionally take about 20 to 25 cents on every dollar. We had that same pace last year. The big change we are seeing is flows are actually going into short duration products for the first time in 2 years. With the Fed easing several times, they're pushing fund money markets out the curve into ultra short and short duration. But importantly, we are still getting flows into high yield, long-term, intermediate, and state-specific products. So it's broad and robust.
We'll see what the trend continues. Steve, thanks so much. Let's do a quick market check just about 90 minutes into the trading day. Again, on the heels of the softer than expected CPI print out this morning, you're seeing a risk-on rally play out in the broader market. You got the Nasdaq up just over 2%. You'll gain gains for the S&P up 1.6%, and the Dow up around 640. So just off the highs of the session. And take a look at the bond market action. That's really where we are seeing a massive pullback here in yields this morning. We are seeing bond prices to the upside. Lots of worry about the high yields that we have been seeing. How big of a challenge or headwind that could be here for equities. So again, on the heels of this script, we are seeing bond prices moving to the upside. We are seeing equities here rallying just a bit. Keep it right here on Yahoo Finance. Much more coming up. Next, we've got Wealth that's dedicated to all of your personal finance needs. Brad Smith has you for the next hour. Stay tuned.
Liberty Mutual customized my car insurance, so I saved hundreds. With the money I saved, I thought I'd get a wax figure myself. Cool, right? Look at craftsmanship. I mean, even got my nostrils right. It's just nice to know. Years after I'm gone, this guy won't be standing the test of. It's melting. Oh, jeez. No. Only pay for what you need. Liberty, 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 liberty. It's the playoffs. He always judged in January. Nah, bro. Oh, no. I don't think he's no chance. That's even his shot. My guy was smoke.
Rigetti continues.
It's the playoffs. You should put that on prize. Just get more or less on a few players for a shot to win up to 1,000 times your cash. Now roll the prize picks after the playoffs for $50 instantly when you play your first $5 line. Prize picks. Run your game.
That's a path. Are you ready to go? This time tomorrow we'll be on the road. Taking the good, the ups and downs. Home is with you wherever that is. Home is with you wherever that is. Wordscapes keeps families connected. Play now.
I say, let's go. How about it? But it all hangs in the air. I just want this for so long. I have no notes for this game. I don't need it. Come on! It is gone!
Okay, watching Apple to push. It needs to push through this area of supply. Checking on Rigetti. Rigetti continues to move higher. Rigetti. Okay, we got buy order blocks a few minutes ago, right around 1 o'clock. Looking for it to continue higher. Rigetti.
minute. Stocks higher after core CPI rose at a slower pace than expected in December. And top stories, big bank earnings beats, pushing the Dow higher as Q4 results kick off. JP Morgan Chase with full-year profits hitting a record $58 billion, driven by its investment banking business. Goldman Sachs and Citigroup earnings also beat the street. Plus, Tesla plans to suspend part of the line's manufacturing its refreshed Model Y Juniper model in Shanghai for 3 weeks. It's for Chinese media, according to Bloomberg. And quantum computing stocks jumping as Microsoft declares 2025 the year to become quantum ready and de-risk computers, and after partnership with Parasoft Technology. Now, it's been a roller coaster for the sector after NVIDIA CEO said useful quantum computers are at least 15 years away. And that is your Yahoo Finance Market Minute. For more what's trending on Yahoo Finance, scan the QR code below to track the best and worst performing stocks.
Okay, we're at the highs. Meta's at the highs. Looking good. Meta looking good. Rigetti looking good.
Welcome to Wealth, everyone. I'm Brad Smith, and this is Yahoo Finance's guide to building your financial footprint.
Apache, new high of the day.
The resources, tools, tips, and the tricks that you need to grow your money. Hey, on today's show, big banks kicking off a busy fourth quarter earnings season today. We'll talk to a chief investment officer who's calling it the most consequential earnings season in more than a year.
Futures continue to move higher.
Shows that consumers are still spending a lot of money on food, housing, and gas. We'll bring it down. Plus, Yahoo Finance's very own John and David Schneider joined the show to discuss a 5-step strategy that you can use to pay off debt faster than the popular snowball and avalanche method. All that and much more coming up during today's show. But first, let's take a look at some of the market action as we always do. We are 90 minutes into the trading session. We're taking a look at the U.S. major averages up across the board. The Dow up 1.5%, the S&P 500 up 1.6%, and the Nasdaq Composite saying, "Hold my beer." It's up 2.1%.
Apache making new highs.
December's consumer price index was in line with estimates. Joining me now in studio, we've got Vance Howard, Howard Capital Management CEO and CIO. Big banks officially kicking off earnings season today. You say that this could be the most consequential earnings season over a year. What should investors be doing?
Well, that's an interesting question because, Brad, we were very bullish going on the banks at the beginning of 2025, and we still were bullish in that area. But if you look at what happened in California, what's happening with the banks, there's going to be some defaults. And that's going to cause some issues, especially with earnings as we go forward. I don't think people have calculated that in yet. It just happened over the past 3 or 4 or 5 days. So our theory or our synopsis was going into the year may have changed a little bit. So we're going to be a little bit patient as we look at the banks, because if we do start to have the defaults that we think we're going to have, it'll impact earnings in the third and fourth quarter, maybe not the second. But you look at a $20 million house, they lost 12,000 homes. I mean, that doesn't include strip centers and multifamily, et cetera. And it just keeps going and going from there. If you had a $20 million house and you could only insure it for $3 million, you do your $17 million down, or maybe you put $2 or $3 million down, so you're $12 million. That you've got to pay back to the bank. So we're going to walk away from that, and that's going to impact especially mortgage companies. You look at like Wells Fargo and Bank of America, which are holding some of those notes. So that's something to think about. This was it was devastating.
Just to follow up on that, because I think you're making a great point here, in that it wouldn't show up in the numbers that we've seen recorded right now. But to what extent do you expect to hear it talked about by CEOs, by some of the executives, even as they are trying to position the narrative for their outlook for the year ahead, with the analysts, with the investors, but also knowing that this is a major event that really has...
Okay, Rigetti continues to rise back up to the morning highs around 1150, 1155.
Let's take into consideration the regional banks that really could be devastated by what happened in California. This is a 1-in-100-year event. This is a 100-year storm. You look at what happened in the Carolinas, the home values and the property values weren't nearly as elevated as what they are in Los Angeles. These are through the roof. Another thing that they're not taking into consideration too, there were some incredible art and artifacts that were inside of a lot of these homes that are gone. I read the other day that a gentleman had a tremendous amount of Warhols, and he pulled out 3, and I think he had 20. That means the 17 are just ashes now. How do you put a value on that? It's really tough. So there's a lot of insurance risk out there too. When you look at inflation, insurance is a big component of inflation. Our rates just went up. So,
For sure. So you also have some stock picks for us as well that you're watching right now. What is the top of your list in terms of what you're prioritizing and how you're evaluating?
my top pick for 2025 is Salesforce CRM. And we really like that pick due to the fact that it's got recurring revenue. Excuse me. Recurring revenue, you don't have to go and resell the product again. It's it's a monthly subscription. We use Salesforce and we're very, very pleased with it. It's not inexpensive. It's actually expensive to use Salesforce. It's an incredibly effective tool, but everybody wants to look at AI, artificial intelligence, and how's it going to affect my life. This is going to be one of the few firms that you can actually probably see it and use it at the very beginning phases because of the robust structure that Salesforce has internally and what they're trying to accomplish.
Right.
So we're very bullish on Salesforce in 2025.
It's interesting. I was at the National Retail Federation big show, and Salesforce was one of the most prominently displayed logos in the exhibition hall as you were walking in, hearing people talking about agents and agent force. So for just lastly, while we have you here, though, we have a bit of time, your top tip for portfolio evaluation this year?
Well, like I said, with Salesforce. I also like O'Reilly Auto Parts. And one reason I like O'Reilly, number one, they're well managed. They're auto parts. So good times, bad times, people are going to buy auto parts. But they've had a long track record that's continually marched forward in their value of stock, and they've got a good balance sheet, and they've got a good product that people are going to continue to use no matter what the economy does.
Thanks so much for taking the time joining us here in the studio. Appreciate it.
Good to see you.
Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session with Yahoo Finance's trending tickers page. First up, Moderna's price target cuts to $38 a share from $70 a share at Morgan Stanley. The new target implies nearly 11% upside for the stock based on its last closing price. The analyst citing recent financial updates, including the firm's lowered 2025 revenue guidance and competitive pressures in the vaccine market. Next up, we're also tracking SoFi and Affirm, both rated outperform in an initiation note from William Blair. The analyst Andrew Jeffrey, citing the momentum of alternative options to traditional banking.
All right.
Leaders in the fintech space. SoFi with focus on personal, student, mortgage, and credit card loans, and then Affirm as a buy now, pay later provider.
Futures continue to grind higher. Rigetti's at the high of the day. Rigetti looking pretty good. High of the day, sorry. Just shy of the high of the day. Apple continues to rise. Apple. Moving through some pivots right here. If we get through this area, you'll see this sell order block disappear.
New data from the Bureau of Labor Statistics shows core inflation eased for the first time since July. That core measure strips out volatile food and energy prices and climbed 0.2% in December. It's down from 0.3% in November. But food and energy costs are where a lot of Americans' money is going right now. Here with more is Yahoo Finance senior reporter Alexandra Canal. Hey, Al.
Hi, Brad. And that's right. A big bit of a mixed bag here, I guess you could say, when you think about the progress in moderating sticky core prices. But if you are a consumer, you're still feeling that pinch. And if we do include food and energy costs back into the equation, headline prices rose 0.4% month over month. That's an acceleration from what we saw in November, signaling that there were some hot pockets of price growth within this market. Gas prices, a big standout in this print. Cost at the pump rising 4.4% last month, accounting for over 40% of the monthly headline increase. Shelter costs, although easing from November, they're still up 4.6% from a year ago. And that's despite this being the smallest 12-month increase since January 2022. So just goes to show how tough it's been out there in this housing market. In a similar vein, we saw that the cost of rent, as well as the equivalent cost to rent a home, both ticking higher. Meanwhile, food remains especially sticky. The price of eating at restaurants rose 0.3% in December.
Okay, NVIDIA is about to go again. NVIDIA.
You're not getting much relief there either. Some of your basic items like cereal, bread, bacon, all seeing prices rise. And of course, we can't talk food without talking about the often volatile cost of eggs. Egg prices easing from a month earlier, but they're still up nearly 37% from a year ago. There were some items that did see relief.
NVIDIA, it's above the 135 call wall. So we should see 140.
Airline fares, a big pain point for consumers last month. rising almost 4%, Brad.
Ellie, thanks so much for the breakdown. We've got much more as coming up. I talked to the CEO of Big Commerce about the impact of inflation on consumers. That's coming up next. Well,
Some people just know they can save hundreds on car insurance by checking Allstate first.
It's gonna get nasty later.
Like, you know to check the weather first before sailing. So check Allstate first for a quote that can save you hundreds.
Send those pics in. What we running with today? You already know. Joe, Trav is about to go off tonight. Fast. That's the play. Run it. I'll see y'all tonight. Might have to run that. I told y'all to run that. Come on now. You said it. Come on. You said it. Download the PrizePicks app today. Enter $5 and get $50 instantly. PrizePicks. Run your game. Buenas noticias para los clientes de Spectrum Internet. Ahora puedes probar Spectrum Mobile por todo un año sin costo alguno. Trae tu propio teléfono y pagaremos el saldo pendiente hasta $500 por línea. Además, cambia tu teléfono cuando quieras, las veces que quieras al obtener el plan ilimitado Plus.
At Palmetto Furniture Company in Historic Society Hill, we get it. We understand that even with over 50,000 square feet and 4 warehouses stocked with quality name brand American-made furniture, it just might not be enough. That's why we also specialize in custom furniture. Our experienced staff will help you pick out your style with your choice of fabrics and your choice of colors. And remember, our prices make it worth the drive. Palmetto Furniture Company in Historic Society Hill.
This is the story of the one who doesn't just see a broken dock. He sees lost revenue, a late night, and work stalled to a halt. Thankfully, he has the experience to handle whatever comes his way, and has Grainger on his side, offering access to technical product specialists and the scales to deliver fast. So he can keep his business in gear and always moving forward. Call quickgrainger.com or just stop by. Grainger, for the ones who get it done.
Okay, NVIDIA making new highs. NVIDIA is up against some supply overhead. If we can make it through this area, we should see 140. Okay, everything is starting to move now. Looking really good. Looks like buyers. We look for buyers this time of day.
Year-end inflation expectations climbing. Joining me now in studio, we've got Travis Hess. He is the CEO of Big Commerce, an e-commerce platform that supports businesses like Real Wheel, Johnson Walker, General Electric, and many more. Travis, great to have you here in studio with us. Thanks for having me, Brett. Absolutely. How are you seeing inflation impact the businesses that you work with and then the consumers and the pulse that you're getting from some of your clients on the consumer?
Certainly it's a concern. We're seeing a highly promotional environment. Certainly, I think for us, allowing robust promotional capabilities for brands and being able to pull a number of different levers to not only control costs but encourage lower cost of customer acquisition. But I think the balancing act there is you don't want to unintentionally turn yourself into a promotionally oriented brand when that's not the long tail or intent of doing it. And so you're seeing this balancing act of how much do I push for promotional to get?
Okay, everything is pushing higher now.
But at the same time, not kind of over-indexing where that becomes the consumer expectation, and then they're not shopping under normal circumstances.
Which, as we talk about e-commerce, the natural consumer tendency or the mindset, even when you're going into purchasing online, is I'm looking for a deal. I'm trying to comparison shop, but there's still areas that are seeing stickier prices categorically. Where are we seeing that continue to play out?
Well, I mean, I think traditionally, and we had a more condensed sort of holiday season this year with Thanksgiving obviously coming late. So you saw high concentration in a shorter period of time, certainly. I think, most folks, depending on the industry, looking for recurring revenue, so subscription, certainly health and wellness and beauty did very, very well this year. I think fashion has become more fast in the sense that the trends are changing so quickly. And so you're seeing shorter manufacturing cycles. You're seeing a highly promotional environment there with narrower levels of inventory that's driving sorts of behavior. But I think there's a concern around discretionary spend, but people are still spending. We saw a dramatic increase in cyber weakness across our customers that outperformed massively against the average. They were 26% year-over-year growth. So we're seeing our customer base do very, very, very well. Our thesis is providing the tools and levers for organizations independent of size to pull those levers regardless of macroeconomic trends.
We mentioned some of the household known businesses that you work with at the top of this conversation, but I wonder for small businesses out
Okay, let's take a look at S&P 500. We want to be above 5950 and stay there. Okay, we're at 5950 again.
small businesses upgrading the platforms that they use to engage with consumers on a daily basis.
I think our approach to this is optionality, right? And speed. Speed trumps everything by delivering things quickly and going to customers faster. The presumption is we're doing that with less cost and more agility, certainly, as things change pretty quickly. I think, optionality has also been key, particularly around payments and conversion optimization and things like that. We lead with an open platform. So again, mapping the right sort of card processing, the right sort of conversion techniques and experiences, particularly in cart around the overall customer experience, has been key. Making sure that's mapping to the right industry, the right vertical, the right market, and the right maturity side.
Okay, right back up to 5950. So we need to jump above 5950 and see a lot of those puts that were down there below. A lot of these puts. Okay, you can see in this grid the S&P absolute gamma. Okay, so we are currently trading 5947. 5947 is right here. So 5947, 5950. If we can get through 5950 right there, the next level is 6,000. We got a little intermediate level right here at 5975.
And so in focusing on that value creation as well for consumers, what do you anticipate the consumer response will be to all that?
Well, I think obviously conversion is the biggest leading indicator and really conversion across channels. So what channels are we seeing value creation? What channels are we seeing customers wanting to buy the brand or through the retail channel and then doubling down on that areas and eliminating channels that have been deemed superfluous or not necessarily performing as well. But it's that experimentation mindset of being able to go out and test different ways of interacting with customers and being able to measure that in real time and react accordingly is going to be what differentiates one brand from another in their ability to be able to perform.
Yeah, it seems like brand allegiances are really being tested right now, especially with new generations as well, making up more of the consumer spending here. Travis, thanks so much for taking the time.
Thanks for having me, Brett. Appreciate it.
Coming up, our tech editor, Dan Howey, sits down with Microsoft's Chief Marketing Officer for AI at Work to discuss the latest AI offerings that you need to know about. That's next on Well.
This Christmas, the best gift of the year is coming.
Oh my gosh, guys, guess what just arrived at my doorstep?
Introducing the Insta-Cozy Photo Blanket.
I sent the super cute photos so they can make me a custom blanket and we're gonna open it up together.
Scan the code on your screen now and upload any photo to get started.
Hey, let's see.
Your custom blanket is printed in the USA and ships the next day.
The color's amazing. Super rich.
Scan the code on your screen right now to order with this special TV offer.
I also love how massive it is. No more freezing toast sticking out of the bottom. It's got the Sherpa lining on the other side, so it's super warm and soft.
This is only available for a limited time.
After your special moments, and then turn them into one cuddly keepsakes that you'll cherish forever.
Give the gift of personal memories this holiday season with the Insta Cozy Photo Plan.
Okay, so we need to stay above 59.50. Okay, so we're right at 59.47 at the moment. All right, Tesla continues to move a bit higher, looking really good.
Microsoft is rebranding its chatbot as the race around AI heats up. The company revamping its chat feature with a new payment structure designed to entice more companies to use the AI-powered software. The enhanced chat will offer AI agent functionality for customers powered by GPT-4o and include a pay-as-you-go fee so organizations can pay based on usage. Joining me now on the announcement is Jared Spataro, Microsoft's Chief Marketing Officer for AI at Work. Jared, thank you so much for joining us. Can you just kind of run us quickly through the announcement that Microsoft's making today?
Great to be here with you, Dan. As you indicated, we're announcing a new product. It's called Copilot Chat, and it really contains three things. Number one is free, secure AI chat. And it's really important to recognize that this first component is free, it's secure, it's handled the same way that we handle emails for our customers. Second is agents, as you indicated. And the big news here is not an agent framework, but a way to just pay for what you use. It's accessible to any user on what we call a metered basis. And then finally, IT controls for security, privacy, compliance, the types of things that are very important to people rolling out these at scale, these types of solutions. So really exciting. We're excited to see what customer reaction.
So Microsoft already charges $30 per user per license for the enterprise version of Copilot. What's the pricing structure on this? What would you pay per usage?
Sure. So if you're just using the free, secure GPT-4 powered chat, it's free, and that's what's attractive. The starting point is literally free. But then on top of that, you get to add agents, and you can think of agents as AI tools that help automate business processes. Those agents are charged on a pay-as-you-go basis, and we charge based on the messages that come back from the agent.
Okay, so we're getting rejected again here.
It's a cent per message. We start for a message that comes back at a cent, a message that comes back that's generated by AI is 2 cents. So if you looked at, for instance, kind of average internal employee-facing agent, and it was answering hundreds of questions a day from many people, it might be on the order of $50, $60 a day. So we think that there's incredible value here as people look at business processes that they'd like to improve.
So is the idea here kind of to give people kind of a means to ramp up use of AI or kind of dabble in AI without having to sign up for the $30?
Okay, would love to see us close above 59.50.
Exactly right.
That would help out a lot of these stocks.
We've been talking about now for many months. Dow is one, McKinsey's another. In Europe, we have Pets at Home, who have been able to use Copilot plus these agents to literally save millions of dollars. Just a single agent for them can save millions of dollars. But up to this point, that's only really been accessible on that $30 per user per month type of basis. And what we heard from our customers was, boy, when we get there, the value proves itself out, but how do we scale? So this offering is meant to be an on-ramp. It's meant to be an easy way for you to start to use the basics of chat, again, for free, and then on top of that, agents in this consumption basis. And what we really love about it, what customers tell me is that I previewed it with them over the last couple of months, is they really feel like it proves the value itself. It kind of builds the business case as people choose to use it to get their work done.
So what has the uptake been like for Copilot for enterprise so far for Microsoft?
Well, we've been very pleased with it. In fact, we see increasing momentum. We're at a point where we're not right now announcing any new figures related to today's announcement, but earnings is coming up for us, and we'll be talking about Copilot there. But in our customer events last fall, during that season, we were able to highlight a whole bunch of customers all across the world that are being able to really realize great measurable business value. It starts first, Dan, typically with cost savings. That's what's easiest to measure. But we also see people who are automating things that their sales force is doing to drive increased revenue per head for sellers. So it's starting to get its kind of a broad set of effects across the enterprise, across all functions right now.
I guess one of the questions then is, as these AI features continue to roll out, how does Microsoft or the general industry get enterprise customers to make this a part of their everyday lives? Yeah, it's obviously a big kind of change for workers who are used to doing a certain type of work on the daily. How does this become then a part of their daily lives?
Yeah, that's the big question. It's the big reason behind today's announcement. What we see is the future is already here, but as so many people say, it's just unevenly distributed. So you can think of it this way. Companies all across the world are starting to see what I might call departmental results. They have people who have figured out, and here's how I can use AI to really drive those very measurable results. But enterprise level results, that typically is going to require broad adoption. It's going to require people to alter their habits. Now, one of the things that we have seen in our telemetry is that when you give people a tool, like we're introducing today, AI-based chat, they start to not only use it, but they find new uses for it. They start to modify what we would call their workflow, their daily workflow. But it's a matter of broad exposure. And so again, this gives us an on-ramp, or an easy way to let people be exposed to the technology and then to allow them to find places where it can be used. So for us, we think it's the best of both worlds based on what we've learned with our customers so far.
All right, thanks, Jared Spataro. Much more wealth after the break.
It's the playoffs. You always church in January. Nah, bro. No chance. That's even the chance.
Okay, we're going above 59.50 now.
Just get more or less on a few plays for a shot to win up to 1,000 times your cash. Available in 30 plus states, including California and Texas. Prize Picks, run your game.
At Granger, we know the ones who get it done wear a lot of hats. A hard hat is one, problem solver is another. Whatever the job calls for, we're here for you. We're America's trusted source for industrial grade products, with the scale and resources to deliver and the knowledge to help answer tough product questions. Because we know that hats change. And having access to real people ready to help, combined with fast delivery, never goes out of style. Call clickgranger.com or just stop by. Granger, for the ones who get it done.
One of the benefits about PayPal is many of the processes are automated. If I look at the income statement, I can see it flow directly from PayPal. The ability to see what the impacts are very quickly. If we had to do this by hand, we would be months behind in understanding if we were healthy or not. Are you certain you're fit?
Sure.
Are you pretty certain? Certainty matters. When you need certain promo gear, you can be certain 4imprint's got it. Quality apparel? Got it. Drinkware? Got it. Bags? High-tech? Outdoor? Got it, got it, got it. So go get it at ForImprint.com. For Imprint, for certain.
All right, looking good, looking good. Now we just need to get Apple to pop up now. We got S&P above 5950, so this could be a good one for the next few days. Okay, let's take a look at breadth. I've been sitting here doing some scans while I've been a little bit quiet. My voice also bothering me. Okay, so we got advanced decline percent shooting higher. Okay, we know what that's telling us. We've got the New York Stock Exchange McClellan volume oscillator turning back up. That's bullish. We have the New York Stock Exchange high-low. Take new highs, subtract new lows. We're back above the zero line. That's a big plus. That's a big plus. Advanced decline also turning up. And we got green elder sticks. Let's see what the ARCA Institutional Index is saying. ARCA Institutional Index, that's the 75 stocks most commonly held by institutions in their core portfolios. So we want to see XII with green elder sticks. We got a green elder stick. That's a big plus. Okay. Momentum indicators are turning. So this is looking pretty good for a follow through into Friday. The bears will resent it for a little while, but we're moving higher. We also got junk bonds with a big gap up. Huge move on junk bonds. That's looking really strong here. Junk bonds. 10-year yield moving lower. Okay, it's probably going to close in the lower half of the daily range. Watch stochastics. Stochastics is turning down, telling you to look for progressively lower closes inside of the daily range. That's a bullish signal for equities. The dollar, US dollar turning, US dollar. Okay, that looks good. Let's look at TRBCX, T. Rowe Price, blue chip growth. T. Rowe Price, blue chip growth. This will update by the end of the day. I'm looking for this to turn up.
It's anticipated that we could see more mergers as well in the financial industry under the incoming administration and Trump. And this deregulation has been talked about at length. I wonder, from your seat at the table at Southern Bancorp and assessing the rest of the industry, what would that mean for regional and smaller banks and ultimately your customers and changes that they could see?
Yeah, so unfortunately, many of the markets we serve have larger institutions have abandoned those institutions. In fact, we have 56 locations across the Arkansas Mississippi Delta. In 12 locations, we're either the only bank or one of only two in the entire market. And so when you see that mass consolidation, you see all those banks disappearing from those communities that are less wealthy, that are underserved. And so that's why as a community development financial institution, our focus is really on serving those markets that have been abandoned by other institutions. And we have been aggressive ourselves in M&A. And so one of the things we're able to do when you have the scale, we're at $2.8 billion, looking to grow to about $5 billion in the next 2.5, 3 years. So we're looking at M&A opportunities as well. But we want to ensure that all communities have access to capital and credit that's so desperately needed to stimulate and revitalize those communities.
What are the keys towards getting to that $5 billion figure that you just mentioned?
Yes, so fortunately for us, we've benefited from a number of programs. We've got an infusion of capital that's allowing us to grow. And so it's both organic as well as M&A opportunities that we're looking for. And so we're right now focused on on making the investments necessary to build the infrastructure, the team, and the talent and systems necessary to grow and scale our business. When I got here way back in 2014, we're about $1.2 billion. Today we're $2.8 billion. And so we're looking to continue to grow and provide our brand of financial education services and products to communities that often neglected or left behind or even abandoned in large institutions.
Just lastly, while we have you, we only got 15 seconds. What dollar figure are you earmarking for potential acquisitions?
It's our last two acquisitions have been about $200 million each. I don't think it's a dollar figure. We're looking to go larger than that. We're, over the next 2.5 to 3 years, we're looking to double in size. So that means we're going to have to both organically grow and look for larger acquisition targets.
Darren, great to have you on the program here with us today. Really appreciate the time and look forward to checking back in the future.
Thank you, Brad.
38% of Americans say financial stability is their top focus area in 2025.
Okay.
Survey, and not alone.
All right, there goes Amazon. Amazon cruising higher. Okay.
Some experts recommend the snowball method, where you pay off the smaller balances first, while others advocate for the avalanche method, where you pay off the highest interest rate debt first. And guests have the debt lasso method, which they say helps you pay off debt faster than those other two methods. Joining me now, we've got good friends of the show, John and David Schneider, debt-free guys and hosts of the Living Not So Fabulously podcast. Great to have you back here. David, let's start with you. Run through the 5 steps of the debt lasso method for us, and how does it work?
Sure, definitely. As you mentioned, there are 5 steps. The first step is to commit. Commit is actually broken into 2 pieces, and that is 1, commit to a specific amount that you're sending to your credit cards, pay them off every single month, at least that amount every single month. The second portion of commit is not adding more balance to those cards, because that makes it harder to pay them off. The second step is to trim, which is actually the snowball method, and that is look for those small balances that you can pay off really quick, maybe 1 to 2 months worth of payments, that you can get those quick wins out of the way. The third step is the lasso portion of it, and that's really when you look at all your credit cards and say, how can I get these to as as few accounts as possible with the lowest interest rate, grabbing all that and bringing it in to manage it much easier. The fourth piece is to actually automate all of the process of paying those credit cards so that you don't miss a payment and end up having a late fee. And then the fifth step is to monitor that. You know you're going to pay a credit card off, so you're going to have to switch some balance or payments around.
And so, John, what is the best way to really approach that lasso step and bring your debt to fewer locations that are fewer and lower interest rate as well?
Yeah, the tools that David and I use personally, and that many of us have, credit card balance transfers. But if that's not necessarily available to you to lower your interest rate, maybe look at a credit union or a bank for interest rate as well.
All right, so Apple looking for us to move through this area. We got a buy order block right there around 115. We're looking for a price to get through this upper level. Most likely will.
So I wouldn't necessarily put a time frame on it, just be consistent. Stay focused on your goal. It's taken some people a few years to pay off the debt. It took us just under 3 years, but some people take it up to 8 years. But don't beat yourself up. There's no point in that.
Give yourself grace, but also be consistent. David and John Schneider, thanks so much for taking the time here with us. And you can catch more of John.
Okay, S&P 500 looking good. S&P 500 above 5950.
From wherever you can do whatever you want, and that's not necessarily the case, especially when you're starting off a business. You want to do it the right way, in my mind. And so, as much as it is rewarding, and you can really get a lot from that, it is also you have to put put the effort and energy into it. You have to put the time into it. You have to think about your finances. But I think it's not for everyone. And I think someone has to really get deep into understanding and also some people who have businesses and getting mentors and finding out like what's their experience before they kind of make that jump into it.
Recent demand for guaranteed income solutions has sparked a surge in annuity purchases over the past few years. According to Bloomberg Research, total annuity sales in the U.S. topped $430 billion in 2024. But let's take a step back here. Exactly are annuities, and are they a good investment vehicle for you? Here is more. I'm joined by Michael Downing, who is the Athene Chief Operating Officer. Quick disclosure, Athene is a subsidiary of Apollo Management, Yahoo Finances, Yahoo's parent company. Great to have you here on set with us, Mike. Let's start with the basics. Just what is an annuity and how do they work?
Yeah, so in a general sense,
All right. Let's see. We're above 59.50, so we're looking for prices to continue higher. S&P 500. Okay, let's see.
principal protection with potentially some equity-like upside, and all of them are built within a tax-deferred method. So they both protect and preserve wealth and help retirees retire with confidence.
Now, annuities may not be for everyone, so what are some of the limits here that we should also be keeping?
Okay, S&P. We need this to close above.
They should generally be an anchor of almost any portfolio in terms of the preservation of wealth. And so the things that customers should look at is the type of protection they need. So one is a guaranteed return on your investment, and that's what some simple annuities provide, a guaranteed, say, a 5% yield for guaranteed for 5 years. Or is it you still want upside of the market, but want to protect the downside? That would be an example of a fixed index annuity. And then there are others that are
All right. So S&P had a nice little move there. Anybody take any 0-day? You just took some in? Okay. What were you trading there? Stephen, what were you trading? Looks good, Paolo. Looks good.
And certain products are really popular at all ages. The simple guaranteed rate return, popular across the spectrum. Other types like fixed index annuity, which promise principal protection, but have
Yeah, bring me up to speed. This look, it's going to expire at the end of the year, the package. So, kind of something has to be done, or else we are going to go back to the way that things.
All right, we got about an hour and 16 minutes to go. An hour and 16 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday the 15th, and what a great day it's been for the Bulls. Right out of the gate, we gapped up, made a high, S&P 500. We hit the 59.50 level at A, the A pivot, which we look for very often. We look for this pattern every day. We got our A pivot about an hour and a half ago. I was telling you to look for these ABCD patterns in some of the stocks that we were trading, like Meta. Okay, Meta, you got your ABCD pattern there, making new highs, looking for a follow through. Tesla, taking out the highs. Okay, we've got a couple of higher lows there. So call that C there. Call that C, and then D up here. Okay, looks good. We're above the call wall. You know the call wall is where our dealers will need to hedge above the 420 level. They're short the 420. You're long the 420. So guess what they do when we move above 420? They have to buy shares. Usually they'll buy shares to hedge. That creates more volume, creates more interest. More people buy calls, more dealer hedging, and it just creates a feedback loop that pushes prices higher. We got above 420, so that was the object for today. We needed to get above 410. We did that early this morning, gapping up right to the 409 area and then following through. Came back and retested. We got 2 buy order blocks here. Looking for B and C pivots. Looking for B and C pivots. Let's take a look at Microsoft. Okay, kind of a flat pattern. We're looking for a B pivot. Microsoft really didn't pull back that far. We got 2 buy order blocks on Microsoft. Yeah, LA, we're going to do that. We are going to do that.
Well, the problem that what they don't realize is that
We'll have a traders a trader spotlight someday soon. Okay, and we'll go over how you automate ABCD patterns. Okay, so we got a pivot. There's a B right there. We never got back down and tested this level. Okay, we got buy order blocks on the daily as well. We came down into it, tested it, and reversed. Institutions, portfolio managers, waiting for that liquidity, just sitting here waiting to buy at a lower price. They get their buy, they get their fill, and they start to push this higher. As you know, it takes days and weeks for them to fill their positions. Okay. NVIDIA, yeah, NVIDIA is just crawling along, right, Breno? I'd like to see NVIDIA do that too. NVIDIA, ABCD pattern on NVIDIA today. You got buy order blocks. We're right up against that supply for now. That's what's holding us back right now. That supply, and then above that is 140, the call wall, where all that open interest is. So that's looking pretty good. Let's see what they're talking about on Schwab. Apache doing really well today. Apache, ABCD pattern on Apache. Okay, you got A earlier, B. Okay, you got that buy order block to come in at B. Okay. You got C up here. You got the higher low. And now it's doing exactly what you would expect from an ABCD pattern. Okay, we're looking for this every single day. ABCD patterns. Bread and butter for a lot of you, including myself. You know, you can do these scalps intraday. You see a bullish day on the right. You know what Apache is doing. So you trade it on the way up. When everybody else starts to sell, you take. We never did see any sell order blocks up here. Just a little peak and then start to pull back. So taking some profits, getting back in on the dip, B and C, confirming what we're looking for. Nice follow through. Look at the TTM. TTM is nice cyan color, looking very good. Apache, let's take a look at Constellation Energy. I have a put credit spread on this one. As you know, put credit, I sold at 250, 240, put credit spread for $218 per contract. Got 5 of those. Plan on doubling up. I plan on doubling up on that position eventually. Rolling it out. Okay, everything is looking good. You got a ABCD pattern on Rigetti. Rigetti was good too. There's your A pivot, B, C. Look at the buy order blocks on the way up. Okay, so here's your A pivot. That happens when people take a break and on the West Coast and go to work. Get up early. 6 o'clock, trade the open at 6:30. West Coast time. Okay, looks like D. If we can get through this area of supply overhead, we should see Rigetti continue. Nice bounce off the 50-day identified yesterday. Look at the volume on the daily. I just couldn't wrap my head around how institutions just let this drop so precipitously, because they were all saying how this was probably the best company to own in this group. Okay, so let's look at the quantum stocks. Quantum stocks are all green over there on the right. Quantum. Let's see, Rigetti. I have some QBTS. QBTS. Okay, that one looks good. Okay, you got A over here. You got B, C, 2 buy order blocks looking for a follow through. Looks really good. Looking really good.
Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education. Crafted
Okay,
just for
Tesla looks
traders.
good. Tesla, I have TSLL shares, and I have a 30, 35 vertical, call verticals. Those are making money right now. So I look for Tesla. I'm looking for Tesla to come back up and test these highs that we pointed out to start the week. I'm looking for this high up here. Okay, Tesla, looking for the high up there. Tesla. Okay, Tesla looking for a follow through. Looking for it to get back above the 50-day and erase this, take out this supply that's overhead on that pivot. We got TTM turning, Bollinger Bands are tightening up. So once this gets moving, that's going to be another trade. Looking good. Needs to get above the 50-day to swing for any more. Swing for any more gains. Needs to get above the 50-day. Okay, back to the S&P because it's important that we stay above. Important that we stay above 5950. 5950 is the level we want to stay above.
I just don't think consumers are all that. They don't like to pay for technology. They do it indirectly, we'll say.
Oh, there goes Tesla again. Tesla going some more. Okay, S&P. S&P looking good. I'm exhausted. My son went. They went to a basketball game last night, out of town, and they got back at 12:30. We got home at like 1 o'clock. I'm so tired. I usually get up around 5. I slept in. I got up at like 6. I was very groggy this morning. Anyway, I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Wednesday the 15th. Wednesday, hump day the 15th. It's 2:53. This time of day, we're always looking for confirmation. What are institutions interested in doing? What are portfolio managers doing? Are they selling? Are they buying? Generally, you will see that after 2 o'clock, sometimes a little earlier, but I generally look for it around 2 o'clock, between 2 and 3. 2:15, 2:45 is usually a sweet spot. So if we see a lot of buying activity, volume starts to pick up on something like the S&P, we can start to plan for tomorrow instead of waiting until tomorrow morning. Apple looking good. Apple ABCD pattern. Here's C here. Okay. Apple ABC. Okay, you can call this C2. All right. C1, C2. Looking for D. D will be, if we take out this sell order block overhead, that's supply right now. Apple supply just overhead. So we just need to take out that supply. If we can take out that supply, we should see a follow through and head towards 240. I have some 240 calls. Those were pretty cheap this morning. 240 calls. They were I forget, what were they? They were like I want to say an 18, no, 28. I think it was like a 28 delta, something like that. Apple, let me see what these are now. Apple. Okay, so Apple. I have this week's calls as well as next week. Next week's calls. Apple, I have the January 24th. These are 40 delta now. That's good. So that's usually the lowest I'll go unless I think I could see a follow through and close above 40 delta. It's 240 right now. It's a 240 call that I have for next week. It's appreciated nicely. Apple.
Quantum computing is extremely interesting, but it's so early. And my big
240. 240.
we don't know if
240.
There's going to have to be a long build out, and that's the bad news. So I think investors are entirely waiting.
All right, Apple just sitting here trying to get something going. Tesla's doing the best. Tesla doing well. Tesla doing well. Tesla following through. Okay, ABC. Okay, also note the buy order blocks that coincide. Meta also looking good. Meta into the close. Meta is looking good. We got buy order blocks. We just need to take out the supply overhead, that red band overhead. Meta. Meta. Okay, Meta pushing to the highs. Apache just off the highs of the session now. Apache looking for a higher low. Apache. Okay, let's look at a few other things. Let's take a look at the S&P equal weight index. This is breadth thrusts, advanced decline percent. Advanced decline percent. Okay, the Zweig breadth thrust indicator. This is just the advancing. This is just advancing versus the total New York Stock Exchange. Advancing versus total New York Stock Exchange. The trigger very interesting from his book, Marty Zweig's book, when he noticed that many years of following the New York Stock Exchange, whenever prices would pull back, and then we start to see a reversal back above plus 4%. See that right there? When it moved from plus 4% from the lows after a pullback back to 0.61% within 10 trading days, you got a signal. You can see the signal here. Okay. What do the markets do? Well, we started out around 5150. We nearly made 1,000 points there, right? So pretty good signal. Doesn't occur very often. But definitely since May, we've had this nice signal. A couple of pullbacks. Okay, now we're looking for S&P to get back above the 50-day. We're right at the 50-day now. Okay, looks good. Looks good. S&P. We want to close. Above 59.50. Okay, we need to close above 59.50 right here. S&P 59.50 support resistance. That's the call and put wall. Maximum calls and puts right at 59.50. If you have a subscription to Spot Gamma, you know what I'm talking about. Here we are right here, 59.50. So the next biggest level is 6,000. So once we see that, oh, you don't see what I'm talking about. All right, here's 59.50 right here. Okay, you can see that spike. Okay, the orange are calls, the blue are puts. Okay, we're looking for a move up to 6,000 now. Now that looks like we're going to close above 59.50. The next level is 6,000. Okay, so we'd be risk on above this level. Microsoft still going. Microsoft is laying off personnel. And we just see Microsoft continue to move higher throughout the day. There goes Microsoft. Okay, so BC pivots. Okay, this is C over here. And you got a buy order block, which is even better. All right, so you got a buy order block. ABCD pattern, okay. There's your A right there. And buy order blocks, confirming a bullish day. All right, I'm going to take a 5-minute break. I'll be right back. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's 3 o'clock straight up, 3:01 p.m. on the East Coast, the best coast, the coast with the most. I'll be back in about 2 or 3 minutes. I just want to grab a bottle of water as my throat's starting to bother me. It is Wednesday the 15th. Give me 3 minutes. I'll be back.
Futures right now at 59.96 with a high of 5.999. So we're looking pretty good. Strength all day, no real pushback, and the Russell fade a little bit from a nice big early pop. That's kind of what the Russell does. But other than that, we're in good shape right now. Bonds also pinned at lows in yield and high in price throughout the session. Dollars reverted some and come back pretty close to neutral, but the overall situation is still very bullish out there, and things are looking pretty good. Maybe something to be said about crude oil. We'll talk later on in the day about WTI. This morning in our conversation around inflation, we had a good old Peter Schiff on, and it was pretty bared up and talking oil above $100 and inflation ready to resurge. Market's taking the other side of that trade today and relaxing on the subject of prices, even though we had economic data beating expectations pretty handily for several weeks, and inflation implications warming. The number coming in slightly below some of the expectations, largely in line with many of them too. Even though we did warm up from the previous month, numbers are enough right now for stocks to bounce back. Obviously, what we'll be talking about is if this is a bounce back or resumption of the longer-term trend that ended in December as the S&P 500 peaked out. What's interesting in today's session is that you can actually attribute a lot of it to tech, which might be somewhat of an inflation play. Plenty of duration in the technology group, many would argue, but also the Mag 7 just catching a strong bid again around some of the key AI themes. Remember that we also saw yesterday one of the strong points of the market were the nuclear companies, the energy stocks. The whole AI halo effect still is acting as a very strong force for stocks. Mag 7 up 3.5%. Generally, the trade today is one of
Microsoft pushing a bit higher.
Beta ETF, their BTAL, the worst performing factor. So this is a pretty wide embrace of risk assets today throughout the session. You've got Bitcoin up, not exactly a magnanimous move by crypto standards, but it does fit the bill of a risk-on session across the board. So if you're short any of the high beta stuff, you're getting slammed today, and that's pretty much the main notion. I think shorts who were betting that there was going to be further breakdown in the charts are getting squeezed out. Those who are looking for extension of the run in yield,
S&P cash looking good.
as the 10-year's coming down to 4.66, and it's a pretty
Okay, I got to take that break. Let me go grab some water. S&P looks good.
damage on the charts has somewhat already been done, but this is happening right at levels that should grab our attention. However, some perspective, if you broaden out your treasury conversation to the longer term ETF TLT, which of course stretches out into the 30s, then you get a pretty clear or just a bounce back trade of a trend that's already broken. So the 1-year chart for TLT and price had already slammed through the old lows. So viewing it through this particular security through TLT definitely makes the bond rally look pretty small.
Note the quantum stocks on the right.
Came right back down to old 52-week highs, which are right here at 466, 47 or so. So you do have some contention on a few of the charts. You also got a little bit of flattening on the yield curve. The 10s and the 2s slowing down their steepening ascent from the last several months. The red candle showing up today. Not a giant one, nothing that really changes the trend, but it does suggest the slight impulse that we did see in bonds could arguably be something cautious, which is the long-term yields coming down harder than the 2-year, which did make a move upward in the last couple of weeks, particularly just in the last couple of days, which suggests the Fed's not going to cut. The market kind of already knows that. So at this juncture, we're kind of resetting expectations, but they're
could be a message from the yield curve that maybe some of the growth hopes might get pinched a bit if we're not going to get any support further from the central bank. Banks are having a great day, by the way, financials also on earnings. But if you look at the KRE, kind of a notable fade there today, and that relates to the point about the yield curve. The regionals, not quite as buoyant as the rest of the group with the fade from early strength. Still an up day for the regionals, but just something to consider there after they really got beat up. Kind of pairs well with the yield curve pinch, the regionals being a bit of
S&P, I'd like to see a little run into the close. All right, let me go take that break. I'll be right back. Give me 2 minutes. I'll be right back. I'm just going to grab some water.
Let's talk about the stock market winners. First, Jenny Horn, hosting next Jan here with me in studio. Jenny, today is kind of turning into like a stock story day in a way. I know it's like inflation is the highlight, but the banks did really well on earnings. Some of the Mag 7 stuff is doing really well too. But financials overall, I feel, are something we got to talk about because they're a big part of this rally.
Huge part. And I think that this was, not to say that I would have predicted maybe this the upside, but I do think this was somewhat written in the stars as far as the post-election hype, which really hasn't been favorable to these names. So I think that was maybe a bit overdone. And we're also expecting, I mean, just everything we've heard from these banks, more deal activity, deregulation is good for a lot of these names. Also, right now, more and more clarity on perhaps less activity from the Fed. All of this paints a strong picture for banks. And I mean, you look at some of like the deal making we're expecting and various growth. I think also hugely important is the majority of the names we've already gotten do not only see growth for the year ahead, but the re-acceleration of growth. A lot of these names have been hit still by some of the impacts of the overall fallout back in 2023. Now we're seeing that shake off and start to reignite hopes that this space will continue to see further upside. And I do think that in this first batch of earnings, from some of the biggest banks, there were signs that we could, again, see lots of mergers, more trading. Investment banking was hugely a positive theme. But I do think that what we're anticipating for the year, especially for their core banking growth defined by lending or net interest income, doesn't necessarily bode well for some of these smaller lenders. JP Morgan's forecasting actually a slight decline for its core net interest income. That would be from about 92 billion to roughly 90 billion now in the new year. Wells did say it's anticipating modest 1 to 3% net interest income growth. A portion of that, though, driven by some of these more mechanical factors. But more importantly, big banks are not yet counting on the surge in loan growth, particularly when it comes to more traditional commercial borrowers. I think that's interesting. Again, JP Morgan, which focuses more on these middle market commercial real estate bankings, did see that down about 2% from in the quarter through last year. Consumer credit loans, meanwhile, were up about 10%. So I think there's still areas you could say if you're really trying to parse through like what we could expect as far as maybe headwinds, that remains. And Wells Fargo, which has a relatively smaller credit card book, those were down about 3% year over year through the third quarter. We're expecting that to keep growing this year, but not to the same pace in 2024. So there's things to like within each of them, but I think there's the collective themes that seem to be benefiting all of these banks.
Yeah, that's a very good point. They do kind of have a lot of their own stories right now to some extent. Like we were talking Citigroup and its recovery, which the chart looked great there, and that ripped 7.5%. So Citi and Wells Fargo and kind of these comeback story categories of banks, so they get these bigger moves. But then JP Morgan and Goldman are just behemoths that are dominating. And it seems that unless you really have a big economic event that's negative, they're in pretty great shape. So to see Goldman push back above $600, JP Morgan back to 250 and above, I mean, these are bull runs that look like they're about to extend, which is a pretty encouraging thing.
It is encouraging when you also look maybe even outside of the major names. Like, I'm not saying this isn't a major name, but BlackRock, for example, was another one that saw record levels of assets. Annual revenue crossed $20 billion for the first time. They've recently placed pretty big bets on some of these non-banking private credit and infrastructure lending offerings. And likewise, Goldman Sachs with some similar news focused more on their capital solutions, aiming to give this more wide variety of financing options. I think that is one of these really tangible indicators that banks are continuing to evolve. Now, again, does that mean that this is a broader secular shift? I think this earnings is too soon to say. But I do think that it then sets a very interesting tone for like the diversification between these mega banks and then like some of these regional specialty banks.
Yeah.
All rising today, though.
Yeah, that's all looking pretty good, looking pretty encouraging to see this group start earnings season off with a pretty big bang. So that's definitely helping us. So inflation was a highlight this morning, but a lot of stock specifics also helping out the market today.
And
sure.
also relatively cheap. I mean, you look at their price to book values,
Yeah.
other than like JP Morgan, these names are actually pretty fair valued, even looking as phenomenal as they are today.
Yeah, it is a good point because a lot of those do kind of fit in the so-called value factor or cohort. So that's having a pretty good day too, wholly over that group. Appreciate it, Jenny. Thanks very much. To look at the financials and the role earnings are playing in the rally today with banks. Very good sector, up almost 3%. Puts them as the third highest winner on the day. Tech behind the financial sector in the S&P, with communication services and consumer the best two. Joining us, Danny Kirsch, the head of options at Piper Sandler. Danny, what do you think about this big relief rally we're getting here today? Not a lot of pushback. Seems like bears are kind of empty-handed today.
Yeah, I think that there was like this consensus and that CPI would come in hot. Like one way that like you can see this is the expectation for the headline CPI moved from 0.3 to 0.4 2 days ago. So it was sitting at 0.3 and then it shifted up a little bit. So that just kind of tells you everyone was expecting a high print. The headline came in line, but the core coming in gives everyone some pause, and some of the feed through to the PCE, which the Fed cares the most about, point to a lower PCE at the end of January. So all of this speaks to, I think, this got pretty crowded, this short long end trade unwinding to some extent. You're not going to get a huge rally in rates, but anything that sort of staves off the fear of actual hikes. Clearly, the market wanted to see. The market's been dying for it. And you got this decent day in the Russell, really good day in financials, especially like the larger cap names. And that combined with really strong earnings this morning. So you kind of had the double whammy in XLF, which is helping kind of get things moving. And we're at a strong seasonal period. And next week, the new administration starts.
What do you think about the bank trade? Just to kind of go off on that tangent for just a moment, you've traded the regionals back and forth over the last couple of years with us on the show. It seems like still kind of a petri dish for measuring the market's assessment of growth versus inflation. When the curve flattens a little bit, they kind of fade. When we get steepening, they like it generally. What do you think we should be looking for the group?
I mean, regionals are sort of acting like a levered rate play at this point. If you think the long end rallies, which we think it will, we think long end rates will come down. Regional banks should act extremely well, especially as M&A picks up, which is an inevitability under the new administration. There'll be more mergers. We think that this will continue to work. Obviously, it's well off the post-Trump highs. My guess is it gets back there over the next 6 months. I think XLF, though, is also a buy. I mean, XLF implied volatility is extremely low. We were buying June call options today for the next round of earnings, for the first 6 months of Trump, for the deregulation push. It just seems like banks should be a winner over the next few months. And it's kind of the easier trade too, because again, implied volatility is well off the highs.
Okay. It sounds pretty bullish overall. Economically, market-wise, are the two in sync? If you're saying that rates are going to come down, banks are going to love that. That sounds like a pretty good situation for the economy. Is that going to be good for the market as well then?
Absolutely. I think the combination of lower rates and deregulation, it should be very strong for the market. While we do like the regional banks, we think banks will work. We don't think everywhere is a winner. In like one sector today, I think it was red as I hopped on, is consumer staples. We see more downside there. It just seems like there's a lot of headwinds. And as people sort of look for potential opportunities to the upsides, like you're going to need to find a source of funds. And consumer staples has been an area where I think people have been hiding out for years. It's been fine. It's kind of been an underperformer, sleepy. I think this is the next couple of years going to be a really challenge. You've got RFK. I think the betting markets have 85% chance of being confirmed. So assuming he's confirmed, this has clearly been important to him. There are headlines today that they want to ban the red quotes months ago.
All right, we are seeing a nice little follow through. S&P 500 cash is at the highs of the session, evening session. Futures look good. 60-minute on the futures looks good. Tick cumulative is green. That's telling you we have more upticks than downticks. More stocks being bought on the uptick than the downtick. Let's look at the charts. Let's look at the 0-day the 0-day chart set up. Okay, so across the board, 6-1 up volume on the NYSE, 4-1 on the NASDAQ Composite, 6.5 on the SPY, up volume leading, 16-1, 17-1 on the Qs. That'll be a major accumulation day. A major accumulation day. If we see this close up here, looks like we're going to have an MAD. 11-1 on the Dow Industrials and nearly 5-1 on IWM.
Especially because, to your point, some of the inflation stuff is still lingering there in terms of their profit margin pinch, aluminum prices, etc.
Yeah, it just seems like there's a lot of areas for them to lose, and they'll be a tariff loser on imports, and who knows what kind of what the response will be to U.S. tariffs if other countries start tariffing what things that we export, and there could just be, they seem to be in the crossfires of a lot of negative headwinds. And at the same time, volatility is low. We see this margin compression, and I think it's been sort of a crowded long, a quiet crowded long. It's not a crowded short. That's certainly not the case. So we've been adding puts there. We've been adding downside, and it's slowly been trickling lower the next few months. And even today, again, down 21 bips in a really strong take.
The Staples fade has seemingly already been underway. So is that going to change any of the options pricing, or is it still pretty cheap in terms of volatility?
Yeah, volatility is still very, very reasonable. We're looking at like 3-month 10 delta puts. It's near the lowest they've been over the last 5 years. Like, again, it's just very inexpensive to own options because it's not a super volatile underlying, and nor should it be. But you can see it can certainly trend lower as people sell out of these stocks and maybe look for a little more torque in other places. We think financials will continue, where clearly tech is acting really well today. Consumer should be okay, assuming employment hangs in, which employment seems like it's fine for now. And then one other area we've looked for upside that's been a laggard, a massive laggard, rates loser has been healthcare. Healthcare as of now is the lowest percentage of the S&P as a sector it's been, I think, in the last 20 years. The weighting is collapsed. I think people are again concerned on RFK and vaccines and getting drugs pushed through. We think that concern is overblown.
Accumulation 16.
Not as valid on the healthcare side, especially the biotech side. We like XBI call spreads. We've flagged that shares outstanding of XBI are near multi-year lows. The exposure, we think it's kind of washed out at this point. And if you do get some just rates to stop going up and perhaps come down, we think XBI could be a huge winner over the next few months, over the next month. And again, they should be a winner on the deregulation side too.
Okay, it looks good.
Looks to push through,
Cat is headbutting me. I think she wants my attention.
So a long view on XBI, a long view on banks, a short view on Staples, and maybe the funding mechanism by which to express some of those more optimistic trades. Specific, helpful, creative. Thanks a lot as always, Dan Kirsch.
Hey, thanks for having me. Appreciate it.
Good stuff. Nice, unique take.
Okay, it looks good. Having a good day, huh? A nice day. Very nice.
Danny Kirsch, Piper Sandler coming up. One inflation element.
Very nice day.
For potential blowback in pricing on the supply side from LA fires. So far, the market's largely just been focused on a few of the power companies. We'll talk about the impact on the market next.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
11-1 on the diamonds. It looks good.
Wealth management,
Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab. Have a choice in how you invest with Schwab.
All right, everyone. I'm your host, Cousin Benny, coming to you from theclosingprint.com. Coming into the closing bell, we've got about 40 minutes to go. 40 minutes to go. We're above the level that we wanted to see. 59.50 was a major resistance level. Above 59.50, we can be more risk on. We can be more risk on. You can see that buy order block that came in just a few minutes ago. Okay, that buy order block came in right there. Let me just zoom out. Okay. That buy order block came in, what is that, 255? Right around 255.
Real-time example trades, a full hour of trading insights. I'm Tom White. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Okay, there goes Amazon. Amazon on the move. Tesla. Let's not lose sight of the fact that we got some stocks that are ripping here. We got ABCD pattern intraday. ABCD pattern intraday. Let's go to the 1 minute chart. ABCD pattern intraday. Nice move. The last hour or so, we've got 4 buy order blocks. Tesla just ripping here. Tesla into the close, 4 buy order blocks.
What I'm understanding right now is this will be the worst insured wildfire loss in history. As of Sunday, and I'm sure it's higher than this now, 40,000 acres burned, 12,000 structures destroyed. The initial losses were somewhere around 50 billion. That's nowhere near right anymore. Now there's high. I've seen some as high as 200.
Okay, there goes Tesla.
And Oliver, the bigger problem that we're starting to understand is we have now $1 trillion hole in insurance coverage in the United States. One by one, these insurance companies have left the state or stopped writing new coverage. And until very recently, they weren't even allowed to use
Okay, Microsoft,
risk, so they made the only rational decision
Nvidia.
left the state.
Whoa, look at Meta. Meta looks good. Meta, APA, Netflix.
Issues in the electricity providers, they seem to always be the target. Some of those stocks have already really been
Looking really good. Okay, folks, looking really nice into the close. Hey, Bruce.
EIX was down, I think, 29% in just a couple of days. PCMG was down about 18% in the same amount of time. I've looked at the stocks, and you'd think you'd want to dive in there, but we don't know what we don't know. We don't know what the investigation's going to unfold. I think right now, some of the risk out there.
Good to see you, Bruce. Where'd you say you living at now? You're still in Vegas? No, you're not in Vegas anymore, right? You moved somewhere else? Nvidia looking good. Look at this. Look at this move on Tesla. Look at these buy order blocks. Pump, 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 pump.
We've also seen in the past for buyers, some of these utilities basically flirt with like a technical bankruptcy as they calculate the costs. But ultimately, those have been, I think, buying opportunities in the long run. Is that fair?
Yep. It worked out that way for PCG a while back. It was even in the name a couple of years ago.
People are so funny.
I'm going to have to wait and see, and maybe there's an entry point in here when I have some more information, but I just can't do it in the dark, and I feel like I'm flying blind right now.
Yeah, all right. Hey, in terms of
buy order blocks.
Rescue efforts and support, it seems like whenever there is like a major crisis at this point, somehow Elon's internet, Starlink gets involved, or they'll send Cybertrucks or something. I mean, I don't know. Is that like is there something in that?
You can't have a discussion really almost anything without bringing up Elon. Yeah, he said in the Cybertrucks they were Starlink equipped. Works very
Okay,
well.
looking good. All right, so we got these buy order. Still don't see a sell order block yet. Okay, this is a 1 minute chart. Let me go out to say 2 minutes. Buy order blocks. on the way up. ABCD pattern. Tesla looking good. Yeah, you still in Vegas? Cool. All right. Good to see, man. Yeah, I saw your comments a couple of weeks ago. Mr. Phil Collins.
David, something that we'll put in our pocket in the back burner and see how this turns out. Tell me what you see in a market that's really firming up and enjoying this inflation print today. Is this possibly an entry?
What was the video you were in?
Put to bed one of our biggest fears.
I'm seeing some stocks today. You know, they're hitting new highs. Look, the CPI was the smallest gain since July. But Fed fund futures haven't moved all that much. I think the problem for the bond market right now, which in turn becomes a problem for the stock market, is yes, the long end of the curve is reacting today. But I think
What was the video you were in? SPY? Well, S&P cash is now above the 59.50. So we've been looking at that above as risk on.
Annualized for the last 10 years. Hasn't been a great place to be.
Yeah. All right. So not convinced that Treasury weakness.
Okay, so above S&P 500, above 59.50 is the level that we've earmarked. We have to see that price action move above. We're above it now, so we should see risk on favoring the markets if we can close up here. Okay, here's the S&P. Okay, 59.50. Let me just check the numbers for you. 59.50 indices. Founders. Okay, so 59.50. Let's see, the vol trigger 5,900. So it actually moved down to 5,900. So it's good. Good that we're there. Above 585. 585 is the level. Okay. So Trey. SPY above 585, risk on. Risk on, not Rick. Yeah, no problem. Let's see, 585. Okay, there's your 585 right there. 5,900. So we're above 5,900, above 59.50. So that's a good thing. And we continue to show strength. I'd like to see the volume pick up a little bit. We do have buy order blocks underneath prices there. So that's a big plus. Let's take a look at SPY. SPY, same thing. Buy order blocks into the last few minutes as well. There's SPY. SPY looking good.
A modern approach to wealth management.
Okay, do note the histogram is starting to show signs that we are narrowing. That could just mean, see prices, see the Bollinger Bands, both top and bottom are paralleling price. That's just telling you look for a grind higher. So while we're looking like we're going to see a little profit taking right here, tick cumulative is rising. So that's telling us that there's more buying on the uptick than selling on the downtick. That's precursor to breadth and proofing. Okay. Okay, S&P 500. Last time we got a Marty Zweig buy signal was in May, and we continue to move higher. So I'm looking for this. I'm looking for another signal here. Another signal moving from 0.4% up to 0.6% within 10 trading days. Okay, so you have the prerequisite, you have the pullback first, and now you're looking for a price action to bolt higher. Okay, so thrusts are all bullish. S&P 500 mid caps, small caps, and Nasdaq in the lower panel. All four of these are pointing higher. We want to see the S&P equal weight index. We got 29 minutes to go. 29 minutes to go. S&P equal weight. Look at the move. Look at the move in the number of stocks above the 20-day. We've gone from about 92% of stocks below their 20-day in the middle of December. 92% of stocks, 92% were below their 20-day in mid-December. We're back to 58%. 58% of stocks are back above their 20-day. The only way that can happen is if they're buying, right? Same thing with the 50-day. 50 days turned back up. We had about 15% of stocks just a week ago. 15% of stocks were above their 50-day. We've since increased to about 33% of stocks above the 50-day. Okay, we got 500 stocks on this index, so 33% of them are moving back above the 50-day. This is the beginning of a turn. Got a little shakeout. We thought this was going to happen second week of December, but we had a little turn back down. And then we had a little surprise to start the week, pull back down again. Now we're shooting up to the upside. Let's look at the New York Stock Exchange. New York Stock Exchange, high, low, another measure of breadth, back above the zero line. Histogram, back above the zero line. The black line's turning back up. That's bullish. Advanced decline is making a new high. You can see it right there in the inset panel. We had two lower highs. Now we're making a higher high. More stocks being bought. You got a green elder stick on the New York Stock Exchange. When you're in doubt, always check out the New York Stock Exchange. When you're in doubt, always check the New York Stock Exchange. You got a double bottom right above the 200-day, 50 days overhead. RSI is rising. Strength of trend is improving. Stochastics and MACD are both turning up, and volume is improving. So we're about to get above this volume by price node right here, point of control, if you will. Look for it to push above the 50-day. Once it does, it's a little bit easier to get up through this area because fewer people were trading up here. Less volume. Okay, so that's New York Stock Exchange. Let's look at IWM. IWM, we saw that yesterday. We were probably going to see a follow-through. We got the follow-through, IWM. Okay, we got the bounce off the 200-day. Mondo identified this particular setup on Monday. We bought I didn't, but you guys in the trading room and ladies bought the bounce in IWM off the 200-day. Follow through yesterday. We closed in the upper half of the daily range. Today we gapped up. So it looks like small caps are headed back to the 50-day, at least another couple of days. Qs were below the 50-day, now back above the 50-day. 3 days below, 1 day above. Now, we're not out of the woods yet. We could still see this pull back. But for now, this is looking really good. Okay, here goes SPY. SPY's moving higher. Buy order blocks. Notice there are no sell order blocks. Let's see if I can find a sell order block today. I doubt I can. Probably only buy order blocks. Okay, there you go. This is Apache. This is one that Sunrise Trader is trading, Apache. Okay, we do have some consolidation. This trades on the floor of the New York Stock Exchange, so you know that it's probably going to see some floor traders taking profits up here. Look to buy back on a dip. Okay, I don't know if I can find, what are some stocks that are down on the day? I'm going to show you some sell order blocks, okay? Okay, let me go here. Okay, stocks that are down on the S&P. Hershey. Okay, Hershey, that's one. Okay, so let's go look at Hershey. Hershey. All right, so all you see is buy order blocks, right? Let's look at Hershey, HSY. These should be colored red. Okay, see these red overhead? They keep seeing sell order blocks, sell order blocks. Okay, that's not what we're seeing on the New York Stock Exchange, the New York FANG index stocks. New York FANGs, all of these see buy order blocks instead. New York FANG components, all we're seeing is buy orders. Okay, buy orders. Okay, these green bands all the way up today. Boom, 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 boom. 5. Into the close. Into the close. We got 25 minutes to go, and we're still seeing buy order blocks and no profit taking yet. Let's go take a look at the New York FANG index. Index of 10 stocks, New York FANG. Okay, this is something I always pay attention to. I have a grid of 10 stocks on the right that I pay attention to, and I'm always looking for strength or weakness. Okay, so here we go. Yesterday I marked this up. I marked this up yesterday. We pulled the 50-day in view. Price came right down to it. Okay, so 21-day is right there. 50 days right there, the green line, 100-day, 200-day. Okay, so we need to get MACD to turn up. Okay, that'll be good. We've got stochastics turning up from the next trigger. I put this box here yesterday. Okay, we bounced right at the 50-day. It was either we're going to hold the 50-day or we're going to drop through it. Instead, we got a CPI that came in 0.1% below estimates, and the markets loved it. Markets took us higher. But very important, these 10 stocks, we trade these from time to time. I haven't traded Snowflake in a while, but the rest of them we trade from time to time. Tesla's a good one today. Tesla's still going. Let's go see Tesla. Okay, Tesla. Okay, Tesla, beautiful chart. Tesla, nice little cup turning back above the 921-day. RSI's rising. That's telling you strength of trend is improving. MACD's turning. Many people will take a MACD cross as their only signal. Stochastics rising. This is telling you, by design, to look for closes in the upper half of the daily range. Upper half of the daily range? Yes, we are. On average, not every day is going to be like that. See if we get a follow through. I'm looking for a test of 488. First, we got to get through 426. We're through that level right now, 428. We told you if we got through 420, if we got through 420 today, that's the call wall. If we can manage to get through that level, then we could see a follow through and maybe take out 426. We did that. 465 is next, the next pivot. Okay, Tesla looks good. I'm trading TSLL, and I have the 30-35 call vertical for February. The Qs are still 17-1. Actually, the Qs have risen to 17-1 up volume. That's a major accumulation day. Anything above 9-1, 90% up volume. We got 15-1. All right, just dropped to 15-1. So it looks like they're taking a little profits off the table. Let me take a look at the Qs. QQQ. If you're just joining us, this is your host, Cousin Benny, coming to you from theclosingprint.com. It's Wednesday the 15th. We got about 21 minutes to go. 21 minutes to go for the closing bell. All right, I'm trading TSLL. I have the vertical calls, and let me just tell you what I have here. I have the February 21st, 30-35 call vertical. February 21st, 30-35 call vertical. Now, my maximum gain will be somewhere around 35. Okay, so I definitely want this to continue higher through 30 or into 30. As we start to ease up towards 35 over the next couple of days, hopefully, I can take these off and maybe roll out some. Maybe just take, with the profits, maybe just take straight calls on the next dip. I like to buy dips. I don't like to buy the high. Dips look like this, ABCD patterns. Well, this one's kind of gone now. But let's look at the 5-minute. Okay, here's A over here. Here's B. Actually, that was yesterday. Here's A this morning. Okay, A. We have a higher low from the gap, a higher high, and a higher low, C. And now we're going for D. That's Tesla. Let's look at Apple. Apple's trying to do the same thing. Here's A, B, C, higher lows, looking for D. All right, Tesla looking, we just looked at Tesla. Tesla looking good. Okay, NVIDIA into the close, moving higher. I wouldn't be buying anything right now. I am not buying anything right now into the close. If anything, I'll be taking profits off into strength. But I think we'll swing some of these positions because Netflix, here's Netflix. Higher highs just continue. Netflix headed back up to the highs. Okay, so with me personally, I like to see a move back above the 50-day. That's just my preference. Here's Apache. Apache's above the 50-day. And if you look at the 20-50-day cross, 20-50-day cross, this is just getting started. Now, would I buy it right here? Well, you could, but I prefer to buy it on a dip. Okay, so see the dip right here a week ago? We had these wiki candles up high, pulled back just briefly. I mean, that would be close to what I'd be looking for, or maybe a few more days down. Doesn't look like this is going to happen because most of these energy stocks keep going. Oxy, we started on Monday, I believe. Occidental Petroleum. We're going to get a 50-day cross, 20-50-day cross, bullish cross. After a 6-month downtrend, this is turning. So this is just getting started. Statistically, the 20-50 cross is much stronger than a 90-21-day cross. A 9-day, 21-day cross. Did I say 90-day? A 9-day, 21-day cross. Because it's shorter term, you got more volatility. You can see what happens on a 9-day. All this choppiness here. But when you get a 20-50-day cross, the statistical odds are much better as a swing. Okay, so Oxy. Let's look at ConocoPhillips. We took on December 27th. This is still working. We'll probably get a 20-50-day cross in about 2 to 3 weeks at this rate. Devon Energy. All these energy stocks look good. Devon Energy. Booking higher, Devon. Constellation Energy. I sold a I sold a bull put spread yesterday on Constellation Energy. Okay, so I sold this one here. Actually, I sold it a little bit higher. Oh, no, it was lower. 250, 240. All right, so 250, 240. Yesterday, I sold the 250 puts. I bought the 240 puts for a credit. Let me just mark this up. Okay, I have the March puts. Okay, I have March DTE, the 250, 240 put credit, and that is $218 per contract. And now that was yesterday. Okay. So as this continues higher, we were looking for a dip. The dip didn't come. You see that? The dip didn't come. Instead, we just continue this trend higher. So this is a bullish assumption. Bollinger Bands opening up, RSI rising. So I have 5 of these. Okay. So what's that? $2,100 in credits. So long as this continues to move higher, as each day goes by, I'll collect more and more of that 2,100.
Starting to track significantly higher, and at least for these data points, it quelled some of that concern, and you're seeing the result now. And also, we got some expiration cycling also participating in the market right now, and so we'll see how long it holds. I think Kevin brought up some great points, volume being one of them, as well as just the general momentum in the market. We are not, breaking out to new highs here, but you are seeing a broad spectrum type of rally, and all the major averages showing some significant strength here. So that is something that keep an eye on that, and also the sectors. You got consumer staples lagging, healthcare lagging some, but overall, the majority of the sectors are.
Genius is good, Scott. Being a genius is good.
This morning we talked with Peter Schiff, who's making the call for $100.
All right, so Constellation Energy doing exactly what we're looking for. The catalyst, of course, for higher prices is the exceptional demand for AI data centers. They are buying or trying to buy, I don't know what the update is, trying to buy Calpine. Okay, S&P. Apple looks good. Apple. Okay, New York FANG. Okay, higher highs, higher lows, New York FANG. Apple. Apple ABCD pattern. Okay, so Apple needs to get through this supply, this red band here. This was a short from up high. Tesla's just going bonkers here. Tesla. You know, lately, if you catch Tesla at the right time on a dip, you know, it's like 2 out of every 3 days, it seems like this thing runs. Right? Have you been trading this? Anybody been trading Tesla? Of course, in the trading room, I know you have, but looking really good. Tesla.
Gold was a little bit slow out of the gate, but ended up seeing a decent rally today, up to 27.20 right now. What do you think about that?
Yeah, I mean, there's a big movement across the various.
Yeah, Trey, I'll shoot you an email.
So did silver, and now it's silver really ripping higher today as well. So, you know, I think that's part of the idea that maybe rates have temporarily peaked. Maybe the short-term rates are going to kind of hold it out. The 2-year.
Okay, Tesla's still going. ABCD pattern Tesla. This is a beautiful pattern.
Is something that the markets had to contend with and been able to manage for the better part of the last couple of months. Long end of the curve, you know, coming down off of those highs, those multi-month highs in certain cases. So that's still the outlier. But when you look at the short end of the curve and the markets reacting to the idea that inflation may not be as hot as expected or was anticipated, I think that's why you're seeing the reaction in gold as it worked through the session today. Gold, silver, and even the dollar has come off the lows. But again, I think that's a factor of other things in the economic structure. But it's not surprising, I think, with yields coming down, and now you're seeing money flow back into the metals that had been knocked down a little bit because the uncertainty about interest rates.
I like that point. It seems like gold finding its way into the mix again after a little bit of a silent period to some extent.
Tesla, beautiful.
Great stuff. Thanks, Dan. Appreciate
Lately,
it.
this thing just runs like crazy.
Good thoughts on the energies too. Natty gas with another big rally alongside crude. I got Jenny here with me for some more thoughts on what's working today. It's not a rally without the quantum stocks.
Of course it isn't.
Jenny, so what? AI and quantum going to get along a little bit better than maybe Jensen Huang suggested in his last commentary?
Well, so now we have heard from a lot of these CEOs, like the D-Wave CEO, who's like, that was completely false. Mind you, the quantum computing is so complex that all things can still exist. You can still see various degrees of quantum computing already happening in today's world, while also Jensen Huang could also be correct about his projections. I think that still remains very much clear. But after seeing some of these names pummel like 50, 60% in just a span of a few days, now attempting to rocket higher. And despite, again, several CEOs, it wasn't even just NVIDIA's CEO with this commentary. Microsoft wrote on its blog that 2025 was the year to become quantum ready, which also then was coupled with several analysts' upgrades to the sector, and quantum computing stocks really off to the races.
Okay.
We got some news that NVIDIA announced plans
Okay, we're starting to
quantum day at the GPU Technology Conference 2025.
see a little profit taking there in Tesla. Maybe take a little profits here. Tesla. Let's see. That's a good move today. Yeah. Should I lock some of this in? Yeah, I'm going to lock some of this in. Okay, Tesla's probably going to keep going. I'll take some of these off.
It's just, I think, again, both narratives can exist, and you can still be so preliminary.
All right, just sold half of my TSLL. I'll reload. I'll reload shortly. Tomorrow, probably.
It's speculative, it's early, but it certainly has a lot of promise and very exciting.
So volatility, so if you're for trading.
Yeah, which is, I think, what people really like about them.
Oh, boy. What a day, huh? Exhausted. Exhausted with all these profits.
LAES is also a pretty fun one. Seals Q. All right, so they're all up double digits after getting slammed. So markets find a lot of stuff to love today. Thanks, Jane. All right. NVIDIA doing quantum day. Can't hurt either. NVIDIA, it seems like anything it touches generally goes bullish. So quantum with some life plugged into it again. Coming up for our big picture discussion, great duo as we head into the bell. Stocks looking like they're going to end strong.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors.
What a beautiful day. All right, we got 10 minutes to go. 10 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. 9 minutes to go. It is 9 minutes before the closing bell.
Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Okay, let's see. What else can I tell you? I really don't need to convey much more. I mean, the markets are just very bullish at the moment. Bears scrambling. So I would, looks like we're going to pull back below. Looks like we're going to test the top of 59.50. I was hoping we'd stay decisively above it, but they got some profit taking up here. Not surprised. All right, so S&P.
Bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platform. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
All right, big picture discussion here. About 8 minutes left. Jeff Klein, top loss.
Okay, I see Tesla's offering inventory discounts on Cybertrucks. That's cool. Apache fading some more. So you're not going to go straight up. Every stock is not going to close at the high of the day. All right, so you get what they give you, basically. I don't know. The markets look like the momentum alone suggests that we're going to see a follow through. I mean, it'd be kind of silly to sell everything. Okay, looking pretty good though. Market's looking good. Looking good. Sing it, Janice. Okay.
Inflation is remaining fairly well contained. I think that means we could get more rate cuts overseas this year. Of course, that's not what's showing up in the dollar today. But what we saw was a real shift on this idea around inflation maybe accelerating back towards 3%. Most places, looks like it's towards more comfortable range.
And does that mean that maybe our central banks can be more aligned after the big move in the dollar? Does inflation suggest that maybe we don't have to get too far away from the rest of the world? It's been generally pretty easy.
Yeah, generally we've seen a pretty similar shift in terms of pricing and additional cuts for the European Central Bank, the Bank of England, and the U.S. today. So yeah, I'd say that follows that logic pretty closely. That everybody moving back towards the idea that there's more cuts on tap. But you know, it's interesting to note how we're seeing cyclicals actually outperform here lately, including today, which interesting move given that, you know, the market's pricing in more rate cuts, yet we're seeing cyclicals outperform defensives here. That could be a second win for a rally that's seen global stocks rise 20% in each of the last 2 years, primarily on the back of a handful of AI-driven stocks. Maybe we're seeing a little bit of a broadening out of the market.
Yeah, we are. Got the big tech doing really well, but a lot of other stuff doing very well too. VIX diving today. Nate, talk vol to me. 16. Pretty big crush in VIX.
Microsoft. Okay, everything is showing a little bit of profit taking. Let's see if we bounce here, if we're going to close below it. S&P would have been much nicer if we had a close above 59.50, but yeah, we'll take what we can get, right? All right, let's see what the, okay, up down volume is still 16 to 1 on the Qs. Still 16 to 1. He's so cute, kitty cat.
ISM last week, the non-farm payrolls,
Okay, they're definitely going to sell this a little bit, take some profits off. Netflix, Tesla's at the highs. Tesla at the highs. Okay, let's see. Occidental Petroleum. So looking for these oil and gas names to continue. Okay. Okay, pretty decent day on Oxy. Okay, so we took a pause yesterday, looking for a follow through. You're going to have a 20-50 day cross here shortly. 20-50 day cross on Occidental Petroleum. I've been talking about that. Oxy. Looking for that 20-50 cross. There you are. Probably have it by Friday. Apache today gave us a 20-50 cross. So I'm looking for any dip to get bought. Okay. I would love to see us close at the high of the day. Doesn't seem to do that though. Look at all the wicks on the top of the candles. Okay. So studying the bullish candles here, every single one of them has a wick on top of it. Even the smaller ones with these little spinning tops here. There's always a wick on the top of the candle. So the market maker over at the New York Stock Exchange most likely is running this up, taking their profits off because they can trade, from what I understand, they can trade the underlying that they're representing, and they'll sell their position, and then as it pulls back, they'll perhaps get back in and make the market. All right, so a little pullback. It looks a lot worse than it is on a 1 minute chart. Okay, Tesla's still at the highs. Tesla's still up there.
Season overlaps with shareholder friendly season. I know you're tracking buybacks as well, Jeff. Earnings seem like they're off to a pretty good start here.
Yeah, buybacks is something I always watch at this time of year. This earnings season is one where they really kick in. This is usually when buyback quotas for the year and they announce them, and markets get excited about them. Citigroup announced, of course, a $20 billion buyback today. But I think that could be an outlier this season. Nate said something interesting about, we haven't seen rates this high in a long time. It's been sporadic. And so what could that mean for the markets? After we get these numbers in, it's worth reflecting on how much more momentum is there for buybacks in 2020 and 2021 when bond yields, AAA, or I should say triple B bond yields.
Okay, looks good.
It was really cheap to fund a buyback.
Tesla holding the highs. Still seeing a little profit taking though. ABCD pattern. We're above the 420 call wall, so most likely that call wall has shifted up. Money Magical update that in his graphics and data tomorrow. Yeah, I wish everything would close at the high of the day every day. Okay, we got less than a minute to go. Seconds to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com at the closing bell. Thanks for joining us today. Love being here, giving you the play-by-play. We took quite a few different positions today. Hopefully you took some of them, made some money. Rigetti, let's see what Rigetti's doing. Rigetti just off the high of the day. So if Rigetti pulls back a little bit tomorrow, or if it follows through, I'll take another trade on Rigetti. Okay, folks, I got a hard stop. Have a great evening. Take care. I'm your host, Cousin Vinny, coming to you from theclosingprint.com, Wednesday the 15th at the closing bell, straight up 4 o'clock. It was a great day. Come back and see us tomorrow. We'll be here bright and early. Have a good one. Take care. Enjoy your evening. Ciao.